most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
There's this very highly concentrated group of systemically important publicly traded names. We're at the part of the programming where there's a quality curve being established even amongst those systemically important names. It's a reallocation of capital into other parts of the equity market. It's not a withdrawal of capital. There's a little bit of fatigue, a little bit of digestion.
That was Michael Ventura of RBC on financial markets, the equity market, the indigestion we've seen, some of the jitters, the fragile moves we've seen in both bonds and energy and then equities for a brief moment in the last 24 hours. Equity futures okay this morning, bouncing back just by 0.1%. Check out next week, though. Next week's a monster of a week. It's a big 24, 48 hours, and it starts on Wednesday. So take a long weekend. Fed rate decision on Wednesday. You're going to take a long weekend?
Maybe now.
If you want. Then later on in the day, you'll hear from Microsoft and Meta. Then on to Thursday, you'll hear from Apple and Amazon. That is trillions upon trillions of market cap. And Lisa, you asked a really interesting question earlier on. What's more important to the bond market, the Fed or the earnings from the big tech players that are issuing a lot of debt?
On one hand, you've got the Fed that has to give some sort of prognostication about inflation and where their policy fits in. And then you have the expectation for more than $1 trillion of capex from those companies, brought up from a $750 billion expected earlier this year. That is supply that is going to dilute a market that already is showing a bit of queasiness.
1 week to go for those big tech earnings and a big Fed meeting. July is live, apparently, maybe on the margin. Here's the take from Cara Murphy of Kestra Investment Management. She writes the following: AI retains the upper hand, but not as strongly as it did just a few weeks ago. What's less watched are mid and small cap names. Cara joins us now for more. Cara, good morning. Good to see you.
Good morning.
No big bounce in tech this morning. What was your reaction to the sell-off in the last 24 hours?
I think these are hints that the market is giving us that they're not going to give a free pass to these names forever. You know, we can all agree that AI is going to be a revolution. It's going to change so many things in the world, but that doesn't mean that these companies can continue to spend with impunity, you know, damaging free cash flow without the true earnings piece. Now, that doesn't mean that it's all over for them, but it does mean that the market is going to be discerning, and we have to be mindful of that.
Do you think it raises the bar just a little bit more for a few of those names that I mentioned next week?
For sure. I mean, I think the CEOs at these companies should be more cautious. They need to listen to what the market is telling them. The market is saying you can't just keep spending money like this.
Well, is it part of the issue, not just the money spent, but also the lack of visibility as to when there isn't going to be an acceleration in terms of the increases that we're seeing every quarter?
For sure. Like last year, it was a little bit different, right? We were a bit earlier in the cycle. The numbers weren't quite as big. This year, we move forward. We know a little bit more about how people are using AI. We also know it's going to be a little bit before we start seeing returns on it. So the market is saying maybe we need to slow this pace a little bit.
Right now, what do you find as an attractive sort of hedge to what we're seeing, which is just the everything risk being thrown at markets depending on the day?
Well, I think the answer to that is actually a lot simpler than many people think. You know, you mentioned the quote about small and mid cap earnings. The market has been so concentrated in a handful of mega cap names. That means that a wide swath of the market has been largely overlooked by investors. Mid and small cap, I think, are just obvious areas. Now, we haven't seen up until recently the resurgence in earnings. So that's really going to be key in the second half of the year. Can these smaller companies actually deliver the goods and grow earnings? We think that they can, and I think that gives the market an ability to pivot to somewhere else.
RBC's Michael Ventura was on earlier, and he said the market just has new cares. They've always been there. They're just caring differently about different things. Do you feel that now, what's going on with the conflict in Iran and potentially higher bond yields?
Yes, I think there is something to that. I was thinking about this morning. If we had the earnings that we had this week, but 3 quarters ago, I think the market reaction would have been very different. Now, Iran, it's a little hard to get around triple-digit oil, right? So that is very real. That is going to really start to hit consumers' pocketbooks, company P&Ls, and so those are very real concerns. I don't know. It's going to be hard for the market to look through that unless we actually have a peace deal and oil prices recede. But I think on the AI side, for sure.
We're learning something about price and positioning every time we get these earnings.
Absolutely.
Intel's a good example of that, speaking to exactly what you just described. Intel out with blowout numbers, and if this was 3-6 months ago, we wouldn't see a move of 4% of the pre-market. You'd see something like a multiple of that, Bramo.
Yeah, but 6 months ago, it was also lower by
100%
about half.
lower.
So, I mean, this is, we're talking about a very
50%
different
lower.
valuation. Yeah. I just wonder how much you can get that broadening out if you do have yields continuing to get higher. I mean, do you still see opportunities? I mean, that's ultimately one question that people keep asking.
We've had a 170% rally.
Exactly.
In the name year to date, which is
that's
just
monster. Yes.
Keep tracking that name, though. It's now only up by 2%.
What's your call? By the end of the day?
I don't make calls on markets, Bramo, you know that. But I take some signal that if you have a blowout earnings report and you're only up 2%, tells you something about price and positioning.
Yeah, it's the idea that the bar is so high that we can't even see it. And ultimately, even if you blow things out, people still are going to say, I don't know how much upside there's. $1
trillion question, Cara. What does that mean for where you want to be long? Where can you get more bang for your buck right now?
And this is where we're actually bullish on the market overall. You know, I'm cautious on kind of like the future of the mega cap tech names in the near term, but I think there's so much opportunity elsewhere in the market. Overall, the U.S. economy is in really good shape. You know, we're talking a lot about the Fed and, you know, maybe they hike a little bit, but we don't have a massive inflation scare yet. Labor market's fairly strong. You know, consumers are still spending. So I think we still have a really good economic backdrop, and going long U.S. equities just outside of the mega cap tech, I think, is a great place to be.
We are still 2 to 3% away from all-time highs on the S&P 500. Cara, thanks for wrapping up the week with us. We appreciate it.
Thank you.
We're looking ahead to a big week next week. That was Cara Murphy of Kestra Investment Management. What a week we've got coming up next week.
To me, the idea that we get both the Fed discussion and tech earnings is going to be a massive kind of determinator for this market. This week, we saw clearly the reaction in markets. We're setting the signal. Any bar that we set is not high enough for you to clear because we have already priced in so much. Next week, if you have that move continue, full bear.
Before next week, though, also, how do we get through this weekend with the president saying that he's all set? He just has to decide if he wants to make this massive move, like he's considering a massive attack.
Some nervousness going into the weekend. We've had the energy shock. We've had the bond market jitters. We have not seen a growth scare yet. Coming up on Monday, we'll catch up with Seema Shah of Principal Asset Management, Frank Lee of HSBC, Elisa Shallard of Morgan Stanley, and a whole lot more. From New York City this morning, good morning. Have a wonderful weekend. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Happy Friday. It's 30 minutes until the start of your cash equity trade. I'm Danny Berger.
And I'm Isabel Lee. Bloomberg Open Interest starts right now.
Coming up, an $800 billion wipeout in big tech stocks, but Intel delivers an AI bright spot.
And President Trump rebuilt his tariff wall while threatening a massive attack on Iran.
All of that keeping investors on edge ahead of a Fed meeting next week.
Happy Friday indeed, Danny. And the whole week we looked at 3 stocks, but today we're just looking at, as you said, the bright spot, Intel. Intel delivered a revenue forecast that shattered Wall Street estimates as data center spending fueled a long-awaited turnaround. You see the stock here higher by 2.5%.
Meanwhile, some other stocks I'm looking at this morning, specifically American Express, also had earnings, Isabel. They beat expectations. Affluent customers, they keep spending, promoting the company to raise its full-year revenue growth forecast. But I do want to mention shares are down 4 and about 1/3%. It's something consistent we've seen throughout earnings. Even with 85% of stocks thus far beating earnings expectations, the majority of them have fallen after they've reported.
And as we just mentioned, Intel really is gaining momentum. The company CEO Lip Bhutan telling Bloomberg, quote, demand is outpacing our increasing supply, and so those are good problems to have. Joining us now is Bloomberg tech reporter Ryan Vlastelica. Ryan, Intel did beat on the upside. Is this going to be the turnaround for the company right now, especially under the leadership of their new executive officer?
Well, this is certainly the latest indication that the turnaround really is progressing well. The stock has done extremely well over the past year, and there are a lot of signs that they're seeing incredible demand related to AI, that its foundry business is getting momentum. So I think a lot of the things that people were wanting to see in order to really have confidence that this turnaround, which was years in the making and involved a lot of money destruction prior to the turnaround, that it's really playing out. I think people are really seeing everything they wanted to be seeing.
They also increased capital expenditures, nothing like we've seen from the likes of the hyperscalers, but still they need to spend more. What can be done, Ryan? The bottleneck from them, they've said it is not demand, it is their ability to continue to build. What can they do to try to get through some of these bottlenecks?
Well, that's sort of the tricky thing is building these fabs really takes a lot of money and a lot of time. So even though they are allocating a lot to this, it's likely to be a while before we start to get more supply come onto market. Now, in the meantime, that's going to be good for them in terms of their pricing power and so forth. But this has really become a major issue in the markets overall because we've seen prices for some of these AI components really rising right now. It's just because there's not enough supply on the market.
And you had a great piece, Ryan, that Thursday saw the Magnificent Seven suffer their worst one-day decline since Liberation Day, wiping out nearly $800 billion. And Wall Street for years have been applauding when it comes to big AI spend. But then now it seems like the sentiment is turning around. Where do we go from here?
Yeah, so this is really the flip side of the Intel story, which is that these companies are spending so much, and a large part of that is because prices have risen so much for things like memory chips and so forth. There has been a real shift in sentiment. I think there is some growing appreciation that these companies are seeing a return on this AI spending. Alphabet's cloud growth, for example, was more than 80%. That's extremely strong, much stronger than expected. But at the same time, they're spending so much that their cash flow turned negative. That was the first time in their history as a public company that happened. That forces people to reconsider how they are viewing these companies. They were real cash cows just for years and years, and that was one of the most attractive things about them. If that part of the story has really changed, even if you have faith in the long-term ROI of all of this AI spending. I think a lot of people say they need to have a lower multiple if they're not cash flow positive. They need to have a lower multiple as we kind of consider what is the timeline for this AI spending paying off, what is the magnitude of the payoff. So until we get a little bit more clarity on that, a lot of people I talk to, even though they still like the strategy, say that there could be some more pain and volatility ahead.
And also, in the meantime, worst day for Mag 7 yesterday since Liberation Day. Ryan, thank you so much for joining us. Bloomberg's Ryan Vlastelica. Elsewhere in earnings, American Express raising its full-year revenue forecast, but shares are falling after second quarter revenue and net card fees came just shy of expectations, and at the same time, huge surging expenses over marketing. Bloomberg Intelligence analyst Ben Elliott joins us with details. Ben, how much of the sell-off we're seeing in stock in the shares right now, 4.4%, is a true disappointment or just reflects an American Express where the expectations were very high?
Yeah, so I think this is mostly a story about expectations here. The bar was pretty high going into the quarter. Amex trades, 70% premium to many of its peers. I think that people were looking for an acceleration and they got a deceleration, especially in those card fees, and that's kind of the secret sauce of the revenue model. So to see that start to slow down, investors start to ask kind of some questions about the sustainability of the revenue going forward.
Ben, with expenses rising faster than revenue, how should investors think about trade-offs between near-term cost and long-term growth investments?
Well, so I think expenses came in a little bit below revenue, so there's still a little bit of mild positive operating leverage there. But sort of the story behind Amex, right, is they have to spend to create the value proposition that attracts Gen Z and millennial customers to these cards. So investors expect and want to see them spending more. I think there's some sort of some oddities in the numbers there as they kind of lap the refresh in the Platinum card, which was launched September 18th. So you could see some of that kind of smooth out. But by and large, it's the fee and the interest income that really sort of generates the revenue above what they spend to sort of attract customers to those cards. And so I think that's why people are a little bit more concerned about the slowing in the fee revenue rather than like a temporary increase in the expenses.
Ben, appreciate your time this morning. That's Bloomberg Intelligence analyst Ben Elliott. Isabel?
Now to Washington, President Trump is rebuilding his tariff wall, imposing duties of 10% to 12.5% on imports from dozens of trading partners. Let's get the latest from Bloomberg Washington correspondent Tyler Kendall. So, Tyler, supporters argue that this is about rebuilding American manufacturing, but can you talk to us about evidence, whether they actually have that?
Right, Isabel, that's a really good point at this point in time, as we know that it takes companies time to onshore their production, and in certain instances when it comes to some of those sector-specific tariffs like what we saw rolled out earlier this week in terms of generic pharmaceuticals, these companies are weighing the pros and cons and how much cost it's going to take in order to onshore their manufacturing. This latest wave of tariffs that we're seeing stem from what's known as a Section 301 investigation into whether trading partners have failed to take effective action to block goods when it comes to forced labor. And that's why you actually see sort of the tier here. That 10% rate is going to go towards those countries that have banned forced labor but are not effectively enforcing it, while that higher rate will be for those that have absolutely no laws on the books. At the same time, though, we are expecting exemptions to come down. We've already gotten a few of them from the USTR, including oil and gas, fertilizer, food products, those items that are very highly exposed to supply disruptions. And in fact, a senior administration official tells me that we should expect more exemptions to come down the pipeline, that the administration has already gotten, at this point, hundreds of requests amid this new flurry of action that they are taking. And Danny and Isabel, at this point, we should be expecting more. I mentioned those generic pharmaceuticals earlier this week. We also got those tariffs against Canada earlier this week, too. But keep in mind, there's another Section 301 investigation pending out there that has to do with excess capacity. And that, too, could lobby on additional stackable tariffs for many of these trading partners.
Just with these tariffs around forced labor, Tyler, you described it. It's not necessarily that they're using forced labor. It's whether they have rules on their books in order to prevent goods that use forced labor from coming in. But even in the case of Canada, for example, they do have a rule on their book, but this White House decided that they didn't have data showing anything, which to them suggested that they aren't enforcing their own rule. Canada, India, various countries have pushed back. Tyler, are we likely to see pushback also result in more lawsuits around these tariffs?
That is also a really good point. Though Section 301 is considered to be that more legally durable action that the administration does have when it comes to their tool and their toolkit. We had Section 301 tariffs from the first Trump administration that are still on the books. So they're a little bit more difficult to challenge, but we do expect there to be challenges or at least negotiations going further from here. You mentioned India. We saw the USTR outline that India at first was supposed to get that higher 12.5% tariff rate, and then that was dropped down to the 10% rate. But in the case of Canada, for example, we know that Canada wants to come back to the table with active negotiations, and perhaps this could be used as one of those pressure points, as we saw the USTR in Mexico this week negotiating with the other trading partner in the USMCA. So there are just so many different parts of the puzzle that we have to keep in mind here, as the Trump administration has made it absolutely clear they want to double down on this economic policy, rebuild that tariff trading wall, even as we head into the midterm elections amid voter concerns about the inflationary impacts.
Tyler, appreciate it. As always, thank you. Bloomberg's Tyler Kendall in Washington, D.C. Only 2 bells to go until you can start your weekend. 20 minutes away from your trading day. The S&P is pushing slightly higher after yesterday's sell-off that took tech down with it. I mentioned this, worst day for Mag 7 since Liberation Day. NASDAQ still underperforming. Yields come in after your 10-year yield breached 4.7% across the curve, trading at something like 18-month highs. Part of that was due to crude. Crude trades lower this morning, down nearly 3%. Some of the individual movers that we are looking at this morning. Earnings-wise, Verizon raising its guidance as wireless carriers win over customers with perks, also announcing a partnership with Google in data centers.
And Oracle climbing after winning a 10-year U.S. defense contract worth nearly $7 billion. The stock there popping nearly 2% in pre-market.
And Deckers, the shoemaker, reporting full-year guidance coming in below estimates, down 1.8%. Do they make Vans? I'm pretty sure Deckers makes Vans. That might be wrong.
I think they, you know, when I first...
No, they don't make Vans, I'm being told.
I thought that they made outdoor stuff.
Well, they are called, so you're not completely right. Oh, yeah, Hoka.
No, it's Hoka.
Producer Will says it's Hoka, so running things. Usually that had been doing well, but clearly that's turned around. Coming up on the show, SpaceX is no longer taking future reservations for its Falcon 9 program as the company looks ahead to Starship. We're going to have the details for you next. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Now to high interest, a look at what's making headlines around the world. 6 contenders are vying to be the next United Nations Secretary General. They argued their case at a town hall event moderated by Bloomberg TV in the UN's General Assembly chamber.
Our responsibility is to make the UN relevant again, to deliver, to touch the hearts and souls of people on the ground.
Well, I believe moral authority is always needed. And you always need to speak out on the issues where violations of human rights have been.
What we need to do is to restore this credibility of the UN as a valid interlocutor, and then use the tools at hand.
I would like to see a UN that is back at the table in the scenarios of conflict. I would like to see a UN that has rebuilt trust.
The UN must be more present, especially in the peace and security arena, that we would have moved from where we are today to a UN that is delivering better in peace and security.
Because in reality, global security, peace and stability is something that is incumbent on the Security Council.
The candidates are competing to succeed current UN Secretary General Antonio Guterres, whose term ends this year. And Samsung and SK Hynix are set to unveil major agreements with U.S. tech companies during the South Korean president's visit to Silicon Valley, kicking off today. A senior presidential official saying these announcements involve, quote, very large sums and will likely include new long-term memory chip supply deals. And SpaceX has started turning away satellite operators looking for dedicated rides to orbit aboard its staple Falcon 9 rocket beyond 2028. Sources telling Bloomberg the company has stopped building some non-reusable components for the Falcon family. The move underscores CEO Elon Musk's massive bet on its Starship. Danny?
Bloomberg's Sana Pashankar helped break that news, and she joins us now. Sana, first of all, fantastic reporting. Thank you for bringing us this story. And it seems like this bet is essentially one to say, we are betting on Starship away from Falcon. Why is SpaceX making this bet?
Yeah, totally. So Starship is key to basically all of Elon Musk's ambitions for SpaceX. That's sending data centers into space, that's expanding the Starlink communications network, and it's also sending humans to the moon and Mars. So essentially what this signals is kind of a movement of the priority from Falcon 9 and, the launch business that helped it make its name to focusing completely on Starship, building that rocket out and making it operational.
So this obviously underscores the huge bet and the huge belief that Elon Musk has when it comes to SpaceX being able to really propel this to success. Do you think this is risky?
Yeah, so with Musk, you really never know. While today he is saying, we're not going to take any more Falcon 9 reservations past 2028, he could wake up tomorrow and say, Starship isn't ready. We're going to keep extending how many Falcon rides we're doing. But right now, this is the course they're taking. They still have a little bit of wiggle room. It sounds like they are fully booked out until 2028. So things could always change. But I think it is definitely signaling their priorities for Starship, and that is like the route that they want to take for the future.
Sana, could you go through in more detail the struggles that Starship has had? I know you and the team have been covering these test launches that they've continued to scrap. I believe yesterday they scrapped one for the second week in a row.
Yes, totally. So Starship has had, a really rocky development testing cycle. It is advertised as the most powerful rocket ever built. It is very massive. It is supposed to be fully reusable. So that means the booster, the part that, boosts the rocket to space, and the top part are supposed to come back to the Earth intact so that the rocket can fly again, which has never done before. Like, they don't even do that with their current Falcon 9 rocket. But, they have had, as I mentioned, a rocky development cycle. They've had some explosions. They've had some setbacks. Just this week, they had postponed the launch because some of the engines didn't ignite. And then yesterday, they again postponed the launch to today because of bad weather, which that is pretty common in rocketry. But, today, all eyes are on Starship. It is the first test flight since their IPO. So investors will be watching, I'm sure.
But Sana, talk to us if Starship is not ready to launch missions by the end of 2028. What will happen if the company doesn't revert to the Falcon family?
Yeah, so if Starship isn't ready and the company is deciding to turn off access to orbit with their Falcon family, that could be really catastrophic for so many US-based companies that rely on SpaceX to get to orbit. SpaceX basically commands a near monopoly on launch. It's enabled the growth of all these large-scale satellite networks because it launches more frequently than any other rocket in the world. So, these Amazon's networks, telecoms networks, satellite imagery networks, many of them rely on SpaceX to get to orbit.
Sana, fantastic reporting. I believe that was one of the most read stories on the Bloomberg terminal at READ Go. I think it's top 10, which is very impressive. Bloomberg Sana Prashankar, thank you for that. Coming up, Empower's Martha Norton shares where she sees value in the AI trade. This is Bloomberg Open Interest.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Mag 7 stocks have wiped out nearly $1 trillion in value just this week alone, and that could signal a buying opportunity. Empower Chief Investment Strategist Martha Norton argues that within the AI trade, software and hyperscalers look like the value trade. Let's bring in Martin, who joins us now. Great to have you in New York, Marta. Thanks for stopping by.
Yes, of course.
The idea that Mag 7 would be a value trade, if we said that a couple years ago, we'd probably been like, there's no way.
Yeah.
So is this a dip buying opportunity, what we've seen?
I mean, I think it is a dip buying opportunity, but I don't think it's instant gratification. I think this is a long-term play. I mean, it's remarkable that when you see Alphabet report and you see the kind of cloud revenue that we saw, that there still is a massive sell-off. So the monetization is there, but it's not nearly enough to account for this wild spending, and the markets are all about the wild spending now. And that doesn't look like it's stopping anytime soon. So in my mind, if you're looking for a piece of the AI trade, this is a great place to go, but you have to be patient.
So I think that's a phrase we've heard throughout the show with Danny and me. Everyone's telling us patience is key, but then the timeline is still different. And you see a market where they reward investors, but they also punish when it comes to all of this AI trade, like the dichotomy between Tesla, IBM, or even other companies. So then what is your timeline? Until when would you be when would we be waiting?
Yeah, so I think what we have to see is we have to see more monetization relative to the CapEx. And I don't think that's happening 2026. That may not even happen 2027. This could be kind of a 2028, 2029 time period. And for those who are much more concerned about the here and now and capitalizing on gains now, I think that's why they're looking to those who are benefiting from all the spending, the chip players, and really a lot of companies throughout the market cap, even in small cap, industrial areas.
It's interesting because a lot of the capital expenditures are no longer just being funded by free cash flow. We saw that with Alphabet turning negative for the first time since 2016. The market has started to push back against some of the funding. I think Google's 100-year sterling denominated debt is, I mean, that would have its own problems to begin with, to be fair, but it's something like 90% to par. Most of the hyperscaler debt is trading below par. Do you think that these companies might run into any issues just raising the amount of money that they are committed to spending?
I think it all depends on what kind of money are we asking for here. And I think that is one of the biggest concerns in the market. I mean, certainly there is a range, when you think about the range of outcomes, there's an outcome out there where this is wasted money and good money after bad. And I think we have to account for that. And that's why I think you want that discount, that margin of safety if you're going to move into these names. You know, last fall, that was not the time to be buying these names. There was so much enthusiasm around them. So it's really that combination of the possible optimistic outcomes and where the prices are today that makes them a buying opportunity.
Okay, Marta, you're going to stick around with us through the opening bell. That's Marta Norton. And a check on your markets ahead of that opening bell. 5 minutes to go until we get there. And it is an unchanged market, but maybe that's better compared to what we saw yesterday with a broad sell-off. Worst day for Mag 7 since Liberation Day. The dip buying opportunity. Calm also in this bond market. At one point, the front end of the curve was up 6 basis points yesterday, all of them trading near 18-month highs. We're at 468.52 for your 10-year yield, while Brent crude also takes a breather, down 2.5% after reaching over $100 a barrel. On the other side of this break, we'll have your opening bell.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor, and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Let's get you started in this trading day. One bell now to go until you have your weekend. I'm Danny Berger. It's a market that is tepid after yesterday's sell-off fueled by inflation woes over higher oil and yields and some of the earnings we got from Alphabet with CapEx spooking investors. Today, it's the S&P little change and the NASDAQ starts to fall yet again. Ringing the bell at the New York Stock Exchange, we have Oliver Scholars that helps give education to underserved communities here in New York City, a great and worthy cause. Meanwhile, down at the NASDAQ, we have a new listing. It's Scribe Therapeutics. It's a biotech company backed by Eli Lilly. So you got some of the... I saw up here, they have the scientists from the labs beaming in. And I'm just is that sanitary? Aren't these very sanitized labs? Are you allowed to have cameras and that kind of equipment in them? Probably, but
maybe they chose a corner where they will. I never noticed that. Do they always have that?
Sometimes when it's a big company and you can tell here they really want to one up it. And I love it when they bring their kids. Everyone should bring their kids to it. Yeah. It's a once in a lifetime event.
I would have loved to have been there, but maybe we'll have
just needed a parent that started a public company.
That's not too hard.
No.
Let's get you to some stocks to watch now. We'll look at Intel, which just flipped to red right in front of my eyes. In pre-market trade, it was edging higher, but now it's in the red, down by 0.8%, wavering after it delivered a revenue forecast that shattered Wall Street estimates. And this comes as data center spending really fuels that long-awaited turnaround. Danny.
I'm looking at American Express this morning that continues to see its shares fall. It raised its full-year revenue outlook as affluent customers kept spending, but shares are lower. Second quarter revenue, card fees, and expenses disappointed all of the marketing that they had to do in order to attract customers with their higher fees. We're back in the studio with Empower Chief Investment Strategist Marta Norton. And Marta, we've been talking about the sell-off in tech. It hasn't just been that's been troubling for these markets. I mentioned it. It's also higher yields at the front end and in the middle of the curve, trading near the highest since 2025. At the same time, higher oil prices. What is a bigger risk for this market? Some of the concerns about CapEx and tech, or what's happening with the concerns over inflation?
I mean, it's no question that investors are worried about both. I think if I have to pick a bigger enemy right now, I do think it's the CapEx concerns, because it kind of takes some of the momentum out of earnings, which of course is what's been driving markets higher. I think that is a source of volatility that we're probably going to have to contend with for quite some time. But there's no question that there are concerns about higher yields. And I think the uncertainty is something that markets have a really hard time handicapping, because we don't really know how this geopolitical situation is going to work itself out.
So Danny and I have been talking about the headline ping pong that we're seeing. Have you made any tactical allocation changes recently, like maybe added your hedges or downgraded some asset allocations?
Well, I think the thing that we're thinking about the most these days is how do you get defensive in this kind of market environment? Now, I am not one of the people who's lost the faith in fixed income. I still think that there's a value there to diversified investors, especially at these yield levels. I mean, to your point, they're pricing in a lot of different risk, whether it's real rate risk or whether it's inflation risk. But I also think within your equity portfolio, it does make sense to try to find that balance between the anti-AI trade, which is not the easiest thing to find in the U.S., and also something that would be defensive if you do see some sort of massive concern around oil prices. And that leads me to healthcare.
Don't you have to do the same thing in your corporate bond portfolio now, too? BlackRock, for example, just started kicking off a more than $12 billion sale for a Meta data center. Every day there's a new bond offering worth billions coming for the various AI projects. Are bonds in danger territory of also getting highly concentrated in AI and tech, too?
Well, I think it's certainly a trend that's on the move. I think we have a ways to go. I mean, when you think about the size of these companies and how much they've issued historically, these are not companies that have been heavy borrowers, so they have some room to go. But I do think, and this is a refrain we've been hearing for years, but spreads are tight, right? And so it's not necessarily a timing indicator, as we know, but it is an indication that you shouldn't be careless with the risk that you're taking on the bond side.
Part of the reason that spreads have been tight that people have pointed to is just the amount of cash that needs to be put to work.
Yeah.
Is there a scenario as we keep seeing more issuance, not just on the debt side, but equity too, with more IPOs, cross listings, Google coming to market with another equity offering, that balance flips, that there is more supply that starts to challenge markets?
I mean, I think that is one of the concerns that we have to keep front of mind for us. I think when the IPO market doesn't bother me quite as much because it's not like we're seeing one wild idea after another. It's really these big mega deals that are coming out. But absolutely, there's just a lot more options to tack into these markets. And when you have that much supply, I think it can just weigh on markets. So the idea that the second half of the year could match the first, I think that's a little too optimistic.
And then we have, of course, rising oil prices, which can add to the inflationary pressures, which may make it more likelihood for the Fed to really talk about hiking rates, and they meet next week. But you said you're in the no-hike camp for this year.
I am, yeah, and I think that's largely because I don't understand what a hike would do for us. Now, maybe politically it's a good signal, right? Maybe it's a signal of independence and that kind of thing. And maybe it gives those who are really concerned about inflation a win and helps them relax about concerns around inflation. But when we think about what has been the major source of inflation, and it hasn't been wild consumption, it's been more supply shock after supply shock. And if you raise rates by 25 basis points, is that really going to slow this AI train, which is really what's been, pushing the market forward? I'm not sure it will, but it will add to affordability concerns, and particularly around housing. So I think those are the types of questions that the Fed is going to have to grapple with.
No, it is interesting because AI, for now, the way that inflation has showed up is maybe through chip prices. Do you expect that to change?
Not in the near term, right? I mean, especially when we look at these CapEx numbers that continue to move higher, and we'll see more of that next week. We'll see what that looks like, but it looks like a big proportion of that does relate to that chip buying, and that doesn't seem to be slowing anytime soon. So at least as we think about the intermediate term, the next few years, I think we can still see some of that inflation force coming from the AI trade.
And you also in your notes said that investors are already assuming strong earnings growth. Danny and I talked about this, that it's not even the beat that matters. It's what investors react to when it comes to those beats. Talk to us about how much of that optimism or overconfidence maybe is already priced in.
Well, it's interesting because when we roll the clock back to the last earnings season, the focus was all on geopolitics, and we weren't really thinking about what earnings could do. And then we see these remarkable numbers that aren't just, above average, they're almost historic in terms of what we're seeing from an earnings perspective. But now we know that to be the case, and we're already seeing that type of growth showing up early in earnings season. And I think it's one of the reasons why investors kind of yawn when they see some of these results and they say, I want to see the details, like with Alphabet, instead of getting overly excited about what the headline numbers look like.
Again, the stats that our Bloomberg intelligence team pulled up was 85% of companies thus far have beat, but the majority of stocks are falling after they announce their earnings. So again, it gets to that point that it is a high bar and so much is already priced in. So if this earnings season isn't going to be the catalyst that continues to take this market higher, what is then?
Well, I don't think it's necessarily going to be valuation. I mean, if we decompose returns and we look at what drove returns over the past year, the bulk of it was earnings, and we actually saw valuation compression. And so when we're at valuations of these levels, broadly speaking, they're not, outside of certain areas of the market, they're not overly stretched, but they're not low either. It's not like they have a lot of room to expand. So you really do need earnings to come through. And I think they are coming through. But if investors keep re-rating that, then we might not see exciting returns in this back half of the year. It might be quieter. So I'm not betting on necessarily a major market sell-off, but I don't think we're going to get what we saw in the first half.
All right, Marta, so great to have you here. Thank you for joining us. Empowered Chief Investment Strategist Marta Norton. Let's get a check on your equity markets about 8 minutes into your trading day. And it is a market that's cautiously higher, up 0.1%. The breadth is pretty good, though. Nearly 400 stocks are trading to the upside with 130 trading down. A lot of it is just the Mag 7 recovering after that sell-off yesterday. Apple, Microsoft, Alphabet, Amazon, all of them are higher. Eli Lilly having a good day, too. Some of the software stocks also doing well. Verizon reporting earnings and announcing a new partnership and investment with Google, so that's helping them out. To the downside, because if you have a day where Mag 7 is up, it means that chip makers and other tech stocks are going to be down. That's just the nature of the game these days. Intel, interesting to look at. It was higher pre-market after they reported earnings that showed robust demand, but now they flipped negative, down nearly 2%. And again, all the others are chip makers. Luke Kawa of Entry Point puts it well. This is the Seinfeld market, as Jerry says. I'll paraphrase him: when Elaine is happy, George is sad, and vice versa. And that's apparently the case with chips and Mag 7 stocks these days. Looking at some of the individual sectors this morning in a market that's fighting its way higher, only 3 sectors are lower. Infotech is lower, even though the Mag 7 is higher, because chips aren't doing well. Real estate, energy, communication services, so some of the bond proxies doing better this morning. Again, Isabel leading us to a market that's up 0.1%.
Danny, I'm going to watch Seinfeld and look at that Elaine and George analogy.
Just to be clear, you have seen Seinfeld before?
No.
Oh, Isabel. All right, we're going to have a talk in the commercial break.
I know, I have a lot of homework from this show. But coming up, more on Intel's blockbuster quarter and the week ahead for big tech earnings. This is Bloomberg Open Interest.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Time now for a top call. Some of the analyst action in focus this morning. First up, Telsey Advisory downgrading Albertson to market perform, pointing to the company's soft earnings report and clouded outlook. You see the stock there down by nearly 4.5%. Next up, we're looking at Citi raising its price target on HPE to $74 and opening an upside 90-day catalyst watch on the stock. They expected continuing strength in IT infrastructure spending. You're looking at the shares there higher by 0.6%. And finally, JP Morgan boosting the price target on Intel to $85. This is, I guess, the stock of the day. Danny and I have talked a lot about it. The stock is now down by nearly 3%. Earlier in pre-market, it was actually in the green. Citi saying that the company's results and outlook cleared expectations by a wide margin. Danny.
A big turnaround from Intel. For more on it, we're joined by Bloomberg Intelligence Head of Global Tech Coverage, Mandeep Singh. Mandeep, originally these earnings were interpreted as something that was positive for Intel, showed that their continued turnaround was taking pace. Now shares are lower. What did you make of the results from the company?
I mean, the server demand is pretty strong, and that's where Intel did really well. The data center segment growing 59%. During the earnings call, they talked about raising their capex, and there are some fears that if they need more money, could they do some equity issuance? And anybody who is spending capex right now is being viewed in terms of, what kind of ROI you are going to show. And we saw that with Google, even 82% cloud growth wasn't enough. Even 82% cloud growth wasn't enough to convince the investors that the ROI is commensurate to the capex increases. So from that perspective, I think Intel is a beneficiary of that capex. But then they also have to do their own capex, and I think that's where any increase would be viewed as, somewhat of a negative in this market.
And how does Intel plan to compete with NVIDIA and AMD when it comes to AI infrastructure and as that spending accelerates, Mandeep?
Yeah, I mean, look at, what consensus has for NVIDIA right now for the upcoming quarter. Even at the base that NVIDIA is at, they will probably end up growing faster than what Intel just printed. So, look, I mean, Intel is a turnaround story. Things seem to be heading in the right direction after a number of years of struggle, whereas NVIDIA is just executing to perfection, and probably that's why they're not getting the credit that there is more upside left in terms of positive sentiment, but very different in terms of where they are at with respect to their exposures to this capex.
When it comes to inference chips and others, Mandeep, Intel's mission, be it their partnership with SambaNova and elsewhere to try to keep those costs down, how is that progressing? And do we know sort of the uptake from companies, the demand for them versus something like a GPU?
Yeah, I mean, look, Intel is trying different things, and you're right. I think they're trying to boost their exposure on the accelerator side, because on the CPU server side, you will have a lot more competition. Even NVIDIA makes own CPUs. We saw that from AMD yesterday. And all these companies are trying to sell you systems now. So it's not just about CPU or accelerator, but complete systems where Intel actually trails. And so they're trying to ramp up foundry as well as inference exposure, but it's the foundry side where there are more expectations in terms of positive surprises, because if they end up landing up Apple or somebody new on the foundry side, that could be huge, and that could justify all the capex investments that they're planning to make.
And Mandeep, next week we hear from Microsoft, Meta, and Amazon. It's going to be another busy week for you and for everyone here. Anything you're going to be on the lookout for? Do you think investors will be grading the market on AI results more than their AI ambitions?
Yeah, I mean, you could compare the cloud growth. So if Google is growing 82% and Microsoft Azure comes out at 40%, that's half of what Google grew, or even Amazon AWS, if it's 35%, that's not good enough. So they have to show acceleration in the cloud growth, because Google has put the bar really high now.
Mandeep, Thank you so much for joining us. Looking forward to your coverage next week. Mandeep Singh of Bloomberg Intelligence.
Coming up, an ETF startup named Corgi is launching hundreds of funds in hopes that just one will be a blockbuster. That's next. This is Bloomberg Open Interest.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Welcome back to Bloomberg Open Interest. A check on your equity market this morning. The S&P is up, but the NASDAQ is down, led by a sell-off in chip stocks this morning, though Mag 7 rebounds. The Russell 2000 up 0.2%. Brent crude down 3%. Yields, if we had those on the board, it would be showing you that those are also moving lower today after charting higher by about 5 basis points across the entirety of the curve. NVIDIA, Intel. Before market, pre-market was up. Now it is down 2.5% as they increase their capital expenditure plans. I mentioned that a lot of the chip makers are selling off. Amex also beating on their earnings, but falling more than 5% with higher fees. Verizon, they reported earnings and announced a partnership with Google, so those shares up 2.5%. Isabel.
Danny, thank you for that update. We're now looking at Corgi Strategies, which is an ETF issuer looking to disrupt the $15 trillion landscape after launching a record 34 funds in one day. Now it's planning to launch hundreds more as it takes aim at giants like BlackRock and Goldman Sachs. Bloomberg Intelligence analyst James Seyfert joins us to discuss. James, Corgi is a little-known startup in the humongous ETF world, but then they're already in the top 10 issuers by count. How unprecedented is this, and are they even profitable? Because it seems like they're throwing spaghetti at a wall and seeing what sticks.
I mean, that's exactly what's happened. This is spaghetti cannon in action. We don't know. We can't see the internal financials of exactly what's going on, but it's almost certainly the truth that they're not profitable right now. But they have VC backing. They're a larger fintech type play. And they're using the VC playbook. So they've filed for well over 500 ETFs. They launched their first ETFs in the late fall last year. So they're on track now. They're just shy of 200 ETFs they've launched this year. One of them is pretty significant in assets. It's nearing 500 million, but it's very unlikely that all of these ETFs, the cost that it takes to run these things on an annual basis, that they're profitable right now. But that's not what they're betting on. They're betting on that one of these will take off, or at least a few of them will take off and support everything else.
How do you even come up with 500 a year? Are they just like, hey, Claude, give me 500 random ETFs? Like, is there any rhyme or reason or consistency among what they're actually offering?
So it seems like it really is the VC playbook. They're trying a lot of different things. They're trying to undercut the market. They're trying to do new things. So there's like no one set way of doing things. There's filings for what we expect to be super cheap beta products. They have over 100 products that are single stock or theme leverage ETFs. They're thematic ETFs. Their biggest ETF is Ethereum. Lithography related to AI. They filed for leverage versions of that. So they're launching and filing tons of things, and then also filing leverage versions and defined outcome versions. So they're basically trying anything and seeing where the market is going to, put their assets with them.
Well, James, we know that launching an ETF is becoming easier and becoming cheaper. I mean, there's this famous number that maybe it takes around $300,000 to launch an ETF. But then keeping it up and running is now the hard part. And of course, distribution. Can you talk to us about how you think they can surmount those challenges?
Well, obviously, one of the ways they're trying to surmount the challenges of distribution is being like, we're offering cheaper products than everybody else, and a lot of the products are extremely similar. It remains to be seen how that's going to work out. Like I said, they have one fund that's proven to be very successful, but they're basically trying to create this giant whole ecosystem. I mean, this is the same company that has 24/7 cafes all over San Francisco and different parts of California. So they're like trying to create this big ecosystem. But one thing we have seen in ETFs more broadly is like we're seeing a lot more launches in general. Obviously, Corgi is completely an enigma. It's a thing in all itself. Nothing else is even close. If they launch all the things they filed, they will have more ETFs in the market than anybody else, including BlackRock, which is the current leader at just shy of 500. So essentially, I don't know how they're going to play it out, but they're obviously trying lots of things. And like I said, they have VC backing. There's a lot of money here, and this is just a piece of what they're doing. So they might expect this to be a cost center for them, but it remains to be seen how it's going to play out long term.
So clearly they're issuing so many ETFs, James, and the world is already awash in different exchange-traded funds. Are we seeing, though, at the same time more closed? Because of this kind of thing, you do a spaghetti cannon, but not all of them are successful, so you have to shut them down.
Yeah, so perfect question. That's 100% what we're seeing. So you go back like a decade plus ago, it was like kind of a bad sign to close an ETF. You launch an ETF and it like didn't look good if you had to liquidate or close that thing. That is not what issuers are doing now. We're seeing a lot more launches. We had by far record launches in 2025. We're on pace to beat that by 30. We're going to see over 1,400 launches this year, most likely. We're also seeing record closures. So people are launching a lot more and they're pulling the trigger on liquidating them a lot sooner. Like we talked about before and Isabel mentioned, it costs a lot of money to launch these things. It also costs hundreds of thousands of dollars just to keep them operating throughout the year. So if you don't get enough assets and your fees don't compensate for those costs, you're going to end up closing. And it's not a bad look anymore if you close. People just don't care.
Are a lot of the new ETFs we're seeing, James, does it also coincide just with more IPOs and more hotly anticipated IPOs that maybe you want to build, a 3x inverse levered SpaceX ETF or whatever?
Yeah, I mean, part of it is that there's a lot of things going on, particularly with AI and space, other thematics, semiconductors, tech. That's a lot of what's happening. But also we have single stock ETFs that's buoying this, right? So you can launch if multiple issuers launch a single stock ETF in every single stock out there, we're going to see a lot of things. So part of it is that. Part of it is like a lot of people, for the most part, most of the assets are still in like those S&P 500, NASDAQ 100, broadly based diversified equity ETFs. So as more money goes in there, a lot of people want to, get wild with another portion of their portfolio. We call it core and explorer or core satellite. So in those satellite portions of the portfolio, as people get more disciplined with low cost beta type exposures, they're looking to go out and play with things that we refer to as hot sauce, get a little spicier, these types of leverage ETFs we're talking about. And so it's creating an opening.
All of a sudden now I'm hungry between spaghetti and hot sauce. James, thank you so much for joining us, James Sefford. And of course, tune in to ETF IQ Mondays, 12 p.m. New York time. Coming up in the next hour, Maria Waitman from State Street Global joins us, and economist Douglas Irwin reacts to the latest tariff plan, plus the CEO of Singapore Exchange, all that in hour 2.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
ABC News. I'm Sherry Preston. A 16-year-old has just pleaded guilty to all 55 counts in a deadly school shooting nearly 2 years ago at Appalachia High in Georgia. Colt Gray entered the plea without any deal with prosecutors. 2 students and 2 teachers were killed in that shooting, numerous other people wounded. Tensions remain high in Madison, Wisconsin, following the police-involved fatal shooting of a black man earlier this week. ABC's Pierre Thomas has more.
Police were responding to reports of a man checking the doors of parked cars Wednesday afternoon. Officers spotting him, but police say he took off on a bike. They catch up with him roughly a half hour later. Police say he pulled out a fixed-blade knife. Officers trying to tase him, but police say they were unsuccessful. Part of the controversy, the police in Madison typically do not wear body cameras.
With the old ones now expired, the Trump administration has announced a new round of tariffs on 60 countries taking effect today.
The White House, the Trump administration has done these investigations. This is a more traditional way of imposing tariffs into all of these partners. They're accusing them of using forced labor practices as a justification for putting these new tariffs in place.
ABC's Elizabeth Schulze, the nations involved, deny any forced labor accusations. New questions about the deal announced this week that would allow Saudi Arabia to develop a nuclear power program. Here's ABC's Mary Bruce.
The president is now dramatically changing the terms with a new condition that could put the entire deal out of reach. Trump saying it is totally subject to Saudi Arabia joining the very respected and successful Abraham Accords. But that remains highly unlikely. It would require Saudi Arabia to normalize diplomatic relations with Israel, something they have refused to do unless Israel commits to a Palestinian state.
Following a 13th night of fighting in Iran, Iran is warning civilians to stay away from buildings where U.S. troops are being housed. You're listening to ABC News.
A new investigation into one of those on the security detail for the vice president.
The Secret Service says an agent on Vice President J.D. Vance's detail is facing an internal investigation and even a potential criminal probe over accusations this unnamed agent leaked information about the vice president's travel, compromising his security. A Secret Service spokesperson telling ABC News that, quote, any conduct that potentially threatens the safety of a protectee will not be tolerated.
ABC's Jay O'Brien on Capitol Hill. The district attorney in Jackson County, Mississippi, Angel Myers McElrath, is speaking out for the first time since the death of 18-year-old Nolan Wells.
She met last week with Wells's parents, who pledged to allow investigators to examine his phone, which he left behind in a boat during a July 4th trip with friends to Horn Island. Few details have been released, but the district attorney says that's by design.
The pressure for answers does not change what the work requires. Our responsibility to Nolan and our community is to complete this investigation thoroughly, carefully, without compromise.
ABC Chief Investigative Correspondent Aaron Katursky reporting. A slow-moving storm system is bringing forecasts of multi-day flooding to the Carolinas. An inch per hour of rain is possible from Charleston to Wilmington, including Myrtle Beach. Midwest Poultry Services recalling nearly 1.6 million cartons of eggs due to potential salmonella contamination. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Friday morning. This is Bloomberg Intelligence, broadcasting live from the Bloomberg Interactive Brokers studio in Midtown Manhattan. We are streaming live on YouTube as well. Paul Sweeney is off for the day. Scarlett Fu, Alexis Christoforous, and John Tucker here with you for the next 2 hours. We've got a lot to cover because tariffs are back. The president is aggressively rebuilding a tariff structure, so we're going to get into all of that with our Nathan Dean, senior policy analyst for Bloomberg Intelligence. Oil prices have eased a little bit, but they are still hovering near that $100 barrel level, especially if you look at Brent crude. So all that comes up in terms of what it means for markets and this global bond sell-off. Barbara Ann Bernard, Windcrest Capital founder, will be joining us from the Bahamas to talk about that. And hyperscaler earnings in full swing next week. Alphabet reported this week it's going to spend a ton of money, $1 kajillion, on building out its AI infrastructure. So next week, Alexis, we get who? Microsoft, Amazon, Meta, Apple. So a lot of billions of dollars, tens of billions, hundreds of billions of dollars will be coming up. And Boon Chai Lo is the CEO of SGX. We're going to talk with him about the Singapore Exchange, how it's striking new deals with MSCI. All that coming up in the next hour of Bloomberg Intelligence. But let's get a setup first here of the markets on this final trading day of the week with our John Tucker.
Oh, happy Friday. This Bloomberg Business Flash brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR prediction markets. Right alongside your stocks and options, earn interest in your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. So after yesterday's sell-off, right now the major averages mixed to little change, and you really have to look under the hood for the real story because, you know, you have 10 of the 11 major industry groups in the S&P 500. They're actually higher. There are 369 stocks up, 129 lower. So consider the weighting of some of the individual stocks like, Intel, most active, and it's down. Why? I don't know, because Tatiana is going to be along to explain that.
Passing the buck.
Yeah, I don't know. She's a lot smarter, by the way. Among the worst performing stocks in the S&P 500, American Express down close to 6%. So their expenses surge. They're trying to spend more on marketing. And meantime, Karen Manna at Federated Investments says, you know what, these new Trump tariffs that took effect after midnight, they're adding to a list of worry for investors.
We came into this week thinking it was quiet, it was summer, we'd be paying attention to earnings and seeking clues, but yet treasuries are pointing, north in terms of yield, and it's definitely a more inflation on environment. The concern is there.
And S&P 500 down 1 point right now, 74.06. The Dow up 102 points. That's up 0.2%. The Nasdaq Composite Index 135 points lower. That's down just about 0.5%. Let me do oil for you. A little lower. Brent, the active contract, the international benchmark, down about 3%, 97.38 a barrel. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alexis and Scarlett, you made it to the end of the week.
Yes, we made it. I mean, it's been a brutal week.
It really has, and a
The
busy one
resumption
on
of
the
war,
earnings
everything.
front. And yeah, oil, Brent breaking through $100 a barrel. It is easing though today, but more tariffs being imposed on more countries. So yeah, it's hard to keep up with the news cycle for sure.
And I get the sense that people are a little bit worried about what else could come this weekend too, because we know this president likes dropping a lot of news over the weekend as well. So let's get a check on some individual movers in this mixed stock market right now and bring in Tatiana Darrier. She is our strategist for Markets Live, MLive Go on the terminal for those who have a terminal. Hi, Tatiana.
Good morning. What a turnaround here in Intel. Shares are now down about 4%. Your ticker is INTC. Really, after blowout results, the company reported earnings that were double the forecast. It also said that sales in its data center segment soared 59% last quarter, more than double the pace of its overall revenue. So the results really show that the CEO's Lee Bhutan's turnaround efforts are really paying off. He said demand for CPUs in data centers is really taking off. So a lot of good news. Still, we're seeing yet again, good news is not enough to really improve sentiment around these stocks, and tech is selling off heavily here again, as it looks like investors are really taking a break and really pausing on the whole AI specter, not just the hyperscalers versus chip makers.
Right. I want to stay with tech because you brought along a software maker, Oracle, got a nice big contract, right, from the Defense Department.
Exactly, but here again, the stock is down after being up about 2% in the pre-market, being dragged in this broader sell-off in the tech space. But the company won a 10-year contract with the Department of Defense, valued at about $3 billion for the first 5 years, up to $7 billion if options are exercised. This is very important because this is a company where free cash flow is really closely watched. Its balance sheet is on the weaker side if you look among hyperscalers, and those debt concern and debt cost or the cost of AI investment has really weighed on the stock, down 5% through yesterday, just this week, and down 38% year to date. It's also weighing on its debt, with the cost of protecting its debt against default reaching an 18-year high just this week. This company reports earnings a little bit later, so we won't get to hear more details about the new contract, but still it can definitely use some good news.
Yeah, and also something that folks in the credit market are watching very closely as well. Tatiana, I'm looking at Canada Goose's website, and it's kind of cold in this studio. A lightweight down jacket costs $1,000 $1,000, yeah. I mean, even the more low-end ones are like $600.
Yeah, well, get ready for even more expensive jackets from this brand because the new tariffs, the 50% tariffs that Donald Trump has put on Canada will make prices more expensive if they stick around. Of course, shares of this stock are down 3%. Ticker is GOOS. After Williams Trading downgraded the company to sell, anticipating a greater risk that it will pull guidance due to this potential tariff headwind. They know that just over a quarter of its revenue came from the U.S. in fiscal year 2026, so that there is a risk that portion of the revenue will be impacted when tariffs kick in August. I only say if, because we know that the president really likes to pivot on these things and uses it as a negotiating tactic, so we don't really know what the end level there will be. Nonetheless, Canada Goose gave guidance in May, calling for total revenue growth in the low single digits, so it will be important to watch when they report next week.
All right, good stuff. Thank you so much, Tatiana Darrier, strategist for Markets Live. And for more conversations like what you just heard, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Stock Movers is available on Apple Podcasts, Spotify, or anywhere you listen. We were talking about these tariffs that President Trump has reimposed, or has new tariffs that he's imposed. It's kind of hard to keep track, which is why it's great to have Nathan Dean with us.
Absolutely.
He's our senior policy analyst for Bloomberg Intelligence, joining us from Washington. Nathan, the president has been on a tear this week, announcing new tariffs left and right. There was something on Canada, there was something on generic drug makers, and now he's talking about new duties of between 10 and 12.5% on imports for most major trading partners. Just give us kind of the broad overview of this latest announcement.
Yeah, so President Trump is showing that, even though tariffs are highly unpopular with the American populace, they are going to be here, and they're most likely going to be here through the rest of President Trump's administration. Now, what President Trump did here is he converted what is known as a Section 122 tariff, where he was somewhat limited in what they could do, and he converted it into what's known as a Section 301 tariff. Now, what the investors should note is under a Section 301 tariff, in this case for forced labor, President Trump now has a tool that's on firmer legal ground. So you're not going to see a repeat of the Supreme Court trying to curtail his powers here. And as we go forward, he's going to be able to use Section 301 tariffs as a way to say, we wake up on Monday morning and there's a Truth Social post saying this country has done X. As a result, based off this investigation, now you're going to face 100% tariff. So the headline risk that's going to come from President Trump's social media is going to only increase. The only thing that's really stopping him at this point is the midterm elections, because tariffs is really unpopular. But after the midterm elections, I think 2027 is going to be a story of tariffs.
Nathan, even some of Trump's backers and his allies are questioning this new round of tariffs, especially with midterm elections around the corner. Is this going to, again, amount to a tax on the U.S. consumer?
I think it will be. I mean, let's look at the retail industry in particular. So, right now, Lululemon, Nike, and Adidas, they are somewhat constrained or somewhat exposed to Southeast Asia, mainly Vietnam. Now, right now, there's a Section 301 investigation in addition on excess capacity on those countries. So if you're exposed to Lululemon, Adidas, or Nike, not only you're going to deal with the 12.5% that you're getting from the Section 301 tariff that they just put in place, there's another tariff that they're investigating. Now, why would they do this if it's highly unpopular? Well, President Trump loves to use it as a negotiation tool. And like Tatiana was just saying in the prior segment, when you look at this 50% tariff or the 100% tariff on generic drugs that starts in 2 years, those are negotiation tools to force countries to come back. But in the interim, those countries and those investors that are exposed to those retailers, you're going to see higher prices as a result.
What about the countries that had signed bilateral trade deals with the U.S., at the start of the second Trump administration? Do all those just kind of go by the wayside? Do the tariffs kind of get layered on top of that?
So right now, it depends on the country, but most of the countries, they're still at the 10% level. So a lot of those trade deals in the United Kingdom in particular, was just a little bit higher than 10%, but they're at 10% right now. Most of those trade deals are going to be remaining the same, because that's ultimately where the United States and where President Trump and U.S. Trade Representative Jamieson Greer wants to go, is they want to have these individual trade deals, because then you're going to be able to have exemptions. You're going to be able to focus on specific industries. In the UK perspective, cars. And so ultimately, those deals are going to be there as a base layer, but President Trump always has the authority to add more if he wishes.
Nathan, before we let you go, we got to talk about the possibility of another government shutdown that could happen September 30th, of course, with those midterm elections right around the corner. First off, how likely is it that we're going to get a shutdown? And if we remember correctly, during the last or the most recent one, the S&P 500 returned more than its historical average. So the market seemed to shrug it off.
Yeah, exactly. And I think that's what's going to happen here. I mean, it's kind of funny. The S&P actually did better coming out of the shutdown than it did going into it. But in this case, we're ascertaining a 40% chance. Look, shutdowns right before the elections, they're politically risky. Neither party really wants to do it. But the Democrats really didn't pay a political price for embracing a shutdown last year. And there are Democrats out there that say, look, I'm not going to support President Trump's immigration agenda or vote to fund anything related to that anytime soon.
Right.
And that's where the challenge is. Now, the House has passed a bill that would fund the government through December 4th, puts it into the lame duck, kicks the can beyond September 30th.
Yeah.
Right now, I think the Democrats will agree, but we'll see.
All right, Nathan, quite a lot to sum up there from Washington. Nathan Dean, very busy with the latest policy initiatives out of Washington. He's our senior policy analyst here at Bloomberg Intelligence. We're looking at stocks limping to the finish line here on this Friday. The S&P now unchanged. The NASDAQ Composite Index down 0.6%. This is Bloomberg Intelligence on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And the major averages mixed. 10 of the 11 major industry groups in the S&P 500, they are higher right now, and it's being led by real estate. That's where some of the data center REITs live, like Digital Realty Trust, the ticker symbol there, DLR. That is actually the best performing stock in the S&P 500 right now. It's up over 13%. Currently, it's been up 5 of the past 6 days. TD Cowen raised the recommendation on the real estate technology company, citing record demand strength for, yeah, you guessed it, data centers. S&P 500 right now, 10 points higher. That's up 0.1%, 74.18 on the index. And the NASDAQ Composite Index, that's down 120 points, even though Intel had some pretty bang-up results. Shares of Intel right now 3% lower. And the Dow Jones Industrial Average up 138 points, also reflecting some of that rotation from tech. That's up 0.3%, up 144 points, 51,853. 10-year yield, 2 basis points lower, 466. Twos down 2 basis points. That's at 4.32%. I just wanted to bring you this headline. Israeli Prime Minister Benjamin Netanyahu will meet with Donald Trump, President Trump, in Washington. That is scheduled for Tuesday. That's according to Israel. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Alexis, you think they have anything to talk about?
I think they have a lot to talk about. Do you think Mom Donnie will show up in D.C.? I don't think so.
Yeah, I don't think so. Well, he sort of nixed that it was just a threat. He wasn't going to actually arrest the prime minister. So.
Lots of swaggering talk from lots of politicos. All right, John Tucker with our Bloomberg Business Flash. Thank you so much. We got some data at the top of the hour on housing, and it's so fascinating because everyone's waiting for interest rates to come down, Alexis.
Right.
And with the 10-year yield spiking this week, doesn't feel like that's going to come anytime soon.
No, and actually rates are still below where they were a year ago, but they're continuing to inch higher.
Yeah, so if you're waiting for that 30-year fixed rate mortgage to go below 6%, keep waiting for a while. Let's bring in our next guest, Barbara Ann Bernard. She is CEO and CIO of Windcrest Capital. She joins us right now from the Bahamas. And Barbara Ann, I want to start with the new home sales numbers, which show the first increase in about 3 months. So that sounds like it's good news when it comes to new home sales, yet the actual increase was smaller than expected, 1.6% versus the expected 4.8%. But I guess to some extent, consumers, home buyers, they're making peace with the idea that borrowing costs for homes will stay kind of elevated.
That's right. And I think one number doesn't make a trend, Scarlett. So if you look at May, it was 580K versus an expected 640. So it was, is this a bounce off of a soft base, or is this, an uptick in trend? But nonetheless, I think what it confirms is that the consumer is feeling pretty good. And you've seen this in new car sales and, credit card data. So the consumer is feeling strong. There's no question about that in the face of higher inflation and higher rates. And I think, if you look at the employment numbers, the jobless claims yesterday, they came in better than expected too. So as long as people have jobs, they're willing to spend and they can cover their mortgages.
I want to do a hard turn for a moment, Barbara, and just talk about gold. I quote gold nearly every day when we do our business flashes, and it is down from its high about 25%. Where do gold investors go at a moment like this? Or is this a nice opportunity to step into the precious metal?
So in the face of, or in the threat of higher rates going forward, gold is going to underperform, right? But I think today the case for gold is more about de-dollarization, more about deficits, more about distrust in the U.S. dollar, given the amount of debt and the deficit that the U.S. is taking on and its ability to service that. So gold is still a fear trade, and there's certainly a lot of uncertainty and fear in the world. We have a huge war going on that needs to be paid for. We have, tariffs that people are kind of demand refunds for. And so, how we fund some of our deficits and our growth, I think is a real theme for both governments and companies today.
I want to stay on the idea of commodities, but move to energy. And within energy, you've highlighted fusion energy as an area that becomes, very attractive for retail investors to consider. You call it an investable sector for retail in 2026. Why is that?
Yeah. Well, it's an exciting space because I feel like this year we're democratizing the dream because it's the first time fusion companies have gone public. So General Fusion just went public via SPAC on the 17th of this month, and it is a pure play fusion company. Later on this year in Q4, you have Shine, which is a medical isotopes fusion company with a near monopoly in the U.S. I think that's a really interesting one. It also wants to go public. And then, of course, in Q4 of last year, you had the Donald J. Trump Media Company merged with TAE, and they hope to complete that merger in Q4 of this year too. So within those companies, you have a range of sort of valuations, if you will. General Fusion went public at a small cap valuation, I'd say, just under $1 billion, and the DJTTA merger is more of a $6 billion market cap. And Shine wants to be in that neighborhood too. So these are very capital intensive businesses. And what's getting hurt right now is growth that is capital intensive. And you're seeing that in the AI sector, right? And the question is it worth it? And will that growth be forthcometh? The difference between Fusion today and this time last year is when Donald Trump announced that merger, he sort of put his money where his mouth is, right? The world was worried that Fusion looked like windmills to him, and it doesn't. And so in addition to that, not only did he merge his company with TAE, but he also followed on with an $80 billion government partnership with Westinghouse, Cameco, and Brookfield to build a new AP1000 reactor fleet. So that's the U.S. government underwriting nuclear the way it once underwrote highways, right? That's infrastructure scale conviction. So I think that's what makes fusion and nuclear different this time.
Got it. Barbara Ann, thank you so much. Barbara Ann Bernard is CEO, CIO, and founder of Windcrest Capital.
All right, we want to talk earnings next week because they're going to be dominated by the mega cap hyperscalers. We're talking Meta, Microsoft, Apple, Amazon, and the like. And who better to do that with than Mr. Dan Ives, live in our studios here in the Interactive Brokers Studio, partner and senior managing director, Yorkville Ives and Co. Dan, good to see you.
Great to see you.
And you have an animal motif for those not watching on YouTube. Animal motif today. Is this a tiger?
Tiger. Got a koala hat. So yeah, little animal motif. No, I should brought a bull maybe. So
I like that. Little animal spirits to the conversation.
Animal spirits.
We'll talk about next week in a moment because I want to talk about Intel right now. After the bell yesterday, I on every metric I thought blew it out of the water. Yet Intel is down 3%. Why do you think?
Look, I think the reality is some of these knee-jerk reactions I think could be misleading relative to the fundamentals, because what investors are looking at here is what does demand look like for the AI revolution? And look, Intel has become a huge barometer, and you combine what we saw from Intel with the hyperscalers, that just gives you more confidence to what we're going to see over the next week relative to CapEx, enterprise demand. I think that's why it's very easy for investors to get caught up sometimes in what the stocks do, a day after. But for Intel, I mean, they've almost become the comeback kid.
They have.
They definitely have. With a big helping hand from the U.S. government, of course.
And NVIDIA, yeah.
And NVIDIA. Okay, so let's talk about the hyperscaler earnings that are coming up next week. Alphabet, the knee-jerk reaction there was to sell it off yesterday, down almost 7%. Today, it's making a little bit of a comeback, stabilizing up 2/3 of 1%. We've got Meta, Microsoft, Amazon, all reporting next week. Are we going to see a similar kind of outcome where they're going to increase their CapEx and the return on investment, through cloud sales, for instance, is going to show that they're getting some payoff, but investors' bar is so high right now that they're not going to be rewarded for it.
Look, and I think the Alphabet reaction, I think that someone would say maybe head scratching, because if you saw the cloud growth, you look what they're doing across the business, and then of course increasing CapEx. But as we've talked about, this is an arms race. It's third inning in the AI revolution. Microsoft, Amazon, Meta, no one's going to slow CapEx. Because you slow it down, you get ultimately, you're out of the line in terms of when it comes to capacity. I think the most important thing relative to tech earnings, to the market, to these stocks is demand accelerating. Our enterprises excel toward what ultimately is going to be monetization of use cases. And in terms of the reactions, look, I think we've seen, I think investors are definitely fickle and worrying about, we'll say maybe patience wearing thin. But guess what? Let's say Alphabet said, we're cutting CapEx.
Exactly. The market would freak out.
So that's why it's one where these companies are doing but they're not just spending like 1980s rock stars for no reason. Mm-hmm. They're spending because their customers are moving on the hyperscalers, on the cloud with AI. That's why they're doing it.
Sort of like you're damned if you do and you're damned if you don't, right? Because if you're not spending and keeping pace with the other big hyperscalers, well then what are you doing? But if you're spending a lot, they're still going, what are you doing?
But you're building out the Vegas Strip in 1955.
Great analogy.
Okay. So the point is, you get one spot on the strip. If you pull back, guess what? You're 2 miles away, you're in Reno.
Right.
And bottom line is that's how these companies are thinking.
Okay, so they want to make sure they have a prime spot on the strip, and that means they need to spend a lot of money. They also need to raise a lot of money. They've been doing that in the bond market. Are more companies going to do what Alphabet did and tap the equity market as well?
I think it's going to be a tidal wave. Now, in terms of I think it's also going to happen over the next 6, 12, 18 months, because the reality is if they don't do it, despite whatever the stocks do, they know they're out of the game. Now, investors, how are they going to react to that? I would argue, see, if you look at Meta's last quarter was basically increased CapEx, dog ate the homework, they didn't show it. Alphabet, they are showing it. Microsoft, penalty box, prove me moving from Nadella. Each one's almost become idiosyncratic relative to how they're treated. But the reality is investors are going from CapEx to monetization. That's the phase we're in, but it's still early in terms of as it's all playing out. And for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
Apple's a different animal from the other companies we were just talking about. And every day I feel like they're saying we're going to revamp another product in our lineup, again, geared towards AI. So what can they possibly say that's new when they come out with earnings next week?
Look, for Apple, they finally now have an AI strategy. It's not just talk. And we talk about, we saw at WWDC. It's not Anthropic. It's not OpenAI. They don't need to be that because they have the install base of 2.5 billion iOS devices, 1.5 billion iPhones. For them, okay, it's really about giving investors an update on the deployment of the AI strategy and then giving some sort of sense in terms of what this iPhone 17, it has been a surprise upgrade cycle. And I think that's something you saw it even on the AT&T numbers. And it's very important for this broader market. The stock, what's happening to the stock, investors are realizing Apple is basically, they're going to be the toll collector on the consumer AI highway, no matter which way.
But do we need a foldable Apple phone? That's my question, Dan.
And again, Keen's
order
talked
filled.
About that, and I think
order
I know
submitted.
He's waiting for it, but I think it's going to come probably next year.
It'll fit in your pocket better. It's not going to fall out of your pocket that way.
Okay.
It'll be bulkier, but it won't fall out.
Order
Dan
submitted.
Ives, always a pleasure. Dan Ives is now partner and senior managing director at Yorkville Ives.
Order filled. Order submitted.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Well, the S&P 500 on track for a second straight week of declines. So this would be the longest streak of losing streak since March. Only 2 of the 11 major industry groups in the S&P 500 are actually lower. Information technology is the biggest drag, and of course that's home to the semiconductors. And the Philadelphia Stock Exchange Semiconductor Index right now, that is down over 4%. Talk about getting whipsawed. And the stock of the day, Intel, turnaround story kind of there. After the close, they delivered revenue forecasts that shattered Wall Street estimates. Chalk that up to booming data center spending. But right now, of course, the shares are down, Intel down 3.9% on the day. This is kind of another turnaround story. Verizon Communications, mobility and broadband sales exceeded Wall Street expectations. Now, Verizon is actually up 2.9%. Of course, the Federal Reserve meets next week on interest rates. Veronica Clark at Citigroup Global Markets thinks they're not going to make any move.
I mean, it's interesting. I don't really think that they need to raise rates, right? I think raising rates at this point, you do have to think of the trade-offs, right? Raising rates to cool inflation has to do that through cooling demand, and you don't really see strong demand.
S&P 500, 4 points lower, 74.03 on the index. The Dow Jones Industrial Average up just 47 points right now, up 0.1%. And the NASDAQ Composite Index down 194 points. That's a decline of 0.8%. Number of big changes coming away at Facebook. Meta launching a new app called Seller. It's going to provide better tools for people who sell the most on Marketplace. Sort of like the nation's garage sale.
I like the way you put that. Have you ever used Facebook
No,
Marketplace?
I have so many tools that duplicates that people have given me over the. I got to go on and start selling this stuff.
Yeah,
Order filled.
I mean, you could do that.
Yeah, but
You
the
could
thing
do
is, I
eBay.
don't want these people showing up in my yard. So, whatever.
Then you got to make a lot of trips to the post office.
I guess. But Meta can do all this AI stuff, Mark Zuckerberg. And the fact of the matter is, blah, blah, blah. It's stuff like this that really powers the company.
True.
So anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alexis and Scarlett.
All right, I'm going to buy some power tools from you.
I'll just give them to you. Bring them in.
Even better. I like that.
Or John, can you come to my house and do the work? Is really my question.
No, that's
Thank
definitely
you.
out of the question.
I pay well.
Sorry. I do like you, but I'm not doing that.
Okay.
It was worth asking.
Fair.
All right, John Tucker, thank you so much for that Bloomberg Business Flash. We have a special guest in studio with us right now to talk about what's happening in Singapore. The Singapore Exchange has struck a new agreement with MSCI, the index compiler, to build on an existing partnership and also add some new products and services. We want to welcome Boon Chai Loh. He is the CEO of SGX, and he joins us now in studio. Hi, Boon Chai.
Hi. Thank you for having me here.
Thank you for joining us today. So tell us a little bit about the existing partnership you have with MSCI and what this new expanded partnership allows Singapore Exchange to offer.
It's a long-standing partnership, close to 30 years. We have grown our MSCI Singapore Index, Equity Index derivatives over the years. We've added new products on climate action via ETFs. And this new expanded partnership will allow us to provide derivatives, in particular equity index derivatives, across more regions, more countries, more sectors, because that's what our investors, participants are telling us. Risk management is more complex these days. You don't look across just a single region. It's now cross-border, across region, across markets. So we hope through this partnership, we can have an expanded suite of risk management tools for our participants.
What will these contracts involve? What will they look like? Because I understand it's going to be broad-based.
Well, today we offer contracts across Asian markets for the equity index derivatives. This will now include broader emerging markets, some developed markets. It will also include some other single countries outside of Asia, and also sectors that we've never done before, such as industrials and also global financials.
Energy part of that?
Energy would be part of that.
Okay.
Yeah.
I'm curious about what you see in volatility in the region. We've seen the Korean stock market really go up and down quite a bit, aided in large part by those single stock leveraged ETFs. This elevated volatility that's happening in Asia, what does that mean for the Singapore exchange? And at what point does it become worrisome, perhaps?
Well, as you mentioned, volatility has increased, but I don't think it's just in Asia. It's been across the globe. At the exchange, we're focused on the long term, in particular, a resilient, transparent, and efficient platform. And as you mentioned, volatility then requires clearly a more focused risk management by participants. And that's why even an MSCI expanded suite of products will just give more risk management tools to our participants.
What about your offerings when it comes to cryptocurrencies and the crypto perpetual futures?
Yes, that has been growing, albeit from a low base. We are now onboarding more customers and also onboarding new customers that have not traded our core SGX products before. So we're excited about it. Perpetual futures is one other form of instruments that we hope we can offer to other asset classes.
How about prediction markets? Prediction markets have really taken off around the world, in the US, especially following the World Cup this summer in North America. And it's really become a fast-growing area of financial markets, even though most of the wagers are on sports. They haven't really migrated to anything else.
But more and more they're becoming wagers on politics and other things. I'd have to imagine in your position, it's very challenging.
Well, there is information value, in particular, on the events around macro, around economic indicators. And I think for institutions, that information could be useful, could be relevant. That said, the volumes are not at a level where institutions find it meaningful to execute or risk manage. And I think it's just an evolving, developing market.
So as a result, is prediction markets something that you're not interested in entering into until it becomes economically viable?
Not for economic viability, but I think what's important is what do our participants look for? And if there are economic indicators that could be expressed as an event, we would want to think about that to enhance risk management for our participants.
At the Singapore Exchange, what is the fastest growing segment of the business at the moment?
All segments has grown broadly. I'm in a blackout period, but just looking at the historical last 2-3 years, FX has grown rapidly. Today, our FX volumes are evenly split between the Asian and after Asian hours. Commodities has been a big growth driver. Our equity index derivatives has grown on the back of GDP growth in Asia, and also not forgetting our stock market, which obviously has seen great volumes in the last 12-18 months.
In terms of strategic partnerships, you have one with MSCI, you're expanding on that. Could we see more of these strategic partnerships with other indexes, with other index providers, with other exchanges?
We have a very collaborative mindset. MSCI is one important strategic partner. We also have an existing deepening and growing partnership with FTSE Russell. We also have a global listing board partnership with NASDAQ, also a technology partnership with them for over 20 years.
Order canceled.
Increasingly, we have now been able to do partnerships with other exchanges.
I'm curious to get your thoughts on the London Stock Exchange recently announcing it plans to launch an overnight trading platform called LSE24. What does that mean for the Singapore Exchange?
Well, for asset classes that has 24-hour feature, has got participants' demand, just like FX, we trade, as I said earlier, almost evenly split between Asian and non-Asian hours. For our broader derivatives, it's close to 24 hours. But I think for the stock market in general, in Asia, that's not heading towards longer hour at this point in time, because there's an FX component for you to set the trade if you are a dollar-based investor.
Right.
All right, Boon Chye, thank you so much for joining us today. Boon Chye Loh, he is the CEO of SGX, joining us in our New York studios on the Singapore Exchange, striking some new deals with MSCI, the index provider for derivatives, among other products
Such
and
a
services.
treat to have you here.
Yeah, we really appreciate it. I'm looking at the markets, Alexis, and there's not a whole lot going on here. It feels like people are kind of sitting on hold, waiting for developments over the weekend, maybe. The S&P
you know
punched.
Waiting for the Fed next week, waiting for big tech earnings next week. There's a lot of reasons maybe to stay on the sidelines.
From New York, this is Bloomberg Intelligence on Bloomberg Radio.
Order submitted. Order filled. Order submitted.
This is
Order
Bloomberg
filled.
Intelligence
Order
with Scarlett
submitted.
Fu and Paul Sweeney on Bloomberg Radio.
This is Bloomberg Intelligence with Alexis Christophorus and Scarlett Fu and John Tucker. Paul Sweeney is off for the day. He's at the beach enjoying a long weekend. And Alexis and I were just talking about how we're both Amex card holders.
Yes.
And we're trying to figure out the most economical way of transferring rewards points to your airline account and not have to pay fees.
If you find a way to do that without paying fees, please do let me know. Because it varies on how much you're going to pay to do the transfer. But I feel like, there's a fee for almost everything you do.
You know what? You need to go on Reddit because the folks on Reddit have broken this down to a science.
I'm
they
doing
have
it after
all the
the show.
details. Let's bring in Ben Elliott. He's our consumer finance analyst, and he's going to talk to us about American Express earnings. And Ben, a big part of what we're seeing from American Express is how much it spends on marketing these cards to Alexis, these cards to me. And, the Platinum card in particular is their big moneymaker because the fees are almost $800.
That's right. Yeah. So it's sort of a you got to spend money,
Order
scenario
submitted.
for Amex, right? And one of the challenges they're facing right now, which you can see in
Order
the response
canceled.
to earnings today, is that the expenses happen right away and the benefits take a year or two to flow through P&L. So one of the things that I saw that was very optimistic in the earnings was management guided towards higher card fee growth in the third quarter, and then higher run
Order
rate exiting
canceled.
2024. And that's just because mechanically, they raise people's card fees when they renew their card, right? So that's kind of on a rolling basis, and they're still raising card fees from the previous refresh of the Amex Plat. So that's going to keep rolling into P&L through next year, and that will make some of the elevated expenses look more palatable to investors, I think.
Ben, how is artificial intelligence part of the American Express story right now? And did they talk about it at all on the call?
They talked about it on the call. They talk about it quite a bit of regularity. Right now, I think the biggest impact they're seeing is they're just really a lot more efficient on the sort of the tech stack modernization effort that's been ongoing for a long time. But they would like to do things like agentic purchasing, AI travel agents, things like that. And they think that could add meaningfully to revenue and also be a big positive on the expense side.
Your colleague Nathan Dean is our senior policy analyst in Washington, and he's been writing about how there's this credit card competition act that hasn't made its way through Congress yet, but would supposedly require banks to offer two rival credit card networks to their merchants, and that could potentially be a threat to American Express, Visa, MasterCard. Is this something that the company is worried about, is kind of working around at this point, positioning itself in any way?
I don't think that they're particularly worried about it yet. I think that Nathan has some sort of tempered odds on that, but I don't know his latest odds. Um, Amex, I think, is such a sort of like lifestyle brand, value proposition driven company that if they had to, for instance, offer like a Visa or MasterCard branded card, it would impact the discount revenue sort of side of things, but I imagine that they would still try to drive
Order
users
filled.
towards their Amex branded cards where
Order
they have the full
submitted.
economics, and they could do something like provide a more basic card on the Visa MasterCard network and provide kind of like the higher end, the real meat and potatoes of the business on their own proprietary network, and that might be an offset. And there's also all kinds of other different ways to add fees and find other revenue sources that
could
aren't
one of those
contemplated.
fees be? Because I was talking to Scarlett off mic earlier about, let's say, for instance, you have a bunch of rewards points and you want to transfer them over to an airline that you fly often. Amex does charge you, at least in my experience, to make that transfer. I have to tell you, when you're paying, $800 a year for a card, that doesn't feel too good, Ben.
Order filled. Order
Yeah,
submitted.
I'm not sure exactly which program you're talking about, but the redemption rates.
I was trying to get miles over to Delta and was charged $99 to do it.
And she's outraged.
And I'm quietly outraged.
Interesting. I mean, that's like the flagship program. So I'm not exactly sure the scenario you're talking about, but I don't think that they would want to do something that sort of negatively impacted partners. So that's probably not the first fee that would be on the menu. But there are plenty of ways to bifurcate your audience and still provide what Amex does provide now, and then just to have like some sort of add-on that meets any kind of new regulatory requirement.
I like the way he put that, bifurcate the audience, meaning if you upgrade to a better level Amex Delta card, maybe you won't be subject to the fees that you just experienced. And that kind of gets to the heart of it, right, Ben? I mean, they can slice and dice this in very, very thin slices.
Yeah, everything's about the platinum. So anything they can do to drive more traffic to the platinum, I think will, in the end, actually be a net positive, even if, there's some sort of change in the business model and they have to serve, maybe a lower FICO borrower, maybe a broader audience. I don't think it will affect the core audience who likes what they have right now, and they're happy to keep paying more for it.
And just very quickly, for the American Express card holders, like maybe those who come in on the introductory card, like the, blue card, do they tend to stick with Amex? Do they kind of go along with the brand and make it all the way to platinum?
Yes, I think 75% of new customers are coming onto a fee-paying card already from the get-go. 65% of those are Gen Z and millennial, and the company sees a gigantic lifetime value in those consumers.
Gotcha.
And an explicit goal is to get those people to spend more over their lifetime, and retention rates are crazy high.
Yeah.
On the Amex Plat, it's like almost 100%. So people basically never give up their card once they get it.
Ben Elliott, Bloomberg Intelligence consumer finance analyst. We could do 2 hours on this.
We could. Just on
there's
airline miles
outrage,
alone.
there's excitement. Yeah. Get him on a Reddit forum. Thank you so much, Ben Elliott. All right, for our listeners in the U.S., a reminder, listen to us via satellite radio on Sirius XM channel 121. It is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research because the next hour of Bloomberg Intelligence with Alexis Christoforous, Scarlett Fu, and John Tucker begins right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Friday morning. This is Bloomberg Intelligence, broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. We are Alexis Christoforous, Scarlett Fu, and John Tucker with you for the second hour of BI. Paul Sweeney is off for the day. There's not a whole lot going on in equities in that we've kind of hugged the unchanged line for a while now. The S&P modestly higher, the NASDAQ modestly lower. So we've got a lot of other things to talk about, starting with the universities. Women's scholarships are facing pullback at universities as well as companies. Simone Foxman will be joining us to talk about that. She's a member of our equality team. Tom Keene will make a comeback to the radio studio.
I spend every weekday morning with the man, so I'm glad
and so you know that he's out of the office by a certain time.
I survived. But of course, he's here on Fridays because of the show with you, Scarlett, coming
That's
up.
right.
Yeah.
And Bloomberg Money airs every Friday at 12 p.m. noon time on Bloomberg Television. And Tom will join us to talk about what's on tap for Bloomberg Money this week. Michelle Kasky will join us because it is Munis in Focus this Friday as well. New Jersey Transit managed to avoid a World Cup meltdown. John Tucker, did you know that?
I'm surprised by it, but, you know, as somebody who commutes on a regular basis, you'd have to go to Paul Sweeney for that.
You survived the World Cup
No, I got to drive because I get here so early. There's no
mass
transit.
Once in a while, you feel the impact of the New Jersey Transit
meltdown.
Oh,
absolutely.
I mean, there's no one I go to more
Order
John
filled.
For all things New Jersey. He knows
Order
everything.
submitted.
And gas prices. This we know.
$4.26 at the Wawa. $4.26 a gallon.
Well. Oh, John Tucker is just a font of information. Kunjan Sobhani will join us as well to recap Intel's earnings. But first, let's go back to John for a check of these markets. I wrote them off as not much going on, but there is a lot of news under the surface.
I should point out, like, the volumes are kind of, you know, anemic for this time of day. Let's start with the earnings report card so far this earnings season. 85% of the S&P 500 constituents that are reported so far exceeding profit estimates. This is actually the highest proportion in 5 years. But so what? They may be getting overshadowed by worries about all the AI spending and some of the economic growth. The next big test, of course, you talked about it earlier when some of the biggest tech firms report next week. Digital Reality Trust. Let's start there. The best performing stock of the S&P 500. This is a data center REIT. Those shares, they are up right now over 12%. And then you got to do Intel, most active, down 3.8%, despite really good results. The company's data center segment, those sales soared 59% last quarter, driven by the build-out of data centers. Meantime, Keith Lerner at Truist Advisors says the tech-led sell-off we've seen marks a pretty healthy rotation.
Listen, even yesterday, you know, we had that, you know, some big cap tech names down a lot. And then you looked at the board yesterday, you had energy up, you had industrials up, you had financials up, you had healthcare up. So I think we're still seeing this big move up.
Right now, the S&P 500, 20 points higher. That's up 0.3%, 74.28 on the index. The Dow up 147 points, and the Nasdaq Composite Index down to 80 points. That's a decline of 0.3%. Consider this one, this story that's on the Bloomberg right now. The Centers for Disease Control and Prevention reporting a total of 2,318 confirmed measles infections today. This passes last year's total of 2,200 cases.
Not good.
The highest level since 1991. 43 states and Washington, D.C. have reported at least one infection this year. Of course, the vaccine policy has been upended since Robert F. Kennedy Jr. became a Secretary of Health and Human Services. So, I mean, just consider that. It doesn't need any commentary. Just, there are the facts and figures as reported by the CDC. We check the markets and other stuff for you right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Alexis.
Just to follow on that, I'm reading this in the Bloomberg News story, which again, it cites the CDC. Measles is highly contagious. 9 out of 10 unvaccinated people who come into contact with the disease will be infected. 90%.
Yeah, and not to mention the deaths that we saw also,
Right.
especially vulnerable are kids.
Yeah, vulnerable population. Thanks for that, John.
On that note, let's take a look at what's moving in the equity market. The S&P up by 1/4%, the NASDAQ down by 1/3 of 1%. Avalon Purnell is our Bloomberg News equities reporter, and she joins us in studio. What's on your radar?
Well, we have to start off with Booz Allen. That's ticker BAH. It's currently climbing about 14% for most intraday since 2012. And that's after the defense contractor reported first quarter profit that was much better than estimates. Jefferies analysts saying that Booz Allen's beat on the bottom line was really driven by better labor performance. She also highlighted that the firm really got to push back on the market perception that AI is a potential headwind for the company by noting instead how their recent investments in AI are actually driving award wins with the government.
All right, we had a really nice spirited conversation with Ben Elliott just a little while ago, our consumer finance analyst, about American Express, because, I mean, for all intents and purposes, this was a nice, solid earnings report, but the stock is under pressure.
And Alexis is outraged.
And I'm, well, they have to stop charging me to transfer my points over to an airline. I feel like I'm paying fees left and right.
That is very good point. That's a ticker AXP, and it's currently dropping about 5.6% most since February. And that's partially because the credit card issuer did report that their net card fees and also revenue fell a little bit short of those expectations. Amex also reported that the total expenses this quarter were a little bit higher than forecast as well. I'm curious if that has anything to do with some of the offerings on their cards.
You got to pay more to get more, right? You got to pay to market to those customers and then get them to sign up.
That's how you know it's exclusive, Alexis.
Oh, is that what I'm paying for? The exclusivity. Thank you, Scarlett.
Okay, all right. Go on, Avalon. What's your last one?
Last one is Tenet Healthcare. That's ticker THC. It's currently soaring about 22% for its biggest intraday leap since 2020. And that's after the hospital operator really shook off investor fears by posting a beat and raise quarter that exceeded expectations nearly across the board. Going into the print, a lot of investors were concerned about potential headwinds, especially from the drops in enrollment from the Affordable Care Act, subsidies expiring at the start of the year. Instead, a lot of them pointing out about how good the cost management was, Leerink saying that the cost controls were very impressive this quarter, and also noted that the stock continues to remain too inexpensive relative to the growth and risk for this company. Worth noting, its peer is only up a little bit since they did point out that the ACA is one headwind for them.
Sure.
All right, good stuff. Avalon, thank you so much. Avalon Purnell is our Bloomberg News equities reporter. And for more conversations like what you just heard, be sure to subscribe to our Stock Movers reports, 5-minute audio reports on the biggest winners and losers in the stock market. Stock Movers is available on Apple Podcasts, Spotify, or anywhere you listen. All right, Alexis, this story got my attention.
Me too.
Women's scholarships are facing pullbacks at universities and companies as well. And the reason why is because no one wants to get on the Trump administration's radar.
They don't want to get on his bad side, in essence.
Exactly.
And we're seeing universities sort of going through it. A lot of research has been pulled. So a lot of medical research not happening at universities at the moment. And now women's scholarships seem to be the next target.
Simone Foxman is our reporter for our equality team, and she's been writing about this. Simone, just give us some examples of what you've collected in your report.
And it's hard to find some of these. So it was as much a challenge searching for them because many companies especially will just sort of do away with scholarship programs. They won't renew them for a year. And so you'll have to kind of go find records. So we found, examples, especially in science and technology, the likes of Google, Palantir, and on campus, you do get a little bit more attention to these sorts of things. So Rensselaer Polytechnic Institute getting rid of its Women's Leadership Scholarship, Middlebury saying that it ended a a scholarship program that provided as much as $25,000 to students in its Bold Scholars program. But really, the list goes on, and it kind of depends how large these things are. In some cases, you have Fordham getting rid of language on a club's website saying that it was for women, really emphasizing that it was open to anyone who wants to come in a women in business club. MIT doing the same thing, where some people getting rid of actual endowed sort of scholarships that are meant for women, saying they have to go to everyone now.
Simone, is part of it that the people and the organizations who were giving to these scholarships are the ones pulling back? Is it the university saying, hey, we don't want to offer these scholarships in the same way, or is it a combination?
It's a combination of all of them. Certainly there's fear. For example, at RPI, we understood that the administration was very worried both about the Supreme Court's decision on affirmative action, as well as Trump's executive orders. They kind of gave a smattering of different concerns to students who were upset that the Women's Leadership Scholarship was going away for new students starting this fall. But it seemed like a bunch of different things, right? And in other cases, perhaps you do have
Order
companies who
canceled.
say, well, we see a lot of legal
Order
riskiness
filled.
around scholarships for any specific identity group, or maybe this is not the best way to foster women. But certainly, I think at least part of this is legal risk. I think you look at Google as a great example. They phased out their women's scholarships in the United States and in Canada a couple years ago, but left them for other countries. So they're still available for women in Ireland, for example, but not necessarily in the US and North America. So you really have to wonder, okay, well, if you're a company doing away with the scholarship, and again, most of these aren't like widely announced, are you doing it because you're worried about the legal risk, or because you truly think that you need to do a different program or means of recruiting different kinds of candidates?
All right, Simone Foxman, thank you so much. Reporter for our Bloomberg News Equality team on how companies as well as universities are pulling back on women's scholarships, eager to avoid scrutiny
Order
from
submitted.
the Trump administration.
Order
which,
canceled.
Has basically
Order
come down
submitted.
pretty hard on the higher education sector as a whole.
Yeah, but to be fair, single-sex scholarships administered by colleges, they've sort of been under fire over the years, right? Because of under Title IX, so it's not a Trump administration specific thing,
but it's accelerated.
But it's definitely heightened now, for sure.
All right. On that note, Tom Keene is back in the radio studio. He is, of course, of Bloomberg Surveillance and now of Bloomberg Money. We co-host the Bloomberg Money Show every Friday at 12 noon Eastern Time on Bloomberg Television. And Tom, I know you pay a lot of attention to the news in higher education, and we're going to be speaking with someone about education savings plans.
Someone with immense energy about the train wreck, which is American education. Tricia Scarlatta's in the absolute trenches of this. It's JP Morgan Asset Management, and it's, the usual drill, saving 529s and all that, but it's way more the shock and awe of what the cost has become.
I mean, what is the average now? Is it, I hope the average isn't 70,000. I don't know if I read that somewhere.
Well, we know that some schools, NYU, USC, are now like $100,000 a year all in when you include tuition and room and board.
The private schools, for sure, yeah.
Absolutely. I don't know what on average it is, and they always say that the sticker price is different from what a lot of people pay.
Order filled.
People who pay for the full thing.
Order submitted.
Somebody says, why are we doing this in the summer? And I said, the people always that ask that don't have kids. And
there you
go. I mean, it's 12 months a year, and you're already planning, and they start August 20th, and should I have a TV in my dorm room? Important stuff. I never had a TV.
What about an
in
air
my
conditioner?
dorm room.
Weren't you sweating your
I had no
buns
air
off?
condition. I was in Boulder, Colorado, and it was no air conditioning. And it was not like the heat now, but it was bad.
You didn't have anyone doing your laundry.
Nobody
because now
had
you can
your
do
laundry.
that now too.
But you only went to college with 2 pair of blue jeans, and you only wore one of them. So there was no laundry. Ed Jardini, I was just up in the food court, and he's chowing down. I mean, Ed Jardini.
He came early for the food.
He's here came early for the pretzels and the Cheez-Its. But to have Ed Jardini with us, given the market turmoil, Scarlett's going to be great.
He's the guy who coined the term bond vigilantes, isn't he?
We're not going to open with that, but we'll talk about it. We have to, because this week felt very bond vigilante-ish.
Yes, there's a sell-off in
Order
global bonds.
submitted.
It's not just the U.S., it's the U.K. as well. And this comes ahead of a big week for central banks, so like a lot could change quickly.
Yeah, oil coming down probably helped the situation as well.
Just for today, though.
Yeah, we have a special treat, too, which I must mention. If you're lucky and you go to college, you're in a classroom with the most famous person in the field. Young Scarlett Fu was in class with Barry Strauss.
History professor.
And we will talk about the Odyssey.
Oh, you saw it, you said, Scarlett.
I did see
Tom
it.
and I have not
Order
seen this
canceled.
yet.
Totally worth the 3 hours. I was a little bit skeptical going in. I was thinking, 3 hours.
But here's my question. Did you see it in 70 millimeter IMAX?
No,
okay,
because
see,
it's
hard
really
to get
difficult.
a ticket.
Yes.
I know.
Order
exactly.
filled.
New York City. So I might just have to suck it up and go see it.
Who's the guy that was in the bear?
Order
the
submitted.
John Bernthal.
Yeah, how did John Bernthal do?
Well, he was very bald and very ripped.
Okay.
Order
in
submitted.
The Odyssey, in contrast to him having a lot of hair and
That's
being
like
kind of
when
like
John
manic
Tucker
in the
comes
bear.
in the studio.
Very bald and very
exactly.
ripped.
Yeah, that's it.
So you guys are talking the Odyssey on today's show.
We are because
I'm
a lot of
tuning in.
people have been. You could have bought the IMAX tickets to the Odyssey a year in advance.
Yes,
because people were so looking forward to seeing Chris Nolan's treatment of the Odyssey, and people were doing that, and they're like booking their flights to come to New York to do that.
To Alexa's good question, part of what we're doing on Bloomberg Money is aspiration.
Order canceled.
Like, what's an IMAX ticket cost?
$40?
$50.
About double what a
But
normal
I mean,
one would.
someone would buy it and then
People
sell it on the secondary
aspire
market.
to do IMAX. It's summer. They're certainly bringing in a lot of money. Plus, Scarlett Fu's a celebrity lodestone.
So I think you can get. I think you can get one, Scarlett. But they had a really great box office weekend last weekend. They debuted and already.
Yeah,
I think
they made their money back.
globally they made the money back that they spent on the movie. It was a $250 million budget, and they made more than that at the global box office.
I do have some issues with, just the way that the movie progressed. Everyone has an American accent, which is fine. Robert Pattinson with an American accent is a little bit weird.
But what we did say, when you think about it, they wouldn't have been speaking British back in, AD, whatever, this took BC, whatever. What is BC? I forgot my centuries wrong. But listen, they would have been talking ancient Greek. Nobody's doing that.
Right.
So.
But also the son would call Matt Damon, who played his dad, Odysseus, dad, which I thought was really weird. Like,
very colloquial.
Why not say father? Why say dad?
I don't know what Chris Nolan's doing
John,
with that
we
decision.
don't have these deep discussions early in the morning.
This is too deep for me.
Yeah.
Really? I've spent hours talking about this.
All right,
with
wait.
people.
Who was your favorite actor in the movie? I'm taking like a poll.
I do like Matt Damon. I thought he did a great job.
Okay,
yes.
okay.
And I think he came into this kind of like the right guy because he's an every guy, but he's also can be kind of a jerk sometimes and kind of full of himself sometimes. And he threaded that needle really well.
You hear that?
Do you know that right now there's someone on the Pennsylvania Turnpike making the big turn at Altoona? Listen to this going, this is a business station.
I know.
Why are we talking
well,
about
there's
Matt
a lot of
Damon?
money attached to this.
It's like business of movies.
Yes.
It's big.
Matt Damon's IMDb, by the way, there's like 100 movies on there. He's been very productive.
And when is he not making a movie is my question. And Anne Hathaway, she had the Prada, Devils Wears Prada 2. Now she's in the Odyssey. They're everywhere, Tom. I don't know. I can't keep up.
All right. Well, Bloomberg Money with Tom Keene and
Order
Scarlett
filled.
airing every Friday at 12
Order
noon
submitted.
Eastern Time. Be sure to tune in. We're going
guys.
to talk
You
about
always
the
learn
Odyssey
something
and
new
other
on
real
the show.
things.
I have to say, and it's news you can use.
Thank you. I mean, inflation is a consistent topic because every day, every week, there's like a new point of evidence about prices not coming down. And that continues today.
Filtering through the economy.
Absolutely.
Sure.
All right, we have the S&P 500 in the green, up 0.5%. This is Bloomberg Intelligence on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. S&P 500 on track for its first back-to-back weekly loss since the early stages of the Iran war. Now, Intel delivering a revenue forecast. It shattered Wall Street estimates. So booming data center spending fueling its long-awaited turnaround. The data center segment, those sales soared 59% last quarter, and it was driven by the worldwide build-out of data centers that power AI. But the shares, part of a broader chip sell-off, Intel is down right now 3.2%. All 11 major industry groups in the S&P 500 right now, 10 of the 11 are higher, led by real estate. That is home to data center REIT Digital Realty Trust. In fact, it's the best performing stock in the S&P 500 right now, up close to 15%. And then
Order
you have
submitted.
information technology, the only group that's down right now. The semiconductor stocks live there. And the Philadelphia Stock Exchange Semiconductor Index down today 2.8%. Overall, the S&P 500 up 39 points, 74.47 on the index. The Dow up 328 points. That's a rise of about 0.6%, and the NASDAQ Composite Index right now 5 points lower. We check the markets view all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
Order canceled.
Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength, build a stronger tomorrow with BAM Mutual. For today's Munis in Focus, we're going to talk about New Jersey Transit. Paul Sweeney is not here, so I'm taking up the mantle for New Jersey right now. And John Tucker, did I just see a fist pump from you?
Oh, yeah.
Okay.
Well, anything New Jersey is,
right. We should just take a shot every time someone says New Jersey on this show. It comes up quite often. And that's just on air, off air too.
Okay.
But New Jersey Transit is the rail system that links New Jersey, the state, with New York City. Commuters like Paul are very familiar with it. And it played a starring role in the World Cup this summer, Alexis, because if you wanted to go see the game at New York, New Jersey Stadium, which is what they call it.
We call it Giant Stadium.
Well, exactly.
Well, yeah, he's really going back. John's really going back by referring to it as Giant Stadium. But
yeah, the Jets play there, but who cares?
MetLife Now, or New York, New Jersey Stadium, according to FIFA. You had to use New Jersey Transit if you wanted to use public transit.
Right. And then I think get a shuttle when you got off because you couldn't. Right? There
well,
was like a shuttle service.
You could take buses or New Jersey. That was the only way to get to the stadium.
Okay, because you couldn't drive there and then go and park there. That was the whole thing. And it seemed like a mess looking from the outside in.
And it cost a lot of money, too, because they really charged people quite a bit for that round trip. Michelle Kasky is our Bloomberg News reporter. And Michelle, before the World Cup, there were weeks and months of hand-wringing over whether New Jersey Transit could handle the volume of people going to these games. It would have to add new trains during the weekends and during midday to accommodate all these folks going to the games. And people were just getting ready to predict it would be kind of a mess. Did it end up being a mess at all?
Yeah, that's right. It was before the World Cup kicked off. A lot of people were very skeptical that this could really get pulled off, that they could do this and get so many spectators to MetLife for 8 separate matches. And they did it. There weren't any major delays or any major system-wide meltdowns. They were able to do it. So kudos to New Jersey Transit for that. But regular commuters did have to deal with some serious alterations.
Michelle, let's talk about the bottom line, though, right? Because both states actually spent a lot of money prior to the World Cup to get the infrastructure right. And I'm wondering if the ticket sales for these, because they did definitely get bumped up. I think FIFA did that. Did that outpace how much was actually spent on trying to get things up to speed.
Yeah, these are the numbers that New Jersey Transit is still crunching and trying to get the final tally on. But before the World Cup and during the World Cup, they were estimating that the cost of providing this extra World Cup service would be roughly about 32 million. It was actually higher; it was 48, but then they were able to get that down to 32 million with some corporate sponsorships and some federal funds. But it looks like, given the ridership numbers during the World Cup, that they only collected about 18 million from World Cup transit riders. So you've got a shortfall there. Now, those are very rough numbers. Like I said, they're still trying to figure out, the official tally. We'll find that out in the next couple of weeks or so, but probably they're going to come up a little short. But again, New Jersey Transit they just approved a $3 billion budget. So I think they'll be able to figure out this shortfall.
Does that preclude having the regular commuters make up the difference?
Good question.
They during the World Cup, it was World Cup riders that paid $98 round trip to get to MetLife. So they did increase the cost dramatically for World Cup fans. But we'll see. We'll see how they work this out. We'll see exactly how much of that of a deficit there is there, and if it's going to. I mean, every year now, New Jersey Transit riders will experience a fare increase. It's going to be. It's a regular annual increase now after a number of years of no increases. So the fare did increase on July 1st, roughly about 3%. And every year they're going to continue to do that, increase the fares by no more than 3%.
But the good thing is that the World Cup people were happy. The daily commuters,
Oh, is that where the priority lies? Okay.
Yeah.
Oh, am I being, do I sound cynical?
Just a wee bit.
Okay, John Tucker on his soapbox.
Yeah.
Michelle,
definitely the regular commuters had to deal with the fact that one of the biggest challenges was that there was no service from New York Penn Station to New Jersey for roughly about 4 hours before each match. So on 8 separate days, you had this 4-hour window where you could not catch a train from Penn Station to get you to New Jersey.
And I think Paul Sweeney had to take a ferry.
Yeah, he had to come up with alternate routes. Right. And
I had to drive, and they closed down a bunch of roads, so you're stuck in traffic. But there, the bus to the in New Jersey Transit, they're running fine.
That's your view from on the ground with
people
John Tucker.
who visit the city.
John Tucker's not bitter. He's fine with everything.
Every 10 years.
Michelle Kasky, thank you so much.
Am I
Michelle
bitter?
Kasky, our Bloomberg News reporter on Munis. No, you're not bitter at all.
I'm just saying.
Yeah, of course. You're just pointing out facts. Thank you. Thank you for pointing out these facts. That's our Munis in Focus for this Friday. Let's get back to corporate news and earnings. We got Intel's results yesterday. I need to save us from John's wrath towards New Jersey.
Well, first
Transit.
you had to listen to Alexis about our credit card. So
No. It's okay. We can air our grievances. It's Grievance Friday.
This is
It's the airing of the grievances right now. Let's talk a little bit about Intel, because Intel shares are down about 4%. And Alexis, you were pointing out earlier that the outlook was good and the results looked decent, and yet the stock, however, is not responding.
It was higher in the pre-market when I was doing the flashes on surveillance, talking about how Intel was rallying. And then once regular trading started, stock is down.
All right, so let's check in with Kunjan Shobani. He is our senior semiconductor analyst joining us from San Francisco. Kunjan, explain to us what happened between the pre-market and the start of regular trading when things looked fairly good for Intel, and now clearly the market does not like everything it sees with the latest set of results.
From our perspective, we liked everything we saw. After quarters and quarters of facing hurdles and missteps, this was finally the most cleanest positive quarter from a fundamental perspective. They beat on all metrics, but more important than that, they showcased a lot of confidence in the foundry progress that they're making. if I had to guess what just a reaction of few hours since the market has opened could be just because some folks are not liking the higher spending, which is going to be a headwind to the free cash flow, right? So if you add on everything positive that's happening, they were finally now getting to a free cash flow, which people were liking, but this additional spending is again going to put a pause, and a lot of investors have been waiting to get this positive free cash flow. But other than that, fundamentally, everything looks really good.
Earlier we were talking with Dan Ives about this and about the hyperscalers that are going to be reporting next week. And I'm curious, is there anything they can say with regards to CapEx spending on AI that would please this market? Because you would think if they're spending too little, the market might not like it. If they're spending too much, the market doesn't seem to like it.
Well, you got it spot on, right? The investors and shareholders of those hyperscalers don't like it when they spend a lot of money. But the investors for the semi guys that I cover should like that higher number. In fact, I mean, if we don't get a much higher number, those investors might not like for the names of NVIDIA, AMD, Intel, and so forth. Because remember, the higher the capex for the hyperscalers, that means the better the probability of upside for the semiconductor guys that I cover.
So, Kunjan, would you say that the U.S. government owning a stake in Intel has been unequivocally good for the company and the stock?
I mean, I don't see any direct correlation there. Like, they haven't done anything except for, investment, just bringing in the liquidity and the cash flow. There's definitely that credibility that, government likely won't let Intel fall. But I think I would not give them a lot more credit for what we are seeing in the stock. It has all been execution since the new CEO coming in. And we are now seeing the fruits of that discipline and the execution finally showing up.
I was looking a little more into the report and also just taking a look at what some analysts had to say. So Intel, this is their strongest revenue growth in more than 15 years. This is according to a Citi analyst. And is it all AI that's driving that right now? Is it diversified in any way?
Oh, well, it's mostly AI because, again, they're in the compute business, right? And anyone who is in that proportion of business, it's mostly AI. I think they reported a number that now 70% of their total revenue in this quarter was AI exposed or AI related in some shape or form. But more importantly, what's driving it, the tide is lifting all boats. Everyone's enjoying that. But really what the goodness came out in this quarter was, again, their execution on the foundry end, their yields are getting better, costs are coming down. It's a supply constrained environment everywhere else, and Intel has its own supply. So when they are able to bring up more volume, they're able to sell more parts and drive higher revenue and charge a lot more because, again, supply constraints. Any new volume that they bring up, they're able to right now charge a lot more higher prices.
Got it. All right, Kunjan, thank you so much. Kunjan Sobhani is our senior semiconductor analyst on Intel. Breaking news, Alexis. LeBron James has chosen to sign with the Philadelphia 76ers over the Cleveland Cavaliers as a free agent. He is signing a 2-year, $8 million deal with the Sixers. They've been considered the winners of the offseason because they swapped Paul George for Jaylen Brown.
Wow, the wait is over because it took them over 3 weeks to make that decision. Miami Heat was also one of the teams that was in contention, but looks like it's going to be LeBron and the 76ers.
And he says on X, I believe I can make this Philadelphia 76ers a championship team. I'm so excited.
Order filled. Order submitted. Order filled. Order submitted.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major averages, they are mixed. Let me start with the most active. Intel's years-long effort to revive its chips business actually paying off. The tech giant delivering a revenue forecast well ahead of expectations. Of course, they reported after close last night. But shares today, they're down, and that reflects a broader sell-off in the chip stocks. The Philadelphia Stock Exchange Semiconductor Index, the SOX, down 2.6% right now. Traders also getting ready for next week's reports from the mega caps, including Microsoft, Meta, Apple, and Amazon, right?
Amazon, you got it.
Yeah, Wall Street's been looking for more convincing evidence that all that AI spend, the CapEx, generating new growth rather than just, weighing on the profits. And ahead of next week's Fed meeting, we got to take that into consideration too. Joe Lavorgna at SMBC Nikko Securities says the inflation fight is far from over.
It's not going to fall unless something happens. And in the past, it's always been the Fed needs to increase interest rates and raise the price of credit and money. As you could say as much as you want, it's going to go back to 2, but the words alone aren't going to do it.
Right now, the S&P 500, 41 points higher. That is up 0.6%. And real estate is actually the best performing industry group in the S&P 500, 7450 on the index. The Dow Jones Industrial Average up 372 points. That's a rise of 72.7%. And you also have the NASDAQ Composite Index. That has turned higher, right now 21 points higher, up just about 0.1%. What, you read that statement from LeBron before. What did he say?
Yes, he says, another championship. I believe I can help make the Philadelphia 76ers a championship team, and I'm so excited to.
Okay, and how many I's are in the word team, Scarlett?
There are no I's.
You got
in
my
team.
blood boiling now.
Yeah.
It's just like, what kind of statement is that? It's the team, not I, me, I.
There are 4 or 5 I's in that tweet or X post that he.
I'll argue one of the things about the Knicks, the championship team, is just like a great bunch of guys.
And they worked well together. They gelled as a team. And look, I know the 76ers are going to be playing the New York Knicks now with LeBron James on there, but all I have to say is no one can guard Brunson. Thank you.
There you go.
Oh, wow.
Okay.
All
I
right.
said it here, right now. I said it already for the next
Said it
season.
with conviction. Thank you, Alexis.
We check the markets and occasionally sports. Don't you love it when I do sports? Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett, Alexis. Happy Friday, by the way.
Happy
We made
Friday.
it. Yeah, all
I'm
of
outta
us,
here.
everybody.
John
Happy
Tucker
Friday.
does not hold back, and that's what we love about him.
I'm in so much trouble.
Very endearing.
I'm going to get beat up by LeBron.
You
He's
could
coming
be.
after you.
Yeah.
41 years old and all. He's
And
coming after you.
You know, he's going to be close to you because you're in Jersey. He's in Philadelphia.
Not that close.
All right. You know what's happened today is we've got a turnaround in the markets because yesterday was all about surging bond yields, was all about equities in the red. And today we're seeing a reversal. And the 30-year yield, it's worth noting, though, is still above 5%, well above 5% at 5.13%. The 10-year yield at 4.65%. RJ Gallo is CIO of Global Fixed Income Group, Federated Hermes, joining us from Pittsburgh, Pennsylvania. RJ, thanks for joining us.
Order
and
canceled.
Let's just get your take, first of all, on what we've seen. What, John thought I was going to ask
You
about?
were going to get his take on LeBron.
I thought
well, it's
about
Pittsburgh, though.
I thought about it. So, RJ, any thoughts on LeBron joining the 76ers?
Well, Pittsburgh does not have an NBA team. So I guess the closest proximate team might actually be the 76ers. So I say it's a good news. We'll take it for the state of Pennsylvania.
They'll take it for the state of Pennsylvania, John. There you go.
RJ is part of a team, by the way.
There he certainly is.
And the Pittsburgh Steelers, they're a little closer to the hearts of Pittsburghers like myself. But that's a season that has not yet begun.
Right. We'll talk
we
football
gotta wait
with
on
them next time.
All right.
That's right.
Let's get back to the bond market because I want to get your sense about what we have seen, these rising bond yields around the world, which happens every so often. It happened back in May. It happened this week as well. Was this a temporary freakout, or do you think that the increasing frequency of these surging bond yields is the start of a broader regime change?
It's a great question. I think in the most immediate sense, the war that everybody thought should have been over by now, including President Trump, has a lot to do with the backup in global bond yields just in the last week or so. The re-intensification of the fighting was not what was priced into the market, and as a result, higher oil prices, higher bond yields is what you have as the fighting has heated back up. I think bigger picture, however, you touch on, I think, a general concern in the global bond markets. The amount of outstanding debt is much greater now in the wake of the pandemic and all the pandemic-related responses that led to large fiscal deficits both here and abroad. That should lead to higher term premia, should help drive nominal yields to higher levels, or likely to stay at higher levels in the post-pandemic environment, certainly relative to what happened before the pandemic. Going forward, we think that from a bond investor standpoint, that's actually a healthy thing. I mean, if you can get the 10-year Treasury yield close to 470, is currently at a 465, the 30-year is well north of 5%. This should be attracting capital into fixed income that should be rewarded in the sense of greater income accruals from these higher yields, not necessarily just looking for bond price changes to drive your total return. So it's probably a good thing for bond investors to have higher nominal and real yields going forward. It'll help boost returns after what has been a relatively weak return environment over the last few years.
RJ, I'd love to get your thoughts on these bond sales that are being fueled by companies needing to raise money for their AI ambitions. Today, we found out BlackRock kicked off U.S. high-grade bond sale that's tied to Meta. We've seen Google's Alphabet do this, many others. I guess the question is the demand there to meet these bond sales, because they're happening more often now?
Well, so far, the answer to your question is yes. The demand has been strong. Generally speaking, credit spreads in investment grade and high yield are tighter year to date, despite the fact that issuance has been heavy in many forms, including debt and equity capital from the hyperscalers. And we've also seen issuance in asset-backed securities and in high yield markets that are related to the CapEx build-out. And the marketplace has taken these deals down without much of a hiccup at all. I do think the more recent series of events are worth highlighting. Up till now, the story has been about strong issuance, debt, and equity to finance the AI CapEx build-out. I do think it's interesting to see the response to Alphabet's earnings, some news from Tesla. As you now see the hyperscalers shift from free cash flow positive, very strong credits, to free cash flow negative, in the sense that they actually need to come to the capital markets to finance these capital expenditures. Their free cash is not sufficient to finance the build out. That is a change in tone. And I think that the marketplace is keenly focused on whether or not we will see realized investment return from all this CapEx. And when will we get signals as to that? So any signs in the earnings releases that we're going to be focusing more on the capex and not enough on the returns, that could be the incentive for spreads to widen a little bit, and we've seen that over the last week or so in relation to the AI story.
So very quickly, RJ, before we let you go, what will you be listening for from the hyperscalers that report next week, the Microsofts, the Metas, the Amazons, when it comes to CapEx and even more importantly, the returns that their ROI on the investments they have made?
Yeah, the ROI story, in a timing sense, probably will not become clear enough in calendar 2026. It's really more of a calendar 2027 event. So I think the focus in the near term will be CapEx plans that will be shared in the earnings releases. And if there's any comment on their front about adoption and take up, if you will, from underlying paying customers, where revenue, in fact, is being generated from some of the early CapEx that has already been put in place. So I think for now, the market is very focused on the borrowing, yet is going to be searching for any signal whatsoever about the payout, about the ROI from all this CapEx. Sadly, I don't think we're going to get much of it. That leaves us vulnerable. It leaves us vulnerable to another DeepSeek kind of moment. Recently we had some news coming out from another Chinese AI provider. Are other models going to come out that will actually be cheaper and more competitive? And that could really pressure spreads wider if that's the case.
RJ Gallo, CIO of Global Fixed Income Group at Federated Hermes, joining us from Pittsburgh, Pennsylvania. The Bloomberg Intelligence Program will come back right after this. We have the S&P 500 up 0.5%.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Alexis Christoforous in for Paul Sweeney, who has the day off along with Scarlett Fu here. It is 11:53 on Wall Street, and we want to talk about Charter Communications, because this stock taking it on the chin today, down about 6.5% after its quarterly earnings report. We want to dig in a little more with Geetha Ranganathan, U.S. media analyst for Bloomberg Intelligence, and she joins us from our Princeton, New Jersey office. Geetha, always good to see you. I guess the top line here is they did it again, revenue declining once again at Charter as subscriber growth continues to slide. What else in this report did Wall Street not like?
Thanks so much, Alexis, for having me. So really, this story is, we've seen this movie before, and just the story just keeps getting worse and worse every quarter. So, Charter, as you may know, is going to very soon be the largest broadband provider in the United States after it closes on its Cox deal, which will happen in the next couple of weeks' time. And really, the story for this company has been this persistent loss in broadband subscriptions. And what Wall Street did not like this quarter was that not only did we see a deterioration in those subscriber trends, which was losses much worse than what we had initially projected, but also along with that, we are seeing this tremendous pressure on broadband ARPU, which is causing declines in EBITDA. And so just, as you kind of think about the growth outlook for this company over the next few years, there is just no turnaround in sight, and that is making investors extremely nervous.
Now, there were bright spots here. No, I mean, they did add, I guess, subscribers on the mobility end of things. How's that going?
Yeah, so this is a story that we're seeing across a lot of the cable providers. So both Charter and Comcast introducing their mobile product, which is Spectrum Mobile and Xfinity Mobile. And we've seen a lot of success with this. And really, what these cable providers have done very creatively is that they're bundling their mobile solutions with broadband. Really, the big picture here is they're trying to retain those broadband subscribers as well as attract new ones by bundling in mobile. And people kind of like that, so that you do have quite a few new subscribers kind of signing on, because if you actually look at the market out there, the wireless market, Spectrum Mobile is priced very, very competitively, much more competitively than the big three, and that is what is helping them kind of gain subscribers. But remember, they have about 10 to 12 million subscribers versus, we're comparing it with Verizon and AT&T and T-Mobile, which have hundreds of millions of subscribers. So, again, it's small potatoes, but yes, there are some bright spots.
What about some of its competitors? I mean, I guess we heard from Comcast this week, quite a different story, but then I guess you could also argue Comcast is a lot more diversified than a Charter Communications.
Yeah, so actually for Comcast, they're, it's kind of ironic, Alexis, because they've always been punished because they were not a pure play cable company. They had this media operation with NBC, which they never really got credit for. And actually, in order to kind of simplify the story, and get more value for their media business, they announced that they will be separating out those media operations, which will happen sometime in 2027. But you have the cable business that has really come under tremendous pressure, and we're seeing that both, with Comcast as well as Charter. Comcast is slightly better because, again, they have that diversification, as you pointed out, with media. But cable valuations, if you just track them over the past 4 years, Alexis, I mean, they've basically gone down by 50%. So right now we're under 5%, historical lows. And the problem is that the story is not getting any better. So with the emergence of Starlink and the possibility of having much greater competition in the broadband landscape, the story just gets so much more complicated and muddied for both Comcast and Charter.
I'm just looking at its service area. Charter Communications provides a service across 41 states, including much of New York, California, Texas, Florida. And I'm taking a look at the stock right now, Geetha, down about 69% year to date. I mean, is it a possibility here that Charter Communications either tries to sell off some parts of the business or just gets bought out in the next couple of years?
Excellent question. And this is what all of us have kind of been, scratching our heads with. So one of the things that came out of the Comcast's decision to separate out its NBC media business is the fact that now the remaining business will be a pure play cable company, a clean cable company. And that kind of sets the stage for a potential, M&A deal with Charter. So remember, there is really no regional overlap. With this, both Comcast and Charter will have that national footprint. And really what investors are banking on is that a combined company with roughly about $80 billion in costs can really extricate some synergies, maybe up to about $5 to $6 billion. And they would be then able to compete better against fiber and fixed wireless, which has really caused this extreme deterioration in their subscriber trends. So that's what everybody's hoping for. We'll see how everything plays out.
All right. Thanks for taking a deep dive into Charter Communications with us. Geetha Ranganathan, U.S. media analyst for us over at Bloomberg Intelligence in beautiful Princeton, New Jersey. Taking a look at the markets here, things have turned on the plus side now. Lots of green arrows here. Dow Jones Industrial Average up 363 points. We're seeing some more modest gains in the broader market. S&P up 45. Got the NASDAQ up 37. Helping out today is this drop in oil prices. Brent at 96.11 a barrel now. West Texas Intermediate at 88.46 a barrel, each down more than 4.5%. And for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the very latest news and industry research. We've got your top stories, your global business headlines, all coming up in just a few minutes here on Bloomberg. We're going to have a balance of power on Bloomberg coming up next with Joe Matthew.
From ABC News, I'm Stephanie Officer. Colt Gray, the teen accused of killing 2 teachers and 2 students in the 2024 Appalachia High School shooting in Georgia, has pleaded guilty to all 55 charges in court this morning.
Mr. Gray, you understand all 55 charges? Yes, Your Honor. And you understand that you would be pleading guilty to the entire indictment? Is that right? Yes, Your Honor.
Gray now faces a minimum life sentence. A jury in March convicted Gray's father, Colin, on charges of second-degree murder and involuntary manslaughter after reportedly giving his son the rifle he later used in the massacre. Wisconsin residents want clear answers from authorities after a police-involved shooting earlier this week. ABC's Pierre Thomas.
A community mourning the death of Corey Ruiz, a black man fatally shot during a violent encounter with police. The vigil coming only hours after a bizarre moment when city leaders tried to provide an update to the community about Ruiz's death.
Because we don't want to hear anything you've been saying.
A man spewing anti-Semitic and anti-capitalism views suddenly emerges from the audience and literally takes the microphone from the Madison police chief.
The Wisconsin Department of Justice is leading the investigation. New questions today regarding the status of a deal that would see the U.S. working with Saudi Arabia to develop a civilian nuclear power program for the Saudis. ABC's Mary Bruce.
The president is now dramatically changing the terms with a new condition that could put the entire deal out of reach. Trump saying it is totally subject to Saudi Arabia joining the very respected and successful Abraham Accords. But that remains highly unlikely. It would require Saudi Arabia to normalize diplomatic relations with Israel, something they have refused to do unless Israel commits to a Palestinian state.
Sean Diddy Combs got into a fight and was sent to solitary confinement at FCI Fort Dix, where he's serving 50 months for transporting prostitutes. You're listening to ABC News. New Jersey is the latest state to ban so-called surveillance pricing, where different prices are set for shoppers based on their personal information and purchase history. ABC's Elizabeth Schulze.
Maryland and Connecticut have approved similar bans on surveillance pricing for groceries. New York also passed legislation on this. New Jersey's law also implements a one-year ban on the use of new digital price tags on shelves at stores. So you might have seen, for example, electronic prices at Walmart, which the company says stay the same no matter who's shopping.
Let's consider the wave of the future. Artificial intelligence data centers have suddenly fallen out of favor with some of their former supporters.
It was November of last year that Governor Greg Abbott sat beside Google Chair Sundar Pichai and declared,
Texas will be the centerpiece for AI data centers.
New polling suggests a majority of Abbott's constituents oppose data centers. 8 months after his meeting with Pichai,
We must prohibit them from building AI data centers in rural Texas neighborhoods.
a coalition of AI firms says data centers pump $4.5 billion into the state's economy every year. Jim Ryan, ABC News in Dallas-Fort Worth.
Texas is home to more than 300 large data centers. The European Commission today accused the video sharing app TikTok of allowing adults to view the accounts of minors. The commission says TikTok exposed children to cyberbullying and predatory behavior. TikTok's parent company ByteDance says it will review the findings. I'm Stephanie Officer, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Here come the tariffs. Welcome to the Friday edition as the Trump administration implements new duties on imports from our major trading partners. This will sound familiar, to once again replace those struck down by the Supreme Court, with more to follow, they say. We'll have the latest coming up from the White House with analysis from Chris Kennedy at Bloomberg Economics. The U.S. striking Iran for a 13th straight night as the latest ceasefire proposal is reportedly rejected by Tehran. We'll have the latest on the war from Bloomberg's Jeff Mason. And as Democrats meet to rewrite their primary calendar today in D.C., we'll get analysis from our political panel. Jeannie Shanzano and Katie Frost are with us this hour. And we start, as always, on Wall Street. It's the Friday trade, and it's looking a lot better than it was when the opening bell rang. Charlie Pellet has the details in New York. Hey, Charlie.
Indeed, Joe Matthew. Happy Friday, by the way. Quite the bounce back now with the Dow, the S&P, NASDAQ, not just higher, but on the S&P 500 index. Best level of the day right now. We're up 48, 74.56. That is a gain right now of just about 0.6%. You run the numbers on the Bloomberg, and right now we are on track for another losing week. However, on the week, the S&P is down less than 0.1%. Keep it locked into Bloomberg throughout the day, and of course, for the closing bell, to see how things shake out. S&P up 48 now, up by about 0.7%. The S&P now at 74.56. Dow Industrials back above 52,000, 52,058 now, up 345, up 0.7%. NASDAQ up 61, up by about 0.2%. With the SOX, the Philadelphia Semiconductor Stock Index, declining now by 2.1%. A 10-year at 4.65%, a 2-year 4.31%, and the 30-year 5.13%. Gold is up $26 the ounce to $4,075. That is a gain of 0.6%. We are looking at a retreat for crude. That is certainly helping sentiment. Right now, we've got WTI down 4.1%, back below 89 now at 88.39 a barrel. Brent well below 100, 96.01 for a barrel of Brent, down now by 4.6%. However, average gasoline now at $4.10 a gallon across the country, raising the question, and is it a fair question? Could we see $5 gasoline by the end of the summer? Rebecca Babin is senior equity trader at CIBC. She was interviewed this morning on surveillance.
I don't think we're hitting 5. I think we're probably going closer to the 425, 430 level. And that really depends on what happens from here. If we continue to see Hormuz fully restricted with only a trickle going through and also Red Sea flows impacted, yes, I think we're going back to kind of that 450. If we also continue to see Ukraine target Russian refineries, I think, again, 450 is very realistic.
CIBC's Rebecca Babin. Chip makers declining today despite Intel's solid outlook. Intel trading lower now by 2.8%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down by 2%. NVIDIA up 1.2%. Micron down 4%. And Broadcom down by 1.5%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thanks for walking us through the roses once again. Charlie will have more on the markets in about 15 minutes' time. We do it like this every day. This being the Friday edition. You made it to the threshold of the weekend. And we thank you for meeting us here on Bloomberg Radio. Streaming live on YouTube. If you want to join us in the studio, it's pretty simple. Search Bloomberg Business News Live. We got the stream going all day. Whether our shows are coming from here in the capital or in New York City, you can pause it. You can back it up. It's like having a free terminal on YouTube, and we present it to you every day here, live on Bloomberg, thanks to the mighty Bloomberg Radio Network. I'm Joe Matthew. It's great to see you. Kaylee is off today. We've got a lot to talk about, as always. As we mentioned, the tariffs took effect 12:01 a.m. on this Friday, a whole new round to replace those that are expiring, which replaced those shot down by the Supreme Court. Just a heads up, by the way, we're going to talk Jeff Mason in a minute at the White House about this and the latest in Iran. Next hour, we're going to have a really interesting conversation with someone who's got some skin in the game here, and that would be Ireland's ambassador to the United States. Geraldine Byrne-Nason will join us right here in our Washington bureau, waking up to a new round of tariffs today. We're waking up as well to news from Iran with a 13th straight night of bombing and no apparent off-ramp. There was a proposal for a ceasefire that you probably heard about. That has been rejected. It was delivered by the Iraqi prime minister. Remember, he met with President Trump in the Oval Office just a week or two ago here, brought this idea forward. It was shot down. And I'll remind you of the Axios report, which is pretty heavy duty. President considering restarting major combat operations that would be bigger than the ones carried out in the outset of what we all call Operation Epic Fury. Happening across town, Democrats are trying to rewrite their primary calendar. We're going to have more on that later in the hour. Are we really doing this again? We just have this argument every 4 years, and then New Hampshire says, no, you can't. It's a state law. We have to go first. Maybe there'll be a write-in campaign for John Ossoff coming up in 2028. But let's start with what we know here. We're going to get into the latest with Iran and the tariffs on this day, 90 days later. The president finally gets to deliver his speech to a room full of journalists at the White House Correspondents' Dinner. Remember, we all gathered up there at the Hinckley Hilton, and we all had to leave because somebody tried to shoot the thing. And that got a whole nother conversation going about presidential security, whether the ballroom will make him safer and all that stuff. And remember that night, he said, we're going to do it again. At that point, he said 30 days. Didn't work out that way. 90 days later, he's going to finally get to read the speech. And they've got the mentalist guy in there too, right, James? The problem is they can't fit even half the number of people who were in the massive ballroom at the Hilton. So this is a very intimate affair ahead this evening for the President of the United States. And you better believe Jeff Mason's going to be there. I don't even know that, but I'm assuming it because he's the preeminent White House correspondent. He joins us right now from a gorgeous North Lawn. It's actually really nice this week. We got really nice out in Washington. Wow, I feel like I'm outdoors right now. Jeff, how are you? Looking forward to tonight. We'll get into that,
Joe. I was just going to say thanks for arranging this nice weather. It's made it much more pleasant to join you from the lawn.
Well, you look fantastic, and I wish I was out there with you. The president is actually talking about things today. He just mentioned President Xi on Truth Social, told me he would not under any circumstances give or sell weapons to Iran. That statement, he said, included Chinese companies. I take him at his word. Doing very big favors. He says President Putin, despite the horrible war going on in Ukraine, told me he would not sell weapons to Iran. What is he talking about here, Jeff, that he felt a need to come to Truth Social to send this message?
So, Joe, I always believe in saying I don't know when I don't know, and in this case, I don't know.
Yeah.
Because both of those things are things that he has said before. Not really clear why he decided to post that today. I don't think it's new. We don't think it's any kind of new development. It's possible that there's something going on behind the scenes that caused him to send that out today. We may have a chance to ask him about that in the Oval Office this afternoon.
Is he going to open things up, or are we waiting to find out? Because I just wondered if maybe he heard that China was sending weapons.
Yeah, I wondered too, and certainly there was a question mark over that. That was one of the bigger issues that overshadowed, or at least underpinned, to use a couple different analogies there, the China summit that President Trump held with President Xi in Beijing a few months ago. And one of the outcomes was what he just announced again today, which is that he said that President Xi had pledged that China would not be supporting Iran. So I'm not sure why he needed to, or felt the need to mention that today. I guess if we're drawing a couple different stories together, you could also potentially conclude that he wanted to remind President Xi of that promise on the same day that these tariffs are coming out. That may be a way of saying, hey, we may be doing something today, we being the U.S. in this case, that's upsetting to Beijing, but don't forget your pledge.
All right, I'm with you. As you mentioned, we don't know if we're going to hear from the president today. That's frequently the case, unless he's already holding forth in the Oval Office at noontime. I referenced the Axios report, Jeff. Do we believe that he's on the precipice of some major decision, or are we just back into this rolling night after night of strikes?
What I can tell you, Joe, is that certainly his rhetoric this week has not indicated that he's ready to come back to the negotiating table or to send his team back to the negotiating table, and that is a shift. A few weeks ago, the president was talking about how much Iran wanted a deal. He continues to say that Iran wants a deal, and yet the U.S. and Iran have not let up on their strikes over the last 2 weeks, and that seems to be the direction that this war is going.
Interesting. I should ask you about the tariffs. We saw them coming. The White House promised this, right? There'd be a series of investigations that would bring new justification. And in this case, it's forced labor, Jeff Mason. The U.S. will collect duties of between, depending on the nation, 10 and 12.5%. The filing in the Federal Register says this impacts 60 economies to prevent forced labor in their supply chains. These are, in some cases, some pretty important trading partners. What do we mean by forced labor?
Yeah, good question, and I would add to that list that includes the 27-nation European Union, a bloc that I used to cover when I was based in Brussels, and I think it's fair to say that they also take forced labor very seriously. So I'd be curious to read a little bit more about the details here in terms of where the U.S. is accusing forced labor of being used in these supply chains. But broadly, as just a stand back comment, Joe, this was this administration's attempt to neutralize what was a damaging Supreme Court decision for them. The president loves to use tariffs. It's one of his, if not the signature foreign policy and sort of economic move that he has used since coming into office the second time. He used it a lot during the first term as well. And the Supreme Court really hampered that with its decision, and he was upset about it, and they found a workaround, and this is it.
Yeah, they sure did. 301 replaces 122. And as I mentioned, we'll talk to Chris Kennedy about that. They've got really interesting analysis at Bloomberg Economics about actually how close the administration is coming to rebuilding the initial tariff wall that brings us back to Liberation Day. Hey, Jeff, is he dusting off the same script for tonight? I mean, we're kind of in a different world than we were back in May, or whenever the heck that was, the first Correspondents' Dinner, right?
Yeah, end of April. We are in a different world.
That's
and
right.
Yet,
wow.
My suspicion is that the script is getting dusted off. We got the impression that he was going to be pretty sharp against the press at that dinner. Then, of course, the shooting happened. He ended up giving a press conference that night behind me in the press room where he used a pretty conciliatory tone. But it's been 90 days, as you said in your intro, and in that period, his administration has issued subpoenas to New York Times reporters over their reporting on the new Air Force One. Those subpoenas, of course, yesterday were dropped. But he has not backed down, shall we say, in his rhetoric against the press. So probably we're going to hear that tonight as well.
No, this ought to be a riot. Jeff, thank you. Let me know what's on the menu later on. Bloomberg White House correspondent Jeff Mason on the North Lawn. He'll be back in our second hour. There were like 3,000 people in the dinner in April. They're going to have, what, 1,000 tonight? That's why not everybody's going. And listen, you'll hear people pretend that they're happy about it. That's the game right now in Washington. Me, I love getting the invitation. I live for the invitation. I just don't always want to go to the event. Chris Kennedy's next on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Oil lower, stocks higher. S&P 500 index just about the best level of the day right now at 74.55. That is a gain of 47 points, and that's an advance of just about 0.6%. Dow Industrials up 388 points on the Dow, up by about 0.7%. NASDAQ right now up 0.2%. The NASDAQ 100 index does remain lower. Right now it is down by 0.1%. Intel weighing on the index. Intel shares lower after last night's earnings report. Right now, Intel down 4.7%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 2.3%. The 10-year, 4.65%. The 2-year, 4.31%, and the 30-year currently yielding 5.14%. Gold up another $25 the ounce, up by about 0.6%, $4,074 on the precious metal, while West Texas Intermediate crude 88.49 a barrel. It is down 4%. Brent 96.03, down by 4.6%. This time yesterday we were telling you about Brent trading above $100 a barrel. Again, the Dow, the S&P, NASDAQ all in the green. Oil is lower on hopes that mediated talks between the U.S. and Iran will resume. As for the oil majors today, mixed bag. We got ExxonMobil down 0.1%. Chevron higher by 0.1%. ConocoPhillips down 0.2%. Key takeaway on those oil majors, for the most part, trading little change. But oil bears repeating. West Texas Intermediate crude, $88.54 a barrel, down now by 4%. LeBron James ending his Lakers run. The NBA's all-time leading scorer says he is signing with the 76ers for his 24th NBA season. That, Joe Matthew, is a Bloomberg Business Flash.
That's Charlie Pellet, ladies and gentlemen. He's got the news, the markets, the headlines, and he'll be back in about 20 minutes' time here. Big part of our program every day. He's the voice of Wall Street and the New York subway. Listen next time you're in the tube. Headlines, NVIDIA. We've got a bid under NVIDIA today. What a strange market. This thing is really turning higher as Charlie walks us through the whole Friday trade here. Up 1%, but Intel, after blowing the doors off with the earnings report, is down 5%. Kind of weird. Qualcomm is actually showing some losses as well, down 1% on planned price increases. That's about memory, right? Why is Micron down in that case? These are the questions I ask James every morning without expecting answers. He just looks at me and shakes his head. That's why we have Charlie here. Hey, at least Nike's got a bid, James. At least something's going okay. And oil prices are lower despite what's happening in Iran. I was curious to see how the markets would react today with the idea of new tariffs landing. And of course, it's all about predictability, right? People saw this coming. We are seeing interest rates drop, though, and it's probably got more to do with oil than tariffs, because this looks like kind of a wash. I woke up this morning, I saw Chris Kennedy's post on LinkedIn. That's actually, honestly, this is how sometimes you put the show together. And I sent it to James. I said, we got to get Kennedy on. This is the smartest analysis that we've seen, because you hear the headline, and I've repeated it myself. Trump's rebuilding the tariff wall. But the Supreme Court knocked down the tariffs. And then, of course, remember, they were replaced by, 301. And those were temporary. Those are expiring today. And the new ones are taking effect, presumably, and this is 122? Tyler knows all the sections. So does Chris. I just hang out with smarter people. These are under the guise now following a months-long investigation of forced labor. At the EU, these are like close trading partners and allies of some sort of, I don't know if it's their labor or if they're importing products from China that made forced labor, but that's going to be the rationale here. And I'll, by the way, let you know this right now. On the late edition of Balance of Power, we're going to spend some time with Peter Navarro. Yeah, the grandfather of the tariff regime. Take the phone off the hook at 5. Navarro's coming in. I should be like, Navarro's coming in. The president, though, says it's his favorite word. This might be Navarro's bailiwick, but Donald Trump loves the tariffs, and we're going back to the future. Listen.
I am a tariff man.
To me, the most beautiful word in the dictionary is tariff.
I really think we're helped a lot by the tariff situation that's going on.
I used these tariffs, took in hundreds of billions of dollars to make great deals for our country.
I hate to pay people back tariffs. We have other ways of tariffing. As you know, we're already doing it.
Yes, we do have other ways. Enters Section 301 of the Trade Act of 1974. So where are we in sports here? Is the tariff wall rebuilt? I've mentioned his name repeatedly. He's Bloomberg Economics economic statecraft analyst, Chris Kennedy. Great to see you. Welcome back. This is some statecraft. Our early estimates, as you write, suggest this will nudge up the average effective U.S. tariff rate from the current level by just 0.1%. Is the wall rebuilt?
The wall is not rebuilt, Joe. So the numbers, we crunched them last night, late into the night. We were expecting when the USTR, Jameson Greer, announced proposed remedies back in June, we were expecting the rate to increase by something closer to 0.5 percentage point. But because of new exemptions and some shifting rates on countries and positive treatment of countries that have inked reciprocal deals with the president, the actual effect is only to increase the rate very marginally. Now, to be clear, this isn't the end of the story. As you mentioned, these tariffs are under Section 301. It's a tested authority. the day, or right around the same time the forced labor investigation was announced, a separate investigation into allegations of excess capacity in 16 large economies that account for 75% of U.S. imports. So that we still don't know the results of that investigation. We do expect those proposed remedies from that investigation to nudge the tariff rate higher, probably closer to the 13.5% that we saw before the Supreme Court threw out those tariffs back in February.
Got you. So as we currently stand at what you found to be 10.7%, right? What do we make of this justification? Is it durable?
Well, the courts have been unwilling to really dive into these determinations that the executive branch agencies make when it comes to these trade actions that Trump has undertaken. USTR was very careful to follow all the procedures that are required under Section 301. And we expect, and I think Bloomberg's legal team also expects, that while there'll be litigation, we don't think that these tariffs will be thrown out.
Okay, sure.
Yeah.
I mean, you are hearing countries push back, not retaliate, to be clear, with more tariffs, and we've seen how well that works. But when we talk about forced labor, is this happening in the European Union?
So the allegation is that these economies have failed to prevent products produced using forced labor from entering their supply chains.
Is this all China we're talking about?
It's not just China, but this has been a bit of a thorn, I think, in some U.S. trade policy folks' side for a long time. We in the U.S. have this law. It's called the Uyghur Forced Labor Prevention Act, a very strong prohibition on the importation of products that are produced by forced labor. And most other economies don't have as stringent of a rule. And so I think that this will be a great question for you to ask Peter when he's in here later.
Yeah.
But that seems to be the reasoning. Because these economies don't have as strong of a prohibition as the U.S., we should be taking action. It represents some sort of undue burden on U.S. commerce.
So is there a corrective measure here? Could they pass a law? Could the EU pass a measure that would result in the tariff being lifted, or blowing a hole in the justification?
One would think that is how Section 301 was intended to work. It's intended as a, initially it's part of the Trade Enforcement Authority of USTR, holding our FTA partners to account for the commitments that they make. But it's been used more in recent years, initially under Trump's first term to go after China in 2018. And then, recently Brazil, et cetera. It's now being used proactively against economies with which the U.S. does not have free trade agreements. Ideally, you'd think that they could do something, but as I think many people suspect, 301 is being used largely to just rebuild some of the tariffs that were tossed out by the courts.
They're going to have quite a story to tell. I mean, I'll be deeply curious to hear how Peter Navarro frames forced labor. Help us frame excess capacity. As you write, this could help, once this investigation is done, bring tariffs that further close the gap between the new rate and what we had pre-Supreme Court ruling in February. Are we talking essentially about dumping here? How does this work?
So the second 301 investigation is into policies and practices that are contributing to this supposed excess capacity in manufacturing specifically. Excess capacity itself is not an actionable thing under Section 301. So it's things like subsidies, et cetera, that the U.S. feels are burdening American producers, and that's the sort of justification. I think, as with the forced labor, we saw a number of economies push back pretty hard when these investigations were announced. Norway, for instance, noted that their fish production is helped in part by the fact that they have fjords. This isn't necessarily a story of massive subsidies, right? These are comparative advantages that exist in the global trading system.
Okay, you mentioned exemptions here. And there are a lot of different carve-outs, including products that we cannot produce here. Does that mean my coffee is going to be safe? Avocados, bananas? Where's the administration on that?
Yeah, so a number of foodstuffs were exempted in this latest round, and also on the unrelated, Section 301 tariffs on Brazil. So coffee was excluded there.
Sure.
And we did see a number of exemptions be expanded from the Section 122 tariffs that these are meant to replace.
I see.
That's part of the reason why the overall hit to the effective tariff rate wasn't as large as we thought.
Fascinating. Okay. The president doesn't want USMCA, he says, or at least we're not renewing it in the way that many expected. Even though he negotiated it, he birthed the USMCA, but he says that was only to get us out of NAFTA. If we didn't have USMCA, this would be a really different scenario for Mexico and Canada, correct? They were exempting massive numbers of goods here.
That's right. And those exemptions are persisting with the Section 301. Now, earlier this week, it's been a very busy week for trade policy.
Yeah.
The president invoked another authority that's never been used before, Section 338. It's from 1930 against Canada, 50% tariffs.
That was for the wildfires? No, that was a whole different deal. We haven't done the wildfires.
Dairy, for alcohol.
Because they were mistreating American alcohol, he said.
Yes, that's right. Now, those tariffs, as proposed, will not exempt USMCA compliant goods, which is notable because that is different than all the other tariffs that have been applied to Canada so far.
Yes, right.
We'll see what happens with those.
Wow, we've come a long way from Liberation Day. We've had a Supreme Court ruling. This administration is hell-bent on getting us back to that initial point, which was in place for such a brief period of time. Can we even quantify its economic impact?
Well, the change, so today, the tariffs are not changing very much.
Yeah.
So our estimate is there's not going to be too much of an impact on the global economy compared to the baseline that existed yesterday. We'll have to see. It's very challenging. As you just note, these tariff rates have been jumping all around over the past year and a half.
Yeah.
I think the bigger point is that this uncertainty is bad for investment. It's really difficult for businesses to make decisions when they don't know what the tariff rate is going to be in a few months.
Right.
So.
Markets feel that. Politicians feel that. And Chris Kennedy helps us understand it. Great work on all of this. He was up late so you could know more about it at Bloomberg Economics. He is our economic statecraft expert and a friend of the program, and we appreciate it as always, Chris. I'm Joe Matthew in Washington. We'll assemble our political panel coming up next. We've got a good one for you. As they rethink the primary calendar for the Democrats, we're doing this again. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, they're all advancing. Stocks are climbing as oil sells off big time. We're looking at a loss right now for crude. West Texas Intermediate down 4%, 88.46 a barrel. Brent crude well below $100 now, 95.94 on Brent. Barrel of Brent this time yesterday was above 100. Right now, Brent is down by 4.7%. Bottom line here, traders driving stocks and bonds higher. The S&P 500 index is at 74.44, up 36 points, gain there of 0.5%. Dow Industrials back above 52,000. The Dow up 320 points, up 0.6%. NASDAQ higher, flat on the day, though little changed, up 9 points on NASDAQ. The NASDAQ 100 index, however, is lower, down 0.4%. Intel weighing on the index after earnings. Intel right now is down
Order canceled.
4%. The Bloomberg Mag 7 index ahead of a lot of key earnings next week. The index up by 0.5%. The VIX below 18 and the 10-year 4.66%. The 2-year 4.31%. The 30-year 5.14%. Gold is up $17 the ounce to $4,067, up by about 0.4%. And again, WTI crude down 4.1%. We are roughly 6 hours away from the scheduled attempted launch of SpaceX's Starship rocket. It was supposed to go up last night, but it did hit a weather delay, so they're trying again tonight. Sanapa Shankar is covering it for Bloomberg News.
They have had a rocky development cycle. They've had some explosions. They've had some setbacks. Just this week, they had postponed the launch because some of the engines didn't ignite. And then yesterday, they again postponed the launch to today because of bad weather, which that is pretty common in rocketry. But, today all eyes are on Starship. It is the first test flight since their IPO. So investors will be watching, I'm sure.
Sanapa Shankar, who will be covering it for Bloomberg News. She mentioned the IPO. SpaceX shares, they are down now by 4.8%, out the gate at 135. SpaceX now trading at 112.50. Recapping, West Texas Intermediate crude selling off, down 4.1%. Stocks higher, S&P up 0.5%. That's Joe Matthew. This is a Bloomberg Business Flash.
All right, Charlie, I appreciate you. He'll be back coming up top of the hour, 1 p.m. Eastern, with more on Wall Street as we follow the Friday trade and try to get out of here alive for the weekend. That is, of course, the job of the investor every Friday, sometimes a little worried about going long into the weekend, specifically with the war in Iran that is giving us a little bit of relief today with oil prices pulling back, but nothing has changed. We had a 13th night of strikes. We'll get the latest from Jeff Mason coming up from the White House at the top of the hour. The president is posting about the bridge, the Gordie Howe Bridge. You know, the one Detroit connects America to the United States. This is sticky. They were supposed to have a big ribbon cutting thing there, and you heard Canada disinvited the U.S. We haven't been getting along. It's the tariffs. President takes to Truth Social, Canada disinvited the United States of America to the opening of the Gordie Howe Bridge, which is fine, considering they're paying substantial tariffs to the United States. But the original deal, he says, on the bridge, which was terribly negotiated by a previous administration, no longer stands. We changed terms of the deal so the U.S. now gets 50% of the profit. Thank you for your attention to this matter. I guess they're going to have separate ceremonies on each side of the bridge. We are hereby calling it the Jack Hughes Bridge on our side. I stole that from producer James. Hey, message to the president. A lot of people are getting disinvited around here today. Hundreds are being disinvited to the White House Correspondents' Dinner. That happens tonight. No one's really talking about it because like 2,000 people got lopped off the invite list. I happen to be one of them. They put 3,000 people, or something close to that, in that massive ballroom in the Hinckley Hilton, the one that broke down when the shooter ran through the... So now 90 days later, they're going to do the dinner again tonight. We talked to Jeff about it. It's be down the street at the old, what used to be the Trump Hotel. It's a Waldorf Astoria now. They can only fit like 1,000 people in that ballroom. So this was one heck of an exercise to whittle down the list of people important enough to get in that room. And the president will have the speech that he intended to deliver originally. The press secretary Caroline Leavitt, promising the speech will be, quote, unifying yet vicious, and serious yet hilarious. I don't know how that's possible. Said the speech changed little from the version that the president planned to give in April. It's going to be fun getting in there. I'll tell you what. I mentioned earlier, look, we all have an ego. Everybody wants to get an invite. This one might not have been really fun to go to, though, right? Weijia Jiang says she's trying to ensure the event does not feel like a candlelight vigil. The scholarships will be awarded. They're going to do all of that. The mentalist will be there, too. And everyone has to have a QR code, and they're going to be in line for like airport-style security after what happened last time. Entry requires the code and a photo ID. It's like the Save America Act at the Waldorf. Now, in a separate hotel at the Salamander over by the tidal basin, this is where everyone goes to use the spa and try to get out of the way, have a quiet weekend, a staycation. The 49-person strong DNC Rules and Bylaws Committee, they're not getting massages. Well, they might be, but that's not why they went. They're there to bang their heads against the wall to figure out what states ought to come first in the next nominating primary series. And we've gone through this a lot of times. Ask anyone in New Hampshire. Nevada and South Carolina think they're going to be first in line here. They're duking this out to see who comes first. Nevada says, come on to Vegas on February 1, because we're going to start picking presidents around here. New Hampshire, aforementioned, and Michigan, according to reports in Politico, appear next in line, and Virginia wants to be fifth. I'll remind everybody that New Hampshire has a state law that says they have to come first. So no matter when they'll do it tomorrow if they have to, as long as it's first. That is non-negotiable for the state of New Hampshire. And Democrats punished the state last time for doing it. And they sidelined all the delegates. So there was a write-in campaign for Joe Biden. I mean, it was really weird. We showed up in Manchester. James and Kaylee were there. We went to the Snowshoe. We were looking for people. We couldn't find anyone other than Vermin Supreme. There was nobody walking the streets. Nobody cared because the delegates were swept away. Republicans had a real convention. And, well, that didn't hold much mystery at the time. But I'm curious our panel's thought on this because, the party's looking for a more representative population, more diversity. This is what we always hear, right? Than these weird places in the north like New Hampshire and Iowa that have done a pretty good job, by the way, over the years picking presidents. There's no easy answer on this. Everyone's going to get angry, and I have no idea how it's going to finish, so we'll let our panel figure it out. Bloomberg Politics contributor Jeannie Shanzano is here, by God. Happy Friday, Jeannie. Democracy visiting fellow at Harvard Kennedy School's Ash Center, and it's always great to see Katie Frost. Welcome back, Katie, Republican strategist and political director at the American Principles Project. I don't mean to get too worked up here, Jeannie, but are we going to be walking down Elm Street again talking about a write-in campaign for John Ossoff in New Hampshire? What's the point of this?
Yeah, we might. And Joe, you just gave me so many things to chew on between the correspondence dinner and the bridge and now this. I just have to ask you one thing. Am I led to believe that Americans are going to be taxed higher because Donald Trump is upset he wasn't invited to a bridge opening? Is that what's happening? I can't wrap my head around any of this.
I think it's just a case of timing here, but I don't know.
New Hampshire will try to go first. They will have if they do, they have no choice. They're not going to change that law. The Democrats will do the same thing they did in 24, same thing they did to Florida and Michigan, by the way, in 2008. And they will, in the meantime, try to work out who is actually going to go first in this lineup of the sort of top 4 or 5 before the March big primary day. And you said it was going to be tough. Somebody who's been in those meetings was quoted as saying it's going to be a bloodbath and people will fight to the death for this. So if anybody thinks this isn't serious, these are big odds, Katie and Joe.
Man, this is going to be a hell of a panel, Katie. I don't want anybody to get in trouble or get hurt. The old saying in New Hampshire, Iowa picks corn, New Hampshire picks presidents. I don't know why we do this every 4 years, and I guess I do. I appreciate the spirit of the argument, but it leads to great chaos when every state wants to jump in front of the other, Katie. How come the Republicans don't have this whole deliberation?
You know, we're traditionalists. We like order. We like structure. And I got to say, the Democratic Party process doesn't seem very democratic at the moment. A lot of people wonder, why is Iowa the first to go? And that's always been a question. I actually worked for a candidate in 2016, Ted Cruz, and when he was running, he committed to doing the full Grassley, which is where you have to go to all 99 counties in Iowa. So I've seen every corner of Iowa. I actually have a T-shirt that says, Iowa, for some reason, you have to come here to be president. But the reason Iowa went first is that after the chaotic 1968 convention that the Democrats had with all the protesting, they said, all right, we're going to pivot and spread this out amongst the states. And Iowa had a very complex process at the time, so they wanted to get a head start on that. So they ended up being the first state to go in 1972, and then the Republicans followed in 1976, and Iowa just was the first in the nation. That's how it goes. But we're seeing a lot of pushback now at the DNC. But so who's it going to be? If South Carolina isn't a state, though, they're saying they want more diversity. But why would you go to a state that has Republican control? The population may be diverse. But there's not a lot of ideological diversity there. Well, Congressman James Clyburn, of course, is a huge figure in the Democratic Party. But will South Carolina be able to hold on to that position? Once he's no longer on the scene, it would maybe make sense to go somewhere like Georgia, because, I mean, I'm not saying this because I am from Georgia, but Georgia is a state that has elected some Democrats recently and also is a very diverse state. But I don't know why we need to do this all. Come on, guys. It's Iowa, New Hampshire, South Carolina. We know that's the drill. Let's just do that, and let's not strip people's voices away at a convention. The convention is an incredibly important moment for both parties, and I will just say on a personal note, party conventions are very important in my life. My parents had their first date at the 1988 RNC convention, so I wouldn't be here on this panel if it wasn't for the conventions. We need to let everyone be represented.
Hey, wild things happen at conventions. Jeannie, what do you think about this? If this changes the order and New Hampshire freaks out, should the party strip the state's delegates?
Yeah, I mean, they probably will, whether they should cosmically or not, they probably will, although there's talk that the Democratic Party in New Hampshire could hold a follow-up convention or primary and get the delegates that way. But again, this has been done before. As I mentioned, it was done in 2008. It was done in 2024. It'll probably be done again. But let me just explain why. Katie makes an excellent point about Georgia, but there's a very practical reason. And this is one of the things that people don't consider a lot, are the practicalities of this. As much as Democrats would love to hold their first in the nation primary in Georgia, Georgia has a Republican-controlled state. And so getting their legislature and their governor to sign off on moving that date is all but impossible. So amongst the many things that this almost 50-person committee today is trying to figure out is what they would like to see, and of course, what is practically possible. And of course, Georgia is not practically possible. They've got to go to a state controlled by Democrats. That's why, Joe, your state of Virginia is on the short list. I don't know that it's going to get there, but it's there because it could sort of stand in for a southern state that has Democratic control. But what they're trying to do is they're trying to make sure that they have representation in all ways, demographically, ideologically. They're also trying to ensure that these are states that matter, not just in the primaries, but in the general as well, so they don't waste organizational resources. There's a lot of practical concerns there. And Joe, you and I were in Iowa last time around. It was god-awful cold. They couldn't pick a winner. And we knew at that time it was probably, I'm sorry, Katie, the end of Iowa. They couldn't get it together.
It was so cold. Still cold. Katie, Ryan asks a really good question on the terminal. I want to throw this by you. Ryan says, why don't all states report at the same time? Why do we need some weird decorum where Iowa and New Hampshire go first, as they might be the least relevant states? Isn't it, we've talked about a national primary, and I've got a minute left, Katie. Isn't it because candidates would only go to New York and California?
That would be complete chaos from a campaign scheduling perspective. That would be a nightmare, and also wouldn't give us anything to talk about. And we wouldn't have the drama and the buildup. Come on, Joe. We need a drawn-out process so we can talk about a different state voting every week. And it would just make it another chaotic national election, and wouldn't have the same thing where you can see over the period of time. Remember, this is also a way of vetting candidates. And different things come out over the course of several months as different states are voting, different debates are happening, different voters and issues are coming forward. So I'm in favor of the drawn-out primary process.
This is a great conversation. And I'll tell you what, I can't wait to get back on the primary trail with all of our great analysts. I'm looking at you, Jeannie Shanzano, and Katie, thank you for being part of our panel. They're both back in our second hour, coming up here on Balance of Power. I'm Joe Matthew in Washington. This is Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump rebuilds the tariff wall. Welcome to the Friday edition as the Trump administration adds new duties to imports from major trading partners, including the EU, just as tariffs implemented after the Supreme Court ruling expire. We're going to get the latest when we bring you to the White House and talk to Bloomberg's Jeff Mason with commentary this hour from Chrystia Freeland and analysis from our political panel. The U.S. striking Iran for a 13th straight night as the latest ceasefire proposal is rejected by Tehran. We'll talk strategy with Tom Caraco, who runs the Missile Defense Project at CSIS. And later, our conversation with Ireland's ambassador to the U.S., Geraldine Byrne-Nason, is with us in studio, all after a look at Wall Street. Let's get to the Friday trade now with Charlie Pellet in New York. That NASDAQ looking a little wobbly here, Charlie.
Exactly. Last update, Joe, we told you NASDAQ was higher, but right now it is moving lower, down by about 0.1%. Bottom line, here we have some familiar themes. Oil certainly moving markets today. Price of oil is declining. Chip stocks also declining today. And Intel, after that blowout report last night, Intel shares now trading lower by 4%. But right to the equity numbers, with the S&P 500 index holding on to a gain now of 30 points. We're off session highs, up by about 0.4%. Dow Industrials up 277 on the Dow. That is a gain of 0.5%. Right now, 51,989 on the Dow Jones Industrial Average. NASDAQ, though, down under 0.1%. The NASDAQ 100 index down 0.4%. And again, Intel after earnings down now by 4.1%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, trading lower by 2.8%. The VIX just below 18, and a 10-year at 4.66%. The 2-year 4.31%. The 30-year 5.15%. Spot gold at $4,067 the ounce, up 0.5%. West Texas Intermediate crude 88.24 a barrel, down 4.3%. Brent crude 95.82 now, down 4.8%. This time yesterday we were talking about Brent trading above $100. Again, chip makers trading lower. I mentioned the SOX down now by about 2.9% among some of those other tech names. Chip names, we've got NVIDIA, little changed, up 0.6%. Micron, though, hard hit, down 5.3% now. Shares of Broadcom lower by 2%. Recapping, stocks are trading mixed. S&P up 27, up by 0.4%. West Texas Intermediate crude down by 4.3%. At Joe Matthew is a Bloomberg Business Flash.
Charlie, thank you so much. Lower oil prices going a long way to give stock traders some relief, even after Iran and the U.S. Continued for a 13th straight night. American airstrikes shortly after Iran reportedly rejected a ceasefire proposal that had been delivered to Washington by Iraq's prime minister. This could be a very interesting and informative weekend in the future of this conflict, and it's where we start with Bloomberg White House correspondent Jeff Mason, who is on the North Lawn right now. Jeff, will there be a 14th straight night?
You know, if past this prologue, there probably will be, Joe. I don't have any specific intel on that, but the president has shown, certainly over the last 2 weeks, that he wants to increase attacks and to continue these attacks that started a little over 2 weeks ago or roughly 2 weeks ago, I should say, when the ceasefire collapsed and the memo of understanding was essentially thrown in the trash. Not a great spot right now between those two countries, but there are seemingly some efforts by outside mediators to try to get them back to the table. Our friends at Reuters reporting earlier that Pakistan was pursuing another option or way to get the two sides back at the table, and that has helped the markets a little bit. I think markets generally are just looking for any signs of hope that this conflict is not going to continue to escalate and continue to escalate. Obviously, you then also have sort of the opposite type of reporting from Axios suggesting that the president is looking at even a bigger attack or a bigger use of military force against Iran. So we're going to ask him about that this afternoon. He's holding an event in the Oval Office, and I'm expecting to be there, and we'll try to get a couple questions in.
I'll be deeply curious to hear what he said, Jeff. Indeed, bigger than ever before was the quote to Axios. I'm close to making a decision. We're all set for it. Listen to the way the president framed the war with Iran when he was speaking yesterday.
We're doing very well against the Islamic Republic of Iran. We're doing extremely well. They would like to do something, but I say they're not ready yet. We want to get it over with, and we want to do it right. We have to do what we came to do, and that's we can't let these people, they're very violent people, we can't let them have what they want.
At every turn, we're doing extremely well. Jeff, you've heard him say it. He has even said it directly to you. He's also claimed victory more than 24 times over the course of 5 months. Do we actually know what the president thinks about the state of this war?
You know, I appreciate that you use that 24 figure, Joe, because it's emblematic of the mixed messages that he has given about this war, really from the very beginning. and throughout. And it also, I think, you asked me what he's thinking. I think that it is that's also sort of a window into what he's thinking, because this is a president who wants victory on all sides. He wants to be able to say that he was a historic president who took on a challenge with Iran that other presidents had not, and he says that repeatedly. But he also has voiced fears of becoming a president who presides over an economic downfall like the Great Depression. He doesn't want that, and that was one of the things that he cited when he ended, or said he was ending the war a few weeks ago. So it's a lot, and it's a lot to decipher, and it's a lot of back and forth and contradiction. There are also lots of different opinions about it within his own party. There are people on the right who would like to see President Trump and this administration really continue this war against Iran and do even more to ensure that Tehran is unable to get a nuclear weapon. Whereas there are others who I think are also concerned about the Republican prospects in the midterm election if gasoline prices continue to go up and if this conflict continues.
Let's talk tariffs, Jeff Mason. We've got a new round here replacing those that are expiring, those temporary tariffs following the Supreme Court ruling. Everyone's becoming an expert on this stuff. This is Section 301, a 431-page filing in the Federal Register, and it's aimed at, well, tariffs between 10 and 12.5%, aimed in many cases at our trading partners, our allies, including the EU. Jeff, this is on the grounds of forced labor. What do we know about it?
Yeah, including the EU is right. That and you're throwing out 301 in the same way that lots of people are throwing out 301, which used to mean nothing, I think, to many people, but it means a lot in the trade world. Spot on with that figure there. It is the workaround that the administration is using to continue tariffs against basically a good chunk of the rest of the world, including very close U.S. allies. As far as that particular reasoning that you mentioned in terms of forced labor, that's the crux that they have hinged this on or attached this to. I am curious to see more of the details about where they are seeing forced labor in these supply chains. Certainly from a bloc like the European Union, which is also pretty sensitive to those things. I would think that they'd have to have something to show for it.
Jeff, right while you were speaking, the president just posted, I think he's watching this again. We're running headlines across the terminal right now. I want you to hear this. They're starting a 301 probe into the practice of the European Union, he says, robbing U.S. firms. The European Union, he says, is at it again, taking direct aim at great American companies after having fined Apple for no reason at all, $15 billion, Meta, $3 billion, Amazon, $2.5 billion, and many others. We have just been informed that Google has been fined another $1 billion without explanation. I read down here, it's a very long post. He says the U.S. is not a piggy bank for Europe, and a 301 investigation will be immediately initiated into the practice of robbing American companies and, in turn, the American taxpayer. Jeff, he says the EU will pay a very big price for this illegal and highly unethical conduct. This sounds like a lot more than forced labor.
Yes, it does. And let's unpack a little bit of that without even having seen the post, and thanks for reading it out loud, Joe. One thing I can tell you as a former EU correspondent is that the European Union, and particularly the European Commission, which is the EU's executive based in Brussels, has broad authority over antitrust. And their antitrust department, or the part of the commission that does antitrust, is the one, or is the part of the commission that is taking on some of these big U.S. technology companies. That is not the same as trading practice. It's an antitrust practice, if I'm understanding correctly what the president is complaining about. So that would raise questions for me as a reporter about what kind of legal maneuvers or legal challenges that the EU might now take, not even with regard to retaliation, but with regard to fighting this measure in an international court of some kind. I don't know the answer to that, but just throwing that out there. But broadly, back to our discussion about what the president is thinking, the president doesn't see that differentiation. He sees it as Europe taking or attacking U.S. companies and taking money away. And so he's using the only thing that he often uses as a tool to prevent that, and that is these tariffs.
I guess we'll have to see what the level will be, Jeff. He says the penalties will be entirely reversed, and we anticipate a substantial tariff to be placed on them at the earliest possible moment. I'm really glad we were with Jeff Mason when this story broke, Jeff. Thank you so much. With your institutional knowledge here on the EU, a fascinating story. He's our White House correspondent, live, of course, on the North Lawn. And we want to assemble our panel for their take on this breaking story. We'll get to what's happening with Iran, but the tariffs are leading the day here. It was already a major story with the implementation of these 301 tariffs for some 60 economies that the White House says has forced labor in their supply chains. Bloomberg Politics contributor Jeannie Shanzano is with us, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. And we're joined as well by Katie Frost, a Republican strategist, political director at the American Principles Project. Katie, this is an interesting moment. After the White House struck down the tariffs, the president has managed to rebuild a good chunk of what people call his tariff wall. And it looks like there's more coming based on what he's writing about the European Union. Does this make you nervous in a world where we're already seeing an economy, where we're already seeing rising prices because of the war in Iran?
You know, I've long held that tariffs are something that should be a tool and used in negotiations. And President Trump, of course, we know he loves to negotiate. But for far too long, we had countries that would have a tariff in place, and we did not at least have a mirror tariff of that. So that's something I've long been an advocate for. But we'll have to see how these different countries want to negotiate and finalize these deals. And as we saw previously, there were several times when the president would talk about a tariff and all of a sudden people wanted to get to the table and have a conversation. So I will wait to judge until we see the final product. But if we're talking about something like forced labor, I think that's something we should all be able to agree on. There's a reason we haven't allowed certain imports from regions like where the Uyghur concentration camps are in China. If there is forced labor and slave labor being used in the production of those products have no place being in the United States.
Well, and apparently they have no place in the EU, according to the administration, Jeannie, and the EU is taking some issue with the forced labor allegations. Weigh in on that as you see fit. The EU is going to be getting more, it sounds like, based on these penalties to, as he mentioned, Google, Apple, Meta, and more.
Yeah, I mean, to impose these tariffs, which are not anything but taxes on the American public, the president using 301 has to show that these 59 countries plus the 27 EU nations are engaged in forced labor, at least they are in their supply chain. And that is something that, as far as we can tell, we have not seen the evidence of. So whether or not the administration can produce that is critical. On the heels of that, just hours after imposing these, the president takes to Truth Social with those posts you were reading to Jeff Mason, and he says, oh, by the way, this might not be anything to do with forced labor, apparently. This has to do with antitrust. I don't like how you are treating our big tech companies, Google and the rest. Well, this is a big question for the administration. Which is it? And you've got people in Congress, you've got senators, you've got people like Linda Sanchez, you've got people like Ron Wyden who are saying we need to pull this power back from the president because he is misusing it. I will tell you one consistent theme in every report we've heard today, even before the president posted about the antitrust, is this has nothing to do with forced labor. This is a workaround for the president because his ability to impose his favorite tool, tariffs, was stripped by the Supreme Court. And the minute, literally last night, when those last set were pulled back, he then imposed these using forced labor as an excuse. So the big question here is, can he and the administration show evidence of forced labor? And what is he talking about the antitrust? If that is coming into play here, 301 isn't going to give him the tool he needs to be able to do this legally.
Well, and you know that there are going to be court challenges coming here. What do you make of this post, Katie, that the president just made, upping the ante when it comes to the fines that he says are for no reason at all against some of our biggest tech companies, Meta, Amazon, Google, and others, isolated in this note. He says the United States of America is not a piggyback for Europe. Do you think we are?
Well, it certainly seems like they expect us to bail them out whenever something is happening over there. And, there was the old joke that everybody talks about in America, we are the back-to-back World War champions. But look, at the end of the day, that anyone who represents those companies is going to make sure that they're advocating for their best interests, which we should. But we also need to have someone who's advocating for the best interests of the American people. And that's supposed to be the President of the United States. And if Europe is doing anything that impacts negatively our economy, there needs to be something done about that. And I agree with Jane, we don't know what the final version of this is going to be, and there will be a lot of court cases about this. If there's one thing we have more of in the DC than lobbyists, it's lawyers, so they're going to be suing over these regulations. But we have to see what the final product will be. No one really has an answer right now.
Let's turn to Iran if we can. Jeannie, we haven't heard from you yet today on this, with the president taking to Truth Social as well to talk about China's promise and Russia's promise to not provide weapons to Iran. We had a 13th straight night of bombing last evening, and we're going to be talking more with the missile expert at CSIS coming up here about strategy. But are you concerned that we are on the verge of all-out war once again?
Well, I am, based, in part on the president's comments. And the fact is, it's becoming increasingly tough to take what he says to take him at his word on any of this. At the same time, he is telling the American public in Georgia that apparently Iran wants desperately to negotiate, but he's not ready. Then we get reporting out of the New York Times, which says that he sent, and I think he should be doing this, an attempt to negotiate a deal with them that they rejected. So which is it? We've got to be able to trust the president and the administration, not to mention, Joe, reports that they pulled down the number of casualties that were posted from 18 to 14, saying the 4 men and women who returned to Dover Air Force Base the other day did not die during the war because this came after the MOU. That is an astonishing thing to do. And hopefully, I haven't checked in the last few minutes, has been rectified. But this is an administration that is saying things that don't match with the reality of what we're hearing. And we need to be able to trust them on things as basic as, are you attempting to negotiate? How much has this war cost? How many casualties and wounded have we had? How much more money do you need? And increasingly, that's becoming difficult.
All right. We've had a great panel, and I want to thank both of you, Jeannie Shanzano and Katie Frost, for sharing your insights on another breaking news day here in Washington. We're going to have much more on the war with Iran when we talk to an expert coming up. Tom Carrico runs the Missile Defense Project at the Center for Strategic and International Studies. An insider's view next, only on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Price hikes at Qualcomm, the biggest maker of smartphone processors, is planning to increase prices by a percentage in the double digits. It's a move that is likely to ripple through much of the tech industry. Now, this is according to a document that has been seen by Bloomberg News. Qualcomm says these price hikes will take effect for products shipped after September 1st. Qualcomm, by the way, will be reporting earnings next Wednesday. Right now, shares of Qualcomm, they are trading lower. Qualcomm shares down now by 1.7%. The Dow and the S&P are higher. Techs are tumbling. We've got NASDAQ down 0.1%. The NASDAQ 100 index down 0.5%. This as Intel slumps after earnings by 4.1%. The S&P at 7436, up 28. That is a gain of 0.4%. Dow Industrials up 277, up 0.5. NASDAQ down 27. For NASDAQ, a drop now of 0.1%. The Bloomberg Mag 7 index is pushing higher ahead of key earnings next week. Right now, that index up by 0.3%. But the SOX slumping, semiconductors selling off. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 2.2%. The 10-year 4.67%, with the 2-year 4.32%. The 30-year 5.15%. Spot gold 4,066 the ounce, up 0.4%. A retreat for crude, major story today, certainly giving a boost to many stocks. WTI 88.79 a barrel, down 3.7%. Brent crude 96.23, down by 4.4%. Peter Lake, the senior director of power at the White House's National Energy Dominance Council, will be leaving the administration at the end of July. Recapping, S&P up 25, up by 0.4%. WTI crude 88.82 a barrel, down by 3.7%. That, Joe Matthew, is a Bloomberg Business Flash.
Okay, Charlie, many thanks, sir. Charlie Pellet will be back in about 20 minutes with more on the Friday trade here as we follow through this trading week. We're live in Washington on Balance of Power. I'm Joe Matthew. Kaylee Lyons is off today, and we do have breaking news on a story that we touched earlier in the program. The competition among states to become first in line for the Democratic primary process when we get together to choose another president. As we mentioned to you, Nevada and South Carolina were considered contenders to be first in line, and the Associated Press now reports that South Carolina was in fact selected to lead off the Democratic Party's 2028 presidential nominating schedule. This is the DNC Rules and Bylaws Committee holding up at the Salamander Hotel here in Washington, D.C., and they've been at it making arguments for a couple of days. And according to some, it's been a knockdown, drag-out fight. The decision will need to be approved by the full DNC, to be clear, which is scheduled to meet in August. And now you can brace for the reaction that will come from many states, beginning with Iowa and New Hampshire, who will be very much looking to maintain their first-in-line order. Of course, Iowa kicks things off, or has historically, with the presidential caucuses. New Hampshire, the first in the nation primary state, which has a state law on the books that says it must go first. And so it will likely jump the line if history is any guide here, and could in fact be penalized again. The state was stripped of its delegates in the last cycle, which is why there was a write-in campaign for Joe Biden. We're back to the situation in Iran, as promised, with a 13th straight night of attacks after Iran reportedly rejected a ceasefire offer that was delivered on behalf of Washington by the Iraqi prime minister. And based on what we have been seeing, with Iran continuing to attack vessels in the Strait of Hormuz and even employing the Houthis to do the same in the Red Sea, Wall Street Journal reports that Iran has proven it retains a significant missile and drone arsenal that it continues to use and threaten American forces, even as the president has claimed to have totally destroyed Iran's military. It's where we start our conversation with Tom Carrico, a real expert, as we try to understand what exactly the capabilities are that Iran still retains. He's the director of the Missile Defense Project and senior fellow in the Defense and Security Department at the Center for Strategic and International Studies, CSIS, right here in Washington. Tom, welcome back to Bloomberg TV and radio. Is it possible to answer that question? Do we know how many missiles Iran has left?
Well, the president about a month ago said that Iran had about 21% of its missile force still intact, and he added that's still quite a lot. Unfortunately, I mean, I think just the fact that yes, we've been bombing them the last 13 days, but they keep managing to get missiles off, and it's the fact that the missiles are getting off the ground in the first place just speaks to the fact that we've not sufficiently degraded either the missiles themselves or their launch infrastructure. It's a reminder that the whole desire to do things left of launch before the missiles are launched, while highly desirable, is also very hard. Scud hunting is hard, and Iran has built an infrastructure, learning from the North Koreans and other folks, and watching the way in which the United States conducts strikes over the last several decades that have been able to ride out these attacks, unfortunately, more than we would have liked.
Remarkably well, Tom, as I read in the story here, and I should note that you were quoted in it, the strike on the airbase Friday that killed 3 Americans was carried out by, they say, likely Tehran's most effective missiles, including the Kibar-Shikan medium-range system. That and others housed in vast underground facilities that the U.S. and Israel spent weeks pounding in March and April. Since then, Iran has dug them out and resumed firing from those same bases. Are we not able to destroy them?
Look, it's likely a circuitous maze of missile launch points. Iran has actually put video of some of these underground missile cities or these underground tunnels online over the years, and it's a pretty clever concept. You basically got a road that you drive around, and then you have little holes that in the surface that pop up, and so it's designed to be resilient. It's designed to be able to move things around and have the aspect of deception in terms of making it harder to figure out where an individual missile is at any given time. So it's when you bury things underground, you have the benefit of a passive defense to make it harder to be struck.
Interesting. These are, I presume, the sites that we're going back to hit now for a second or third time. When you hear the president talk about additional targets, how many of them have already been hit?
I don't know the number offhand, but I think what you're pointing to in part is the challenge of doing everything from the air. This is a lesson that unfortunately we have to remind ourselves of or relearn, it seems like every decade or so, that the desire, American air power is exquisite, to be sure. But it is very hard to be able to do everything from the air, from a standoff capability. The land domain, we talk about multi-domain operations, but land domain is the domain on which most human beings spend most of their time. And that's where politics happens. That's where stuff exists. And so it's difficult from a military perspective to be able to, no kidding, accomplish all of your objectives without being there, without sending in forces. And so that's not something we want to do, but that's just the challenge.
Well, I guess I'm winding up to a question about whether Iran is simply digging out these missiles because they were very carefully stored underground, or if they're maybe getting new ones. And the president posted on Truth Social today, I'd love your thoughts on this, referring to President Xi, he said, told me he would not under any circumstances give or sell weapons to Iran. That statement included Chinese companies, he says. He says, likewise, President Putin told me he would not sell weapons to Iran, and he understands that I do not sell weapons to Ukraine, but to NATO countries. What's the point of this? Does the president believe that China or Russia may be providing weapons?
Well, the quote would seem to suggest that he'd like to believe they weren't. I think the good money, the good bet is that, of course, they are. And why would they be doing that? Because it's too great a temptation not to, frankly. Yes, admittedly, through NATO, the United States has, of course, been providing weapons, but also targeting information to the Ukrainians to resist the Russian invaders. So in addition to the likely prospect of stuff going into Iran, there's been a number of news reports on that front. There's also the reports that maybe the Chinese or the Russians are assisting with targeting information. So the United States bases in Qatar and Bahrain, and yes, in Jordan, where the service members were just killed. It's hard not to think that targeting information could be helping the Iranians out a lot. And there again, it's probably just too great a temptation for the Russians and the Chinese not to be assisting.
Wow, that's really important, Tom. I'm looking at the defense contractors today. They're reaching higher again after a big rally yesterday in RTX. Lockheed, they had earnings reports, and it brings us to the question right now. There you see it on your screen. RTX is up another 2%. Lockheed is up even more than that. The question about our own stockpiles, Tom, these are the two companies, among others, that stand to benefit from a massive purchase of missiles, interceptors, and other munitions that we have spent in the war in Iran and, of course, in providing weapons support to Ukraine. How badly does the Pentagon need the money it's asking for right now? There's a supplemental budget request that's on the table in Congress. It just passed the House. Pentagon officials, Pete Hegseth testifying earlier in the week, say they're already moving training schedules around, moving money around because they need the cash. What do we need to buy? What's our state of munitions in our stockpiles?
Yeah, so the bad news is that it is not a very good situation at all. We have, I would say, figured out a good plan that was begun last May of 2025 to begin what was called a munitions ramp, to build up about a dozen and change prioritized munitions. The two companies that you cited there are the primary providers of those offensive and defensive missiles. That was a good plan. There were announcements, heads of agreement, agreements to agree that were announced in December and then in January and February of this year. But the bad news, that's all good. The bad news is they haven't been contracted, or almost nothing has been contracted to do that. In January, when Congress passed the 2026 appropriations, they said that they were $28.8 billion short of the Pentagon's request just for munitions. That was before Epic Fury. Things have gotten a lot worse. Now, the supplemental bill that you referenced there, assuming it can get through Congress, would basically finish up that earlier shortfall, but it doesn't even get after the munitions shortfall from Epic Fury. And yes, the numbers of offensive and defensive missiles that have been expended in this conflict is frankly shocking. And it is something that, as I've written, is frankly degrading our deterrence and defense abilities in the Pacific, for instance.
We've only got a minute left, Tom. You said Pacific. Could we wage war against China right now while we're doing this with Iran?
The United States could, but it would be much harder. And the other thing is, what I really worry about is that we are essentially tempting China to do something because we are, from a military posture, moving stuff out of the Pacific. It just makes it that much more tempting for them to pick a fight with the Philippines or with Taiwan or whomever. And so that's what I really worry about, is that the folks in Beijing are sitting there clicking away on a hand clicker for every Patriot missile that we fire and every Tomahawk missile that we fire. And they're doing a lot of clicking, and it's not a good situation.
They're counting the bullets as we fire them. Tom, you're great, and I appreciate your analysis very much. With great work at the Missile Defense Project at CSIS. Tom Carrico, Ireland's ambassador to the U.S., is on the way in next here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Oil is declining, and the Dow and the S&P are higher. NASDAQ bouncing around. Right now we've got NASDAQ down 18. Just a minute ago we had NASDAQ higher, but down 18 now, drop of under 0.1%. S&P up 29, gain there of 0.4% with the Dow up 281 points now. Dow Industrials up by about 0.5%. Weakness in tech names today. The NASDAQ 100 index is down 0.5%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down 2.8%. Intel after earnings moving lower by 4.4%. The VIX right at 18. The 10-year 4.67%. The 2-year 4.32%, and the 30-year 5.16%. Gold at $4,068 the ounce. Spot gold up $19 the ounce, up by about 0.5%. West Texas Intermediate crude now at $89.07 a barrel, down 3.4%. Brent 96.46 barrel of Brent, down 4.2%. Brent is retreating from $100 a barrel as traders assess signs that oil is still managing to get through Middle East trade routes despite the recent escalation in hostilities. Among oil majors, ExxonMobil down 0.2%. Chevron up 0.1%. ConocoPhillips down 0.1%. Bottom line there, the oil stocks are trading little changed. Recapping, S&P 500 index up 27, higher by about 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Joe Matthew, that is a Bloomberg Business Flash.
Charlie, thank you so much. He'll be back at the top of the hour with more on Wall Street, 2 p.m. Eastern Time as we kick off Bloomberg Business Week daily, just like we do each day here. That would fulfill the name on Bloomberg TV and radio. I'm Joe Matthew in Washington. Thanks for spending some time with us as we talk tariffs today. There's actually a lot of tariff news, which can make things a bit confusing. The White House today implementing, as expected, a new round of tariffs on our trading partners to replace those that were put in place temporarily following the Supreme Court ruling. It's 10 to 12.5% applied to 60 different economies and the justification of forced labor. This is Section 301, replacing Section 122. Now, that's separate from what the president is threatening to drop on Canada, the most recent round, a fresh 50% tariff on some Canadian goods, milk, hockey equipment, beer and plywood, as opposed to those, in some cases, including energy, that are covered by the USMCA, over what the United States or the Trump administration says was unfair treatment of American alcohol, cars, and dairy. Now, to that end, there was supposed to be a dedication ceremony today for a new bridge, the Gordie Howe Bridge, connecting the U.S. and Canada right there in Detroit. President, writing on Truth Social, Canada disinvited the United States of America to the opening of the Gordie Howe Bridge, which is fine, he says, considering they are paying substantial tariffs to the United States. But the original deal on the bridge, terribly negotiated by a previous administration, he says, no longer stands. We changed the terms of the deal so that the U.S. now gets 50% of the profit. Thank you for your attention to this matter. Indeed, the United States will hold its own dedication ceremony, it seems, on this side of the bridge. This was the foundation of David Weston's conversation with Chrystia Freeland that you will see and hear on this week's edition of Bloomberg Wall Street Week. Of course, the former Canadian finance minister, now Bloomberg contributor, weighing in on Canada tariffs. Listen.
The official rationale is in reaction to Canadian treatment of U.S. alcohol, U.S. dairy, and U.S. cars and car parts. But we have to be careful about believing the official rationale, because just before the proclamation came out, the complaint was that Canada needed to be punished for the Canadian wildfires, which is a hard thing to figure out how Canada should stop them. And I think we really have to recognize that this is happening against a backdrop of what is turning out to be a very contentious renegotiation of the USMCA, formerly known as NAFTA, trade agreement governing the U.S., Canadian, and Mexican trade relationship.
How big a deal is that in terms of the amount of trade between the United States and Canada?
People have calculated that it's about $20 billion worth of goods. That's not, a killing blow for the Canadian economy, but it is significant in and of itself. And I think the other thing, what is really important about this is it shows that this is going to be a truly contentious negotiation. It shows that Donald Trump wants to punish Canada, and Canada now has to decide how to respond.
Do we think it's punish Canada or use some leverage on Canada? As I understand it by reports, the United States is farther along with Mexico in negotiating on the USMCA than it is with Canada. I'm not sure Canada's engaged that much. Is it possible this is just a way to get Canada to the table?
I actually, David, agree with you about most things, but I don't think that's a fair interpretation at all. Canada has been ready, willing, and able to negotiate any place, any time. The U.S. did not have to impose tariffs to get Canada to negotiate. Canada wants to talk. Canada wants a deal. In fact, Canada has made a number of concessions, sort of bargaining against itself in advance, I guess, to show willingness to negotiate. Canada last year dropped the digital services tax. Canada has dropped most of its retaliation against the illegal and unjustified U.S. 232 tariffs.
So there you have it. We're all becoming experts on this. And of course, Chrystia Freeland already was. And you can catch the full conversation with David Weston. Bloomberg Wall Street Week starts 6 p.m. Wall Street time, as we say here on Bloomberg TV and radio. Extending our conversation now on tariffs, geopolitics, and diplomacy with a very special guest here in our Washington bureau today. And it's Ireland's ambassador to the United States, Geraldine Byrne-Nason, with us in studio. What a treat. It's great to see you, Madam Ambassador. Welcome to Bloomberg.
Thank you, Joe. Great to be with you.
Can I say right on the air, you throw the best parties in Washington, D.C. Not that I would be at any of them, but your residence and your embassy are very important venues for diplomacy and the application of soft power. Before I get to tariffs here, does Irish diplomacy work with the Trump administration?
I'd like to say Irish diplomacy works with any administration anywhere. We have been very lucky here in the United States over a very long time, 100 years of independence, to have good relationships across the aisle. And we work in good faith and sincerity with every occupant of the White House.
Well, I tell you, I want our audience to know a little bit about you, because we talk to ambassadors, but then there are career diplomats who are experts in statecraft, and you're one of them. You served as Ireland's ambassador to France and Monaco. Had to be the best job you ever had, but you can tell me about that later. You were appointed to Ireland's permanent representative to the UN, which we're going to ask you about. You secured a seat for Ireland on the UN Security Council, which was a huge deal for your country and for the UN. You spoke at the DNC in 2024, a speech that we all remember. And for one that's close to my heart, I just saw this on your wiki. You marched with Richie Neal and Holyoke Mass in the St. Patrick's Day Parade? No one knows where Holyoke is, Ambassador.
It's the center of the world on St. Patrick's Day, that's for sure. I've never seen the St. Patrick's Day Parade quite like it. Six deep on the deck chairs cheering on the Irish in Holyoke, Massachusetts.
Pretty remarkable. I'm sure the chairman, now ranking member, loved that. With everything that I just said here, you have been around the horn when it comes to diplomacy. How do you manage a cycle of tariffs that the president is announcing today? Does this strain the relationship?
Look, this is a challenging period for us internationally, but particularly economically. And no secret, Ireland, the European Union, doesn't think tariffs in general are a good idea. I just saw the latest news on tariffs as I arrived here to speak with you, Joe. Overnight, the administration had made an announcement around a 10% global tariff. And frankly, we in Europe welcomed that as good news.
Really?
That was positive. Last year, President Trump and President van der Leyen of the European Commission agreed an EU-US trade framework. And that set tariffs at a ceiling of 15%. So last night, when I saw the 10% announcement, I thought, that was good news. The EU would be below the ceiling of 15% tariffs. We know it may not be the end of the story, but it was positively received. just now there has been an announcement that links tariffs with a fine or a series of fines that have been applied in terms of the European digital markets. And that changes the conversation. It's disappointing.
Well, I'm going to ask you about that in a moment, because that broke since we came to air and since you've been in our bureau. So I want to be fair as we read through this. This Section 301 tariff that was implemented this morning is based on forced labor. Forced labor in the supply chain. Does the EU have something to worry about there, or how do you respond to that?
No, look, I mean, frankly, the rubric under which the decision was made, we would take issue with.
Yeah.
However, as I've said several times in any contacts I've had with US business, and I reflect Irish and European interest here, we want a stable, secure, predictable trade relationship with the United States.
Yeah.
The EU and the US trade over $4 billion a day. There are 4 million jobs that go with this relationship. 30% of global trade is between the EU and the US. This is in all our interest to stabilize it. So having that trade agreement and that framework makes good sense to us. The 301 was an instrument that I think this administration had to choose, since the court threw out the last instrument. We're not recognizing that it has any implications for EU policy, but the actual framework in terms of the tariff level, as I said, was broadly positively received last night.
He writes on Truth Social, the European Union is at it again. And it's important, we should note, by the way, that this is an important time for Ireland, as you currently hold the rotating presidency of the Council of the European Union. He's essentially accusing the EU of theft, robbing American companies. And to your point, it refers to the fines on Apple, Meta, Google, and Amazon, and others. He's announcing a 301 investigation into what he says the practice of robbing American companies and in turn the American taxpayer. How would you respond to him, and what do you expect this investigation to uncover?
Well, look, as you said, it's just breaking news, so I won't have a definitive response. It's disappointing given the overnight news. What I will say is what I think the president is referring to there is the announcement this week about a fine on Google for market practice under what's called the Digital Services Act. That's an act that is essentially about avoiding market abuse, protecting small and medium-sized companies or startups in a market where you have huge actors who may take advantage of scale. The other companies mentioned have previously been found by independent investigations, European courts, to have abrogated the rules in the digital European market. This isn't extraterritorial. This applies only to companies who come in and operate in Europe. They do that because it's profitable for them and because it's good for US business and for US taxpayers. You know, we do not discriminate. I think you will have seen last week there was a fine against AliExpress, a Chinese operator. European companies have been fined. It happens to be US companies that the president is referring to. It's non-discriminatory. The European Commission, Ireland, of course, has its faith and trust in the work it does in terms of managing the market. So we have no qualms, and we will hopefully get to a dialogue and to discuss exactly what the president means by this. The European Commissioner for Trade, Mariusz Sefcovic, works very closely with USTR Jemison Greer, and I'm sure there will be conversations very quickly today about that.
Yeah, wow, really interesting. I can't imagine you ever thought you'd have to be an expert on the tariff regime, but here we are. Could you work out a trade deal in our remaining moment with the United States at the Irish Open? This is going to happen at his golf club, right?
I'd have a good run at it, I have to say. Yes, the president's Doonbeg, beautiful golf course.
Will you invite him for
host that? The president has been invited to Ireland every year by the Taoiseach, and so we think he may well want to be on his own golf course. We have no confirmation yet, I look forward to being in Ireland around the same time as it happens.
Great, okay.
Great players like Rory McIlroy, Shane Lowry
Oh my
are
God.
going to be on the course.
You don't think he can resist being there for that? He's going to have
It's
to.
probably irresistible, but we have to see. We have to see.
Madam Ambassador, it means a lot for us to have you. I know you spent some time in our newsroom beforehand, and it's great to have you here in studio with us on Bloomberg TV and radio. I thank you so much. Geraldine Byrne-Nason, if you're in Washington politics, this is one of the folks you turn to at times like these for insights and analysis and soft power, as I mentioned. Ambassador, thank you for being a part of our conversation. I'm Joe Matthew in Washington. I'll meet you on the late edition of Balance of Power at 5 p.m. right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, you are watching across Bloomberg platforms, and this is Bloomberg Business Week Daily for this Friday. Carol Massar, Tim Stanovic, live here at Bloomberg headquarters in New York City on a day where markets a little bit of a mixed trade, kind of assessing some of the earnings we got overnight, assessing the war, and assessing another round of tariffs.
We're going to have more from Charlie Pellet in just a minute. The S&P 500 up 0.4% right now. The NASDAQ composite down 0.1%. The Dow down about half a percentage point. Oil, we did see Brent actually fall below $100 a barrel, about $96 a barrel right now. WTI at $89 a barrel. Still, Brent's up about 30% just this month, Carol.
Yeah, so a little bit of context, right, in terms of pressures. We're going to get into all of that. Hey, ahead this hour, kind of what is old is new again, kind of that kind of theme, if you will. So welcome back, tariffs.
I mean, very old if we want to go way back.
We just want to like kind of deal
right?
in the world of President Trump. Also, welcome back Intel, welcome back software despite AI. Of course, on tariffs, President Trump rebuilding levies with kind of targeting 60 economies. So we're going to get into that, what it means. There was also just about an hour ago targeting the EU when it comes to some big tech companies, again, under Section 301. So what you need to know, Mike McKee is here.
We also are talking tech, too. You mentioned we're talking Intel. We're talking AI, too. The CFO of Ford is joining us on why artificial intelligence can't do everything yet.
Exactly. Hey, the World Cup may be over. Yes, indeed. Yet the battle of the brands all over the players on and off the field, that continues. We're going to talk Adidas, if you were Matt Miller, versus Nike. So all of that to come over the next 60 minutes.
First up, a check of the day's trade and top business stories. Here he is. Hey, Charlie Pellet.
I thank you very much. We made it to Friday, and we've got some familiar themes for this equity market right now. Chip makers, they are declining today despite Intel's solid outlook. We've got oil retreating, and that is sending stocks higher. Let's begin with the Dow because the industrials are up 271 points right now, up by about 0.5%. S&P higher by 25 for the S&P 500 index. That is a gain of 0.4%. NASDAQ and the NASDAQ 100 index, however, they are both declining. NASDAQ down now by 0.1%. The NASDAQ 100 index down 0.5%. This after earnings from Intel. That stock down now by 4.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, it is down now by 3.1%. All of this with the VIX, Wall Street's fear gauge, just above 18, a 10-year at 4.67%, the 2-year 4.32%, and the 30-year 5.16%. Gold at $4,063 the ounce, up by about 0.3%. Crude, major story, down 3.3% right now, but holding right around $89 a barrel on WTI. Barrel of Brent just above 96.34 on Brent, down now by 4.3%. This time yesterday, we were talking about Brent trading above $100 a barrel. Chip makers, though, moving lower again. I mentioned the SOX, the Philadelphia Stock Exchange Semiconductor Index, down by 3%. Intel bears repeating, down 4.1%. Among other chip names, NVIDIA up 0.5%. We've got Micron down 6.1%, and Broadcom lower now by 2.2%. Recapping, S&P holding onto a gain, higher by 24 points, up 0.3%. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, let's get to it, folks. Deja vu all over again. The U.S. extended a 10% tariff baseline, hitting most major trading partners, prompting pushback from countries around the world while shoring up a protectionist wall that's been a top priority for President Trump despite its unpopularity at home. Man, like I said, deja vu. Weren't we here a year or so ago?
Yeah, we were. But this time it's different, we're at least told.
It is.
All right. There's a different legal challenge, too.
Yeah, and we should just kind of layer on top of this. President Trump, just about an hour ago, taking aim at EU funds against Apple and Google, threatening tariffs against the region. The president says the U.S. is starting a 301 probe into EU actions on U.S. tech. So there we have it.
Yeah, we got Mike McKee with us, Bloomberg News International Economics and Policy Correspondent. He joins us here in the Bloomberg Business Week studio. Mike, I have trouble keeping track of all of these. Fortunately, you're here to set us straight. People are familiar with the Liberation Day tariffs from last year, struck down by the Supreme Court. I'm still waiting on my refund check. I don't know if you've gotten yours.
No.
Okay. You haven't gotten yours yet.
You're not likely to get one. Don't wait too long.
Okay, we'll get to that. The new tariffs that were laid out yesterday, 4:57 p.m. Wall Street time. How are these different than what the president did last year?
Well, the president did the Section 122 tariffs after the Supreme Court struck down his IEEPA tariffs, which gave him the ability to do 150 days of tariffs at 10% around the world. And that expired at midnight last night. So today they announced these new Section 301 tariffs, which is basically an effort to recreate the tariff levels that they already have. In this case, they're arguing Section 301 allows tariffs on national security grounds, or if the U.S. is party to treaties and people are not keeping up with the treaties. And it's kind of that part that it falls under, because the U.S. is accusing these countries of either using forced labor to produce things or not policing the companies that they're importing from. And so then they've levied 10% to 12.5% tariffs on these people, which is the same as what we had before with the 122s. So it doesn't change the tariff level, maybe a little bit for some companies, but in general keeps tariffs at about where they are.
It's just a different justification.
It's just a different justification that they hope will be legal before the Supreme Court. But while you were talking, we just saw a headline that some companies have already filed suit against the president on those tariffs, arguing that they're just an excuse for the tariffs that were already struck down as illegal by the Supreme Court. So we're back where we were, as Carol was saying, the deja vu all over again. And now we have these other threats today on from the president on the 301 tariffs, arguing that it's not fair to American companies that the EU can fine them for breaking EU law. Yet,
some would say if the U.S. felt foreign companies were breaking the law, right, we would do that.
Well, of course.
We would impose fines.
Of course.
Okay.
But you're trying to be logical.
Okay.
What are the? I mean, is there does it stem from forced labor in China? Is that where all of this stems from?
Yeah, what is that about?
No, not necessarily. I mean, there is, and Bloomberg's done some award-winning reporting on this. Forced labor, basically slavery, around the world in many, many, many countries, particularly in Southeast Asia and some in Latin America, where and Africa, people are just forced into producing for workers, and it can be actual slavery where you're imprisoned and you're made to do it, or it can be economic imprisonment, basically.
But are there? I mean, is it legitimate? Does the U.S. have a legitimate way of actually proving that these countries are doing business with companies that are using forced labor?
With a 301, you have to do an investigation, and so the administration has a written justification for these countries. Now, I would put some of it certainly under stretching the law as far as it will go. The United Kingdom, for example, or Canada, but there are some legitimate uses, and so we'll have to see how legally this all plays out. But what's happening is the president is using these, and he's going to put the tariffs in place, and they will be in place while whatever legal battles go on.
So essentially a mechanism for imposing these tariffs while everybody figures out really what he can or can't do.
Right.
Essentially.
Right.
So the Supreme Court ruling, like you brought this up because you've been talking with some of your buds or last night, who were like, how can the president do this, right? With coming after the Supreme Court ruling. This is just a reminder that he has different levers he can pull.
There are different levers, and there's a lot of disagreement about which ones are legal. And the court basically ruled in the IEEPA case, the very first Liberation Day tariffs, that Congress didn't give him the right to impose broad-based tariffs like that. That what Congress did was say the president could impose tariffs on case-by-case basis when there are obvious violations of U.S. law. So there's some grounds maybe to look at this broad 301 effort today as also problematic for the president, but it's going to be up to the Supreme Court to decide.
And what would the timeline on that potentially be?
Well, you're going to be talking probably sometime late next year, if then.
Okay, so let's push forward to the Fed next week and sort of the inflation.
Well, let me just mention one thing. There's another 301 in process for overproducing goods, which is similar to the idea of the dumping that countries are doing. And that one the president may add on to the tariff levels So we may see tariffs go up
A little
from the
bit.
10 to 12% range, even higher.
So are tariffs inflationary?
They are, but not to the extent that we thought they would be, in part because the world has changed, but in part because a lot of the people who were tariffed, the businesses doing the importing, absorbed some of the tariffs. And then they were working off of inventories that they'd stocked up on because the tariffs were coming. So the price changes didn't hit people all at the same time. Now, you saw today that Qualcomm said they're raising their prices by double digits. So maybe we're going to get a bit more of a reaction now, but in the grand scheme of things, they weren't, to take it back to where you want to go, they weren't the kind of level of inflation that the Fed would worry about at this point.
But with Qualcomm, that would be like what Apple did as a result of memory prices, right? Not
Yeah, that
necessarily
falls under the category of
as a result of
supply and
tariffs.
demand. There's more demand than there is supply for AI goods.
Right.
And that's something the Fed mentioned at their last meeting that they were concerned about in terms of inflation.
30 seconds, something really important before you leave. Most read or among the most read stories on the Bloomberg, LeBron James, a Laker no more.
A Laker no more. His contract is not going to be inflationary because he took a very low payday in order to join the 76ers, and hopefully he leads them. Hopefully he says he leads them to another championship. I'm sure anybody who doesn't live in Philadelphia doesn't have the same hope.
Yeah, I know we have some folks on our team from Philadelphia, and they were pretty happy, I think, about this. Mike, thank you so much. Really appreciate it. Bloomberg TV and Radio International Economics and Policy correspondent Michael McKee. All right, now let's get to the comeback kid, and by that we mean Intel.
Yeah, Bloomberg's Ian King writing, Intel's long-awaited turnaround is in progress now that the AI data center boom is fueling demand for its chips. And yet Intel shares, they actually reversed an initial advance that came after the company's third quarter forecast was much stronger than analyst expectations. Those results, Carol, highlighted both the durability of AI demand as well as the success of Intel's turnaround.
All right, we want to talk about that also. We just talked about with Mike about President Trump out on social about EU fines against Apple and Google. Let's start, though, with Intel. Stock certainly has pulled back from highs that we have seen earlier, certainly overnight and earlier in the session. Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, is with us, joining us remotely in New York. Mandeep, Intel shares, you were with us. They rallied more than 12%. Following results. You were here with us. Shares coming back down to earth here, and they are lower as we speak. Post the Intel earnings call, what did we learn? Anything here change your thinking about the results?
Yes, I think the server side obviously was quite refreshing, that fact that they are under shipping demand. But on the client side, that's where the memory prices probably will have a bigger impact in the second half. And that's where I think Intel tempered expectations for how much that client side is going to grow in the second half. And the other thing I would call out is just the CapEx expectations. I mean, they talked about ramping up foundry and yields getting better, but when it comes to financing some of that foundry expansion, it wasn't clear that they have the balance sheet to do it, and if it will involve some sort of equity financing. I think the financing aspect wasn't clear if they were to raise their CapEx, and that's where I think there was some nervousness around what this means to Intel's balance sheet.
Mandeep, we're going to talk about the week that was when it comes to tech, but before that, and kind of related to that, we did hear from Alphabet, and certainly concerns about Alphabet's CapEx and people thinking, okay, well, how do we add that into the picture of how all these companies are spending on CapEx for AI demand, and then also the backlog there and looking at AI demand. Did we get anything from Intel that makes that picture any clearer?
I mean, right now, it feels like every company has to raise their CapEx simply because all the components are getting more expensive. In fact, if you're not raising CapEx, in my mind, that is a sign that you are cutting back somewhere else. And so the fact that Alphabet raised their CapEx by 4% for the full year 2026 is a sign that they are actually taking in the memory prices into account and not curtailing anywhere else. And same thing with, I would say, even Intel, things are getting expensive for them in terms of making those investments. So it's a good sign that these companies are staying on track when it comes to taking the component price increases into effect, and they're not holding back in terms of cutting somewhere else. So I view it positively, personally, in terms of this overall AI infrastructure expansion.
Right. If you're looking for signs of optimism, it's not just about growing backlogs and other things, but it's if you are willing to raise prices and still keep on spending. You wouldn't do that unless you felt like the momentum's going to continue for longer, correct?
Exactly. And look, Alphabet did give us a proof point in terms of their cloud growth of 82% and margins expanding to 36%. Yes, near term they may come down, but that's for a different reason because they're renting from third parties. And so everything, every data point that we gathered this week at least was positive. Obviously, we'll find out next week if the same holds true for Microsoft, Amazon, and others. But the narrative so far supports the AI infrastructure expansion as well as the ROI you are seeing on that investment.
So, okay, let's talk a little more about the big picture and kind of the week that was. We'll if we have time, we'll get to the president's view on tech and tech with regard to Europe. But given that we have 4 more of the Mag 7 next week, Mandeep, we'll hear from Apple. I'm trying to understand the big picture of what we learned this week and what we need to be prepared for next week.
I mean, 2 big things. One is obviously the cloud revenue comparison. And now that, $1 run rate and the backlog that they have shown 500 plus billion. Now, Microsoft will be measured to that bar in terms of whether Azure growth is 40% or 45 or 50. Same thing for Amazon AWS. Is it going to be 30 or accelerating sequentially? Because I think everyone is expecting to see ROI on this big spend in the cloud numbers for sure. Meta, it will be different because they don't have a cloud business, and it'll be interesting to see how they talk about that on the call in terms of what they plan to do going forward. And Apple, to my mind, they are another case of a company that is facing component price increases that, I mean, if I were to contrast them to Intel, which said second half, consumer PCs may actually slow down because of the demand destruction tied to higher memory prices. The same thing should be applicable to Apple. So it'll be interesting to see what they end up guiding to for the second half.
Hey, 30 seconds. Anything we need to know about the president here out on social about EU fines against Apple and Google and looking to kind of go back after the EU? I mean, these nations have a right to oversee these big companies that operate there. Just got a few seconds, 25 seconds.
I mean, very supportive of big tech, both on the EU side as well as the open source models and how they are looking to scrutinize them. So overall, positive for big tech companies in terms of the support they're getting from the administration.
You're amazing. We owe you like an Apple basket or a box of chocolate or something. Mandeep, thank you for always being there for us. Mandeep Singh, Bloomberg Intelligence Global Head of Technology Research. Coming up, we get a view from the CFO suite. We do, right?
We do.
Maybe both.
We get a view, and we also always love when Mandeep joins us. That's next.
We do.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks lower. Stocks trading mixed right now. Oil is trading lower. West Texas Intermediate crude 89.24 a barrel, down now by 3.2%. Barrel of Brent 96.73, down by 3.9%. S&P up 13, up 0.2%. We've got the Dow up 222 points now, up 0.4. Nasdaq lower by 90. Nasdaq Composite now down 0.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down 3.6%. Intel weighing on the index. We've got Intel shares after earnings now lower by 5.7%. 10-year at 4.67%. The 2-year 4.32%. Spot gold up 0.2%. 4,059 the ounce. And again, West Texas Intermediate crude down 3.2%. 89.23 a barrel. Price hikes at Qualcomm, the biggest maker of smartphone processors, plans to increase prices by a percentage in the double digits. It's a move that is likely to ripple through much of the tech industry. Qualcomm shares, they are trading lower. Qualcomm down now by 2.1%. Recapping, S&P 500 index higher by 14. The NASDAQ 100 index down 0.8%. And right now, we've got West Texas Intermediate crude 89.20 a barrel, down 3.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, Carol, and Tim. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stanovic live here at Bloomberg headquarters in New York City. So we love to check into the C-suite, and we're going to do that in just a moment. And this next company, what's really intriguing is that we've talked a lot about AI and the impact on software companies in particular and the SaaS environment. Bloomberg reporting this week that OpenAI is set to announce that it now has 10 million people using 2 of its agent products, Codex for coding and ChatGPT work, for a wider mix of tasks, nearly doubling usage from earlier this month.
In addition to that, just today we learned that Anthropic is rolling out a new AI model. It's meant to handle workplace tasks adeptly and affordably. It's a key selling point as some customers grow more cost conscious, and competition is going up from China. A number of AI developers, including OpenAI, Meta, SpaceX AI, are now competing to offer more cost-efficient AI models as businesses increasingly scrutinize their AI spending. Some customers, Carol, have recently imposed tighter limits on employee AI usage after being hit by sticker shock. This is the, should I say, token minning versus token maxing?
We've all been reading all of that. We're having some technical problems, so we're hoping we can work them out because we want to get into this discussion in just a moment. In the meantime, let's just do another check on the market so that we can then get to our guest and our own Nina Trentman, who is in studio with us. We're looking at a market, a bit of a mixed trade right now, just up about 14 points on the S&P. Dow definitely higher, up about 0.5%, but we are seeing some pressure on the NASDAQ 100. It is down about 236 points, down 0.8 percentage point.
Yeah, taking a look at the NASDAQ 100 right now, the stocks that are in the NASDAQ 100 that are making the big moves today and that are weighing to the downside. Some of those neo-clouds like Nebius Group down 11%. SanDisk, there's a little bit of a decline in the memory stocks that we're seeing today. SanDisk down a little more than 10%. CoreWeave down 9.2%. We do see some software stocks, though, higher, including Adobe up 6%, Workday up 5.5%, and Intuit up 4%.
All right, so what's interesting, too, is we're coming off a week where we're getting ready for another week where there is going to be some big earnings. We're talking about 4 of the Mag 7 next week. So you've got Meta Platforms, you've got Microsoft, you've got Amazon, you've got Apple. Not all the same kind of company, each of them kind of with a different AI story or AI-related story, but nonetheless, it'll be really important because so much of the market momentum over the last few years has become or because of these big tech companies.
Yeah, and interestingly, if you look at the Mag 7 and the companies that have done the best so far this year, Apple's actually the one in the lead. Shares of Tesla are in last place, having performed the most. And a couple companies in there are pretty much flat on the year. Alphabet, as of yesterday, was one of those.
All right, so we do want to get to our next guest, and we are delighted once again to get a check-in on the C-suite. As we mentioned, one of the things we find fascinating is that generative AI market, an agentic market in particular. Bloomberg Intelligence has really been focusing on that and how much that will grow, projecting it to grow to 2.3 trillion by 2013. That's the global generative AI market. And a lot of that is because of the rapid proliferation of autonomous agentic systems in enterprise workflows.
Our next guest company has its own agentic offering, supply chain agent, merchandiser agent. With another edition of the CFO briefing, we welcome Gordon Pothier, the CFO of Board. It's a privately owned AI continuous and enterprise planning platform. Gordon joins us from Boston. Also with us, the leader of our CFO coverage, Nina Trentman, Bloomberg News senior editor. She's editor of the CFO Briefing newsletter. You can subscribe to it at bloomberg.com/CFO-briefing.
We have a lot of questions, but I got to say, before we get going, Gordon, would you just kind of lay out what you folks do? Because mentioned that you guys are an AI continuous and enterprise planning platform, which for those in the industry will know what that is. But if you could just lay it out just briefly, and who are some of your big customers or your typical customers?
Yeah, absolutely. And thanks for the opportunity here. So at the highest level, Board is an enterprise planning platform. Realize that sounds pretty generic, right? So I like to think about us as an operating system for enterprise planning. So instead of companies using separate tools for budgeting, forecasting, reporting, operational planning, we bring that together in one platform. We're a system of record, which is very valuable for many of these companies. But we use AI. We just released AI agents recently, and this is really to help support the planning process. It's not really to replace what we do. It's really to help accelerate and support it.
Maybe to follow up here, Gordon, thanks for joining us again. You and I talked about AI and the meaning for your business. You talked about it as a challenge and opportunity at the same time. I'm curious, talk to us about how you're talking to customers about AI and how that fits with your existing business. Like, do you still have a business?
Absolutely. And we certainly believe that we do. I think the conversations we're having right now, I would say, even if a CFO doesn't necessarily believe that AI will replace their planning platform, they're obligated. I'm obligated to ask those questions. My CEO is asking, my board is asking, what can we do here? So the conversations we're trying to have with our customers are really around what are they trying to accomplish? Most of our customers are running sophisticated businesses. They're often global, often public companies in retail, manufacturing, consumer goods. Again, they need a system of record that they can rely on. They need governance around that. They can't have one answer today and a different answer tomorrow because of the way the LLM is responding. So for us, it's very much trying to make sure we're aligning with their expectations, providing that system of record, but with AI agents as a helpful tool, as an accelerator, but not as a replacement.
You know, I don't mean to pick on a company like Salesforce as this example, but it's down more than 50% from all-time highs back at the end of 2024. And a lot of people are using this company as a poster child for the so-called SaaS apocalypse and the idea that, you know, we're going to be able to code something or vibe code something that replaces seats that someone would buy from one of Salesforce's many software as a service products. Is the public market, are stock investors getting this story wrong in your view?
I don't know if they're getting it wrong. I think there is an element of hype, and I think there's an element of just acceleration of where we are today, and maybe where we may be in 5 years. But you know, again, and I think it does depend on the company profile too. If you're a small mom and pop shop, maybe that's possible. But if you're an enterprise class business, if you're a public company, if you're running a sophisticated organization, I don't think a vibe coded solution is really going to provide what you need that's supportable, sustainable over time as your business changes, as you pull in an acquisition or not. It just, there's a lot of complexity that goes into what a company like Salesforce has built.
And just to follow up, is like in terms of conversations with your clients, is this something that you have to argue as board, saying, well, actually, you can't just replace us with AI or an LLM, but this is why? Or is it not really coming up with customers at this point?
I would say it's coming up, not at the argument stage yet, but more at the exploratory. Why should I renew for 3 more years? Isn't this going to be replaced? You know, some of those exploratory conversations. And again, we're happy to engage with those. I think for the most part, the companies that we're dealing with, they get it, but they want to understand. They want to test that theory. They really want to make sure that they're thinking about it the right way. And we feel like we have a really good conversation to have around that, around the sustainability of a platform like Board.
Not argument, but exploratory. Do you anticipate it's going to get to the point where it is more argumentative?
It's a good question. I think it depends. I think even 6 months ago, I think the expectation around what was possible has even changed. In the last couple of quarters. I think one of the things we talk a lot about, we talk a lot internally about, is the concept of just because AI can do something, should it do it? Should you put the reliance on it? In your last segment, you were talking about the cost of tokens. Do I want to put something that I can do some other way? Do I want to put that dependency on AI with the potential for my cost to go out of control later on? Those are questions that we need to be thinking about as well. So it's not just the pure capability, it's the should we go down this path?
I mean, you're a CFO, right? You understand that you look at the spend on CapEx, whatever it may be, and you want to see that ROI. You get it, right?
Of course, yes. And this is internally, we're very much in this stage. We went from this, let's roll it out, let's get adoption, let's make sure that we're using these products now, to let's justify the business case. Let's really understand the ROI. Can we measure it? And again, just because we can measure it, do I want to be thinking about this in a year or two now? Will I think about this in a year or two the same way, based on how the costs are trending?
Gordon, the company is still privately owned. You're owned by a European private equity fund. With the IPO markets being pretty strong right now, I'm wondering how the company thinks about its journey forward. Do you expect to remain private? How much are you thinking about IPO readiness at this point?
Yeah, Nina, like we talked about in our earlier conversation, right now our path really is to continue as a private company. But the way we operate internally is very much from that public company mindset. So we really hold ourselves to strong quarterly milestones, our ability to run a predictable business. We're just in a fortunate position right now where we're very aligned with our PE owner, Nordic Capital, around the direction of the company. And it's really to build a good, strong, sustainable company, continue our expansion path. We're profitable. We don't have a forcing function. We don't need to go raise capital right now. So it's a fortunate position for us to be in. So we can focus really on driving the business. If things change down the road for us, we may consider that opportunity to go public.
But is there a chance that you may never go public? You may stay owned by private equity. You're generating cash.
It's
you're
very
profitable.
possible. It's very possible. And I mean, the liquidity markets are, the private liquidity markets are very strong, can be very strong, maybe not right now, but I think there's many options. I think we'll consider all of them. But again, really with the focus of how do you build a good, long, sustainable business?
Gordon, you talked about the expansion of the business as one of the things that you're currently working on. Talk to us a little bit about that. You originated in Italy, but the US is now a very important market for you. What does that entail in terms of next steps?
Yeah, so the history of Board is interesting. It's very much a European history. Our strongest and largest markets are still in Europe, in Italy, France, Germany, UK. And we're actually seeing our best growth continue out of those markets. The US market, the North American market, is obviously the biggest addressable market for us. We're in the market. We've been in for the last couple of years. It's a very competitive space, but we continue to push the growth in those areas. We're trying to do it on our own as well as through partners, which have tremendous influence just in the office of the CFO.
Yeah, I was just wondering, because you did a deal in 2024 and acquired a company, wondering, do you see that growth through partnerships and organic growth, or could you also do more deals?
Both. We're certainly, I would put us in the opportunistic category right now as it relates to acquisitions. I think if something comes along that fits with us, that expands our core platform or allows us into, to better get ourselves into the US market, we would definitely look at it. We're not necessarily running processes, but we're definitely looking as opportunities come up for that, for those acquisitions.
So, you come to a company, you came to this company as CFO about a year ago, I think a year in this coming August, mid everything that was going on in AI. When you came in, did you anticipate kind of some of the challenges of AI, at least, or the speed or pace that these challenges are kind of coming at companies like Board and others? And how much has kind of it changed since you came on board almost a year ago? Is it all kind of happening so much faster?
It's a great question. It feels like a very dramatic change, even from a year ago. So I feel like today we're living in just a very volatile time as businesses and as CFOs trying to deal with this volatility. You talked about tariffs earlier, right? I mean, all of the things that are coming at us, including AI. And I think somehow we as CFOs need to balance the short-term pressure to adopt AI, show ROI and cost savings, but also with our long-term fundamental beliefs on how to scale the business. And sometimes they may marry up, and sometimes they may not. But it's a volatile time for sure, and I don't see it ending anytime in the near future.
I'm curious, Gordon, how Board's clients are doing right now. You've got a great view into what these companies around the world are doing at any given moment. We mentioned some of the companies. Others include H&M, Burberry, Toyota, Coca-Cola, HSBC, and others. What can you tell us about what you learn about the macro just by understanding what your customers are doing on your platform?
Yeah, it's a great question. It's interesting because, at Board as a software company, we're not necessarily affected directly by some of these larger economic factors, but our customers certainly are. It was tariffs last year. It's potentially tariffs again. So what we're seeing through them is more scenario planning, more capability to understand how to deal with that volatility. Also looking for ways to trim costs, right? So, and that's where AI, I think, can be a benefit, or maybe not. But they're looking to us for help. One of the unique differentiators we have through that acquisition we did was we actually can pull in macroeconomic indicators and allow companies to use that for their forecasting. So that's a nice benefit we can offer our customers, so they can maybe look just outside of their own walls around what else is happening, and ultimately how can they best react to those changes.
Gordon, I know many companies these days are very careful about spending. They're scrutinizing not just AI tokens, but also other licenses, software packages that they spend on. Are you impacted at all? Are you seeing companies clamping down on spending for Board services, or not so much?
We're fortunate that we have very high retention rates and we're a very sticky product, but it doesn't mean we're immune to the questions and the pressure. Companies, we're doing it internally at Board. We're trying to renegotiate some of those contracts. How can we bring down the cost here so that I can go fund my AI investment? So we're definitely seeing it. We've been managing it well so far, but we don't take it for granted. We work very closely with our customers to make sure that they're seeing success and they will continue to be long-term customers.
We have one more question here for you before we have to wrap up, Gordon.
Yeah.
Just wondering, from a CFO perspective, one thing that I'm asking a lot about in recent interviews is how do you keep an eye on AI costs as a CFO yourself? Like, how do you manage the fact that tokens are expensive and people tend to go through them faster than we all thought? Is that happening at Board?
It definitely is. We've got some pretty detailed tracking around not only the token usage, but also the other tools that we're bringing in to help with our AI story. So we're managing it at a functional level, trying to balance, adoption, like I said before, with ultimately just good cost control. And some of it goes back to, again, just because we can do it in AI, should we? So we're asking those questions and trying to make sure we have a good answer on the other side.
Anybody get cut off?
Not yet, but we're definitely starting to. The ceiling's coming down for sure.
Cheryl, your AI stopped working, right?
No, it's funny. It's a conversation I'm increasingly having with lots of folks about that this is just not going to be open-ended because there is a cost to it. Gordon, really appreciate it. Take care, be well, and have a great weekend. Gordon Pothier, he is the CFO of Board, joining us here from Boston. And of course, our own Nina Trentman. Nina, thank you so much. She's Bloomberg News senior editor of the CFO Briefing newsletter. You can subscribe to it at bloomberg.com/CFO-briefing. New one comes out every weekend.
Hey, in just a minute, we're going to speak to the battle of the brands. Adidas and Nike, the World Cup, and life on and off the battlefield. and the field. That's next.
I believe
First,
it's
though,
Adidas.
Adidas. Yeah. First up, though, a check of the day's trade and top business stories. Charlie Pellet is standing by. Hey, Charlie.
Hi, thank you very much. And here's what's going on. Interesting day for the equity market. You got the Dow higher right now. S&P has just turned negative. Yes, down 6 points right now, down by about 0.1%. But you dig beneath the surface, you check the S&P 500 index, and we can see the 364 members are higher right now, 139 lower. Bottom line, though, the S&P down 4 lower, little change, down under 0.1%. NASDAQ 100 index, they are both in the red. They've been lower all day. NASDAQ down 174 right now, down by about 0.7%. NASDAQ 100 index trading lower by 1.1%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down by 4.4%. This as Intel tumbles 6.3% now after earnings. The Bloomberg Mag 7 Index, ahead of a couple of key members reporting next week, Amazon and Apple among them. Right now, the index is down by 0.1%. The SOX down 4.3%. The 10-year, 4.68%. And the 2-year currently yielding 4.32%. Spot gold, meanwhile, up $4 the ounce. Little changed, up 0.1%. $4,053 on gold. Crude, big story today. WTI, 89.16 a barrel. It is down 3.3%. Brent crude, 96.52. Barrel of Brent down 4.1%. This time yesterday, we were looking at Brent crude trading above $100 a barrel. Bitcoin down 1.6%, 64,083 a token on a Bitcoin. Earnings news. Verizon reported mobility and broadband sales that exceeded Wall Street's expectations in the second quarter. Shares of Verizon today, they are higher by 4.9%. T-Mobile reported yesterday. That stock up by 6.3%. Earlier in the week, we heard from AT&T. AT&T shares up now by 4.6%. Also out with earnings, American Express, it reported this morning. Shares are down 5.3%. Now, Amex said second quarter expenses surged 12% as the company spent more money on marketing to attract and retain those premium cardholders. Again, right now, American Express trading lower by 5.3%. Some of the other stories that we're following today, as I mentioned, the price of crude oil, West Texas Intermediate crude down 3.2% right now, 89.23 a barrel. We've got the oil majors trading mixed. ExxonMobil down 0.1%. Chevron up 0.3. ConocoPhillips up by 0.1%. Tim and Carol, that is a Bloomberg Business Flash.
All right, Charlie, so appreciate Charlie Pellet, of course, with an update on the market. So not what he dreamed of, and you can kind of understand why. And I mean,
it's not because he was a Messi fan.
No, it wasn't about that. I mean, for a sportswear and sneaker company, if you're Nike, having its teams fall short of the World Cup, it's kind of a bit of a bummer, especially falling short of the final. All of it, both teams, not there. None of your teams, none of your jerseys, none of your iconic logo out there around the world where billions were watching.
What about the cleats?
Not there.
Okay. Yeah.
No. Nil.
That's yeah. All right. In the FIFA world, I'm like, you've got the lingo down, Carol. Just wait 4 more years, and then you'll be able to say nil again. Well, the story is really about Nike versus Adidas.
Yes.
We've got Bloomberg News retail reporter Lily Meyer on set with us. Tell us about the Nike soccer boss and his disappointment about what happened over the weekend.
Yeah, so the Nike head of soccer messaged employees and basically said to them, thank you so much. This was great, but it's not the result we dreamed of. And as you said, they weren't in the finals. So, yeah, another 4 years and another year until the Women's World Cup.
How big of a deal is the World Cup for Nike?
It's a huge deal. I mean, I think right now every sporting event is an opportunity for Nike to prove to the market and to shoppers that they're dominant. And so I think it's another opportunity where they didn't shine.
Who would you say? I mean, you think back to like the teams that were in it. Adidas was a huge winner, of course. Also Adidas with the soccer ball, the World Cup ball. Mm-hmm. Where else did Adidas win and Nike lose?
I think another big moment this year was the London Marathon. So Adidas had 2 runners who beat the 2-hour goal, a goal Nike had been chasing for quite a while.
I mean, Lily, is it just a case of you win some, you lose some? I mean, I'm sure there's moments we know where Nike's just been plastered, somewhere in a tournament of some sort along the sports universe. Is that just what it's about, or is just Nike having trouble lining up with the right teams, if you will, and kind of staying very relevant to a population that they hope will buy their stuff for years and years.
Yeah, I mean, I think it's a mix of both. You know, Nike obviously can't control what the players do on the field.
Right.
That's out of their scope. But I do think it's a moment where, as a sportswear brand, you want to shine, and it's a missed opportunity.
You've been doing a lot of writing about Nike. And to be fair, we've been talking a lot about Nike with our Poonam Goyal of Bloomberg Intelligence. And, you know, just following this, I mean, we got earnings earlier this month. Executives gave a cautious outlook. They warned about elevated consumer anxiety. So once again, you know, we know Nike's been working on a turnaround. They've got a new CEO. Why is this turnaround so tough? Is it just a big ship to turn and kind of move the needle?
Yeah, I think the ship is a great analogy. I think Nike's a huge company. There are lots of areas that need to turn around. I think some areas like running in North America have shown progress, but I think others have been more persistent challenge areas for Elliott Hill, their CEO.
Well, speaking of executives, I'm actually getting some IBs from Tom Thornton over at Hedge Fund Telemetry right now. He says he's long Nike. He reminds us that a new CFO starts next month and comps are going to get easier. This is what he certainly thinks. What's the street saying about what Nike can do? I mean, we went through some of these numbers a few days ago. It has been such a challenge for this company. I mean, yeah. I have a couple friends who worked years. They live in Portland, worked for years at Nike. Both of them did, the husband and the wife. One of them left. The other one took a buyout.
Oh,
Neither
really?
of them are there anymore. These were like Nike people for life. I mean, it has completely changed.
Yeah, I mean, a lot of executives departed during the John Donahoe era under the former CEO. There have been a lot of layoffs and changes and reorgs. So I think, but you know, on the positive, employees really respect and admire the new CEO. I think there's still some hope that he has what it takes to bring it back. So.
Yeah, I mean, I don't know. You know, you also had another story I just want to throw on top
Shares
of
down
this.
about 50% since he's been there since October 2024.
I mean, it's a rough chart. People on radio can't see it, but it's kind of not quite a ski slope to the downside completely. But overall, it's also falling off a cliff at one point and then coming back and then going back down.
Let's keep going with that metaphor and talk about ACG, all conditions gear, because that is a big bet that they're making when it comes to mountaineering, when it comes to climbing, when it comes to trail running and just being outside. Has that panned out?
Yeah, I mean, they used the Olympics to relaunch ACG.
Which is funny because that's not really an Olympic thing.
Yeah, I think it was kind of like the Milan, Italy, Alps
and I guess,
moment,
skiing
outdoor.
and being outside.
Yeah, exactly. Okay. So, but it was super present during the Olympics. I think, you know, it's more present in stores than it was. They did a huge relaunch. I'm not sure we've gotten enough information to tell whether it's really had an impact yet, but I'm curious to see more about the impact of ACG. Clearly, it's something they're investing in.
So what about, we've got about 45, 50 seconds. You also put a story out earlier this week, Nike ending online sales agreements with potentially hundreds of distributors in China as part of a sweeping effort to revive flagging sales in the region. Just real quickly, how does that move the nut?
Yeah, I think that's something really interesting that came this week. China has been one of the areas that continues to decline, has really not turned around. And so Nike is saying, you know, we're going to invest more in our own stores and our own channels, and is pivoting away from some of those online retailers in China.
I mean, iconic brand. You think about brands that are out there, right? And logos, but it is interesting to see some of these brands that have been around for a while still have some issues and some troubles.
Listen, in the 7-year-old demographic, I'll tell you that they know about Nike and Adidas quite a bit. If it's got a Nike swoosh on it or the Adidas logo,
that's why I say
the kids want it.
A younger generation,
like
they go for it. Lily, thank you. Appreciate it. Lily Myers, she's Bloomberg News retail reporter. Be sure to check out her reporting. It is on the Bloomberg and at Bloomberg.com. Hey, folks, counting down to the close. When we come back, we've got to check on stocks on the move. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're headed towards the last hour of trading on this Friday and for the week overall. Carol Masser, Tim Stenovec live here at our Bloomberg headquarters in New York City. So what do we got? Flat on the S&P, not even down. 0.01%. We call that unchanged. Yeah, the Dow is definitely higher here, just up about 1/3 of 1 percentage point. NASDAQ 100 giving back about a 1% in today's session. It is down about 305 points. We're kind of near our lows of the session, especially when it comes to the S&P and the NASDAQ 100. It's been a lot this week, but I think everybody's waiting for it next week now.
Yeah.
Fed meeting and a lot of big tech earnings.
Okay, that's part of the story. Other part of the story is the 2 weeks of renewed fighting between the U.S. and Iran and what has happened to oil prices. Brent is up 30%, the international benchmark, just from the start of this month. We do see Brent down right now by about 4% and WTI down by about 3%, but still on the year, both of those up over 55%.
Yeah, I mean, if you look at the most read stories, President Trump seething as the Iran war spirals anew with no end in sight. You've got the president rebuilding tariffs with new levies on 60 economies. And so there is a lot coming at investors. There was also President Trump out on social about President Xi and talking about not giving weapons to Iran. Like there's just so much coming at investors that I think raises a lot of questions about what comes next. But we'll keep an eye on it for you.
Well, we're also keeping an eye on stocks on the move. I'm Tim Stenovec along with Carol Masser. Let's take a look at some stocks on the move today. With us is Bloomberg News Markets Live strategist Tatiana Dare with today's stock movers. Hey, Tatiana, what's on your radar?
Let's start with Intel, because what a sharp turnaround, what a sharp reversal for this stock for what really was a blowout report, right? Earnings double the forecast, guidance above expectations, sales for the AI data center segment surging 60%, all around good news. CEO saying demand for CPOs is taking off. Well, the investors are not really rewarding that, and you have to ask yourself why, and then you sort of zoom out the chart and you see that the shares price has absolutely gone parabolical this year.
Right.
And that set expectations very, very high, obviously. And we looked among other AI giants, its valuation, it's actually the highest among some of the big AI players, and forward PEs have jumped more than 100%, or rather more than 100 just last month. So that just tells you how hard the earnings bar for this company is and why explosive price gains can be problematic.
Yeah, I mean, it's an unbelievable story in terms of Intel, right? And we continue to keep an eye on it. All right, so there's Intel. Let's go to another tech name that we talk about a lot, Oracle. Ticker is ORCL.
Oracle shares down 3% there, also on good news. The company got a 10-year software deal with the Pentagon. The contract valued at over $3 billion for the first 5 years. Over 7 of options are exercised. And this is a company that can certainly use some good news given its steep underperformance.
Stock is down 3%
this year and this week. And 38 there just year to date, and heavily underperforming, the Magnificent Seven and the market. But it looks like the stock just got dragged into this broader tech route. And the fact that it is actually underperforming the Magnificent Seven today and the software baskets, which are all higher slightly, tells you that this is all about the health of those balance sheets. It's all about the cost of AI spending, which is really, really concerning investors.
I mean, it's a little wild. If you just look at the 1-year chart for this company, Carol, you and I were on the beach when Oracle reported results last September.
Yes.
We were on the beach for work.
You're talking about, Huntington, right?
We were in Huntington Beach. And shares spiked up to $324 a share. They're down now to $116 a share, down 64% from then.
Yeah, it's unbelievable, bouncing around here. But it's a story that we've been talking about a lot, certainly when it comes to the SaaS companies and so on, right? Well, they're more like...
Yeah, no, well, it's also
not
just,
really SaaS, but...
And there's the debt question, too.
The debt questions.
Yeah.
Okay.
All right, one thing you don't need on the beach is a parka from Canada Goose.
Exactly, that
Not
cost
yet.
$1,000 too.
Yeah, exactly.
The maker of those parkas, Canada Goose, down about 4% here after a downgrade from Williams Trading to sell, anticipating great risk related to President Trump's
50% tariffs on some Canada goods that is expected to come into play here in August. The analyst there is concerned that the company might pull forward guidance because of that risk, noting that over 25% of its revenue come from the U.S., so it's a great risk for revenue. Well, for what it's worth, the company did guide for low single-digit growth in May. So at least we have that, and it's reporting next week, so we will find out. But the tariff question is starting to come back for some of these companies, particularly acute for the likes of Canadian.
Those jackets are made in Canada.
Yep, that's why they're called Canada Goose. The winter jackets, by the way, are already out at Bloomingdale. So I'm just next to the bathing suits. I'm a little confused.
I think there are some companies that we know have different names that are where they're named. Where the products are made.
Order submitted.
Okay, but this one actually made.
Like, remember, President
Order
Trump's ties
submitted.
Yeah, you're right.
were made in China.
Oh, wow.
Way back in the day.
Okay.
That's good memory there.
Tatiana, thank you so much. Check out our Stock Movers podcast, 5-minute episodes, big winners and losers. Find it on Apple or anywhere you get your podcast. Also, check out Tatiana and the Markets Live team, a chart on the implications of the AI spending race, less share buybacks. It's a great read. Stick around, everybody. The close coming your way. Tim and I continue on radio.
Order filled. Order filled.
From ABC News, I'm Stephanie Officer. The U.S. conducted a 13th day of strikes while Iranian drones were targeting U.S. assets in northern Iraq and Bahrain.
Order canceled.
The Houthis have been targeting ships in a major strait in the Red Sea known as the Bab al-Mandab Strait. It's prompted President Trump to say he's considering even larger strikes. ABC's Karen Travers at the White House.
He told Axios yesterday that he is considering a massive attack, saying it could be bigger than ever before. He said he is close to making a decision, but it is all set, according to the administration. Now, this is something we have heard from the president before. He has threatened to go after Iran's civilian infrastructure. He has threatened to expand the strikes and the military operations, but hasn't gone through.
The Jackson County, Mississippi DA is speaking publicly about the death of 18-year-old Nolan Wells. Wells was last seen with friends July 4th off Horn Island. Authorities said they initially believed his death was due to an accidental drowning, but his family says they want more answers after an independent autopsy turned up inconclusive results. ABC's Aaron Katursky.
This is the first time we're hearing from the district attorney in Jackson County, Mississippi, who will take the findings of the investigation into the death of Nolan Wells to a grand jury. She wants the public to know she is doing everything by the book.
The city of brotherly love, so excited to add one more to their own. They've already sold out LeBron James' new jersey on the Philadelphia 76ers website. Word coming today, that's the East Coast team the NBA icon is now heading to. ABC's Morgan Norwood.
LeBron James was signing a 2-year, $8 million deal with the Philadelphia 76ers, according to our partners at ESPN. It also comes with a player option for the second season. James says that this decision wasn't necessarily about money or family. Also posting at X, I still want to compete, to win, and to have a chance at the feeling of winning another championship.
You're listening to ABC News. The DOJ today announced 11 indictments in the deaths of migrants who died from extreme heat after being locked in a cargo container in May. The local U.S. attorney, Justin Simmons, said an investigation found 6 bodies when the train arrived in Laredo, Texas, and they were connected with another in San Antonio.
Each of these individuals paid anywhere from $1,500 to $10,000 to be brought across by this alien smuggling organization, only to die in the sweltering Texas heat.
A slow-moving storm system brings a multi-day flood event to the Carolinas over the next several days. ABC News meteorologist Ginger Z.
Charleston to Wilmington today finds themselves in a level 3 out of 4, so that's where some of the heaviest rain will be falling. We're talking about 3-inch per hour rainfall rates possible. That includes Myrtle Beach, right in the center of it. We've seen these heavy showers. Obviously, we know what this front can do. It's taken its sweet time getting through, and we're going to see this all the way through Saturday afternoon.
Sean Diddy Combs is now in solitary confinement after getting into a fight at the New Jersey federal prison where he's being held on sex trafficking charges. Former President Barack Obama popped into his own presidential center today in Chicago to surprise the WNBA All-Stars practicing there. He spoke to the players for a few minutes before taking a group photo. As for if he will lace up or not, Obama said he didn't play 5-on-5 anymore to protect his Achilles. The players also gifted him a number 44 jersey, which they will all sign. I'm Stephanie Officer, ABC News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everybody, we are 55 minutes away from the closing bell on this Friday, July 24th, 2026. Carol Masser, Tim Stenivek, live in our Bloomberg Interactive Broker Studio. Mixed market trade, call it kind of quiet today, unchanged essentially on the S&P 500, just down a couple of points, literally just down a couple of points. NASDAQ 100, a decline of about 330 points to the downside. That adds up to a percentage decline of about 1.1%. So off our best levels of this session. Kind of interesting. What is it? Is the S&P kind of an even split here? I meant to look at the trade.
No, it's more stocks are higher than lower.
Yeah.
365 stocks are moving higher.
All right.
Yeah, so about 150 are moving lower. It is being led lower, and the vast majority are higher. Consumer discretionary is lower, information technology is lower, but real estate is up by more than 2%. Materials up by 1.3%. Consumer staples up by 0.9%.
You know what's down today?
What?
Didn't you like how I did that?
Yeah.
Can you hear that on the mic for radio? I don't know. The stocks down another 4% in today's session. Yeah, so under pressure again. And we know Intel, which rallied unbelievably yesterday after the closing bell. Again, numbers better than expected, but as our Mandeep Singh reminds us, they were off of some pretty significant lows or low expectations. But that stock giveth back today, and we see the Intel under pressure.
Also lower today, Brent crude and WTI, though Brent's still up about 30% just this month.
The war.
We're going to talk all about it with Claire Gillespie of the Council on Foreign Relations. She's going to be joining us in just a few minutes.
All right, looking forward to it, folks. Let's get you going on this Friday. Let's head on over to Charlie Pellett. He's going to wrap up of all the business stories and market moves that you need to know about. Hey, Charlie.
Hi, thank you very much, Carol Masser. Indeed, just about 54 minutes to go ahead of the closing bell. We are on track for what will likely be another losing week. 2 in a row on the S&P 500 index, trading a little changed right now, down 2 points, drop there of under 0.1%. But again, worth pointing out that yes, the S&P 500 index is lower. 362 of its members are higher, 141 lower right now. The Dow continues to hold on to a gain of 188 points, up by about 0.4%. Techs, though, selling off. NASDAQ 100 down 1.2%. NASDAQ Composite down 0.7%. The SOX, the Philadelphia Stock Exchange's semiconductor index, down now by 4.6%. All of this with the VIX below 19. Wall Street's so-called fear gauge, the 10-year 4.67%, with a 2-year currently yielding 4.32%, and the 30-year 5.15%. Gold just about flat on the day, up under $4 the ounce to $4,052. West Texas Intermediate crude, WTI 89.53 a barrel, down now by 2.9%. 0.5%. Brent crude 96.93 a barrel, down 3.7%. This time yesterday, we had Brent trading above $100 a barrel. Wall Street's looking ahead to mega cap tech earnings next week with Meta Platforms, Apple, Amazon, and Microsoft among the names checking in. Investor focus definitely going to be on CapEx plans as we hear from Kara Murphy, president of Kestra Investment Management.
Last year it was a little bit different, right? We were a bit earlier in the cycle. The numbers weren't quite as big. This year we move forward. We know a little bit more about how people are using AI. We also know it's going to be a little bit before we start seeing returns on it. So the market is saying maybe we need to slow this pace a little bit.
Kara Murphy, president of Kestra Investment Management, interviewed on Bloomberg Surveillance. Intel, after earnings, Intel selling off, the stock declining now by 7.4%. I'm Charlie Pellet. Carol and Tim, that's a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. We got a great couple hours coming up here on Bloomberg Business Week Daily. I said we're going to talk to Claire Gillespie of the Council on Foreign Relations in just a minute. We're going to talk oil with her. But also, Carol, AI is not killing every job.
No, check this out. There is a job, chief of staff, the $400,000 a year chief of staff is CEO's secret weapon in the AI age. I always feel like the chief of the staff has to deal with like all the stuff that, here, this is a problem, go deal with it.
That's why you get paid.
Yeah. $400,000. Hey, also it's Friday, so how about a vacation and some wine? We actually cover both of them.
We do. Week. Yeah, Amanda Fraser of the Forbes Travel Guide is going to join us on where to go. And then Claudia Chamberlain of Barry Bros and Rudd. It's been around since 1698.
So wild.
On what to drink when you go to that destination.
All right, looking forward to all of that, folks. But we got to do some work before we get to some of that fun stuff. Brent crude prices.
Good segue.
Brent crude prices retreated from $100 a barrel, with traders assessing signs that oil was still managing to traverse Middle East trade routes despite the recent escalation in hostilities. I don't know how it works, because sometimes stuff gets through, sometimes doesn't, even amid an escalating backdrop.
Traders closely watching President Trump after he threatened major military punishment. In the event of further attacks on vessels in the Red Sea, he told Axios on Thursday he was considering, quote, a massive attack on Iran. As we've been mentioning throughout the last couple of hours, Brent is up about 30% this month alone. For more, we are joined by Claire Gillespie, Senior Fellow for Climate and Energy at the Council on Foreign Relations. She joins us from Washington, D.C. Claire, did the energy markets told us a few weeks ago that the worst was behind us? And it seems like they got it wrong. What is the price action reflecting to you about the current state of affairs of what's happening in the Middle East?
For me, one of the biggest takeaways in what we're seeing with oil prices right now is just the degree of uncertainty that we're seeing on still a day-to-day. Because this is another week in which energy markets have remained incredibly fragile. And yet, even so, we've seen resilience, adaptation coming from a number of fronts. I think one of the challenges that we're dealing with is now we're talking about a situation that's not just an ongoing conflict, it's a conflict that's expanding on multiple fronts with implications for markets.
Yeah, what are the implications? One of the things, Clara, that we've been talking about is, watching China, how they are increasingly embracing other forms of energy. They want to not be beholden to the world when it comes to their energy needs. And that's whether it's nuclear, whether it's alternative energy, like we see that. I do wonder, when we think more broadly about energy, and we're still very reliant on fossil fuels, but longer term, Saudi Arabia, the whole region, Middle East, they are thinking about life after fossil fuels, aren't they?
I'm not sure yet if countries are thinking about life after fossil fuels, but I do think increasingly we're seeing questions about life after peak oil, or at least the kind of reliance on oil that we've seen in previous years. A big part of this and what we've seen in the number of adaptations over the last few months is this kind of rising interest and focus on electrification, on vehicles, on other things that can help curb that demand for oil. It's certainly something that has also factored into Saudi Arabia's thinking as well on multiple aspects of its energy security strategy. And for that reason, I think also influences how it thinks about its remaining export potential. But the reason I'm hesitant to say that we're in a world that's thinking beyond or kind of post fossil fuels yet is some of the broader things that we've seen on this front. One of the questions is, of course, what we've seen with natural gas trade, where I think some of the stories continue to be more mixed and there are questions there. But I also think quite a bit about coal demand as well, where you have, for example, in response to this crisis and rising demand for electricity, Asia really increasing its consumption of coal to make up for that gap it's had in tight LNG markets. And so longer term, a question is, do we see that sustained? Clearly, multiple economies, not just China, but you also have Vietnam and others, have been thinking about that transition to greater use of renewable energy sources. They were thinking about that pre-Hormuz as well. So there is a question of how much more they can do and what as they see as their most challenging sources of potential system strain.
Yeah, well, coal for now is easier than some of the renewables you talk about and perhaps some of the nuclear, because you can just increase what you're actually doing when it comes to coal. What are the long-term implications if there is a higher reliance on coal in some of those countries you mentioned?
There are a couple of implications of longer term reliance on coal. And I'll say it's not just that coal is easier, it's in some case the capacity is just already in place and underutilized. If you continue to utilize it, and so why has it been underutilized? What are the risks of if it's utilized at a greater degree over the long term? We talk a lot about air pollution in particular, which the Asia Pacific region in particular has really been front and center. We've all seen the stories of years and years of really toxic air pollution out of Beijing, New Delhi, elsewhere. I think that's one of the implications. Another is we often talk about coal as this sort of low-cost source of energy. We talk about it as something that's domestically abundant. We are seeing more and more across the region, both rising prices on coal and rising requirements for coal imports as well to meet those needs. So there's a little bit of a geopolitical concern there as well.
Wait, so more demand for coal, you're saying, in general, or what? I'm sorry. I think I kind of missed the point here. Yeah.
Absolutely. In the near term, we're already seeing more demand for coal, more than both today and more than our expectations that already saw demand for coal rising in South and Southeast Asia as well. But beyond just kind of the near-term shock, there are things that I'm watching now where it's going to be interesting to see what actually moves forward or does not. So, for example, there's been some reporting on Vietnam of questions of if it is considering new construction of coal-fired power plants. It is not the only one across the region that has had trouble, not just in questions of reducing its use of existing plants, but holding off on additional builds. And that's something that could further incentivize demand higher.
So I think about your senior fellow for climate and energy. So how do you think about all of this in terms of the global climate picture going forward in a year where certainly here in the US, we've been dealing with smoke coming down from wildfires in Canada, extreme weather, again, whether it's water or heat. So I'm just curious, as you watch the global energy picture and what's going on there and what it means for global climate, how do you tie it all together? Is it worrisome?
It's worrisome. And I would also say that it is a bit of a mixed story because you have seen already a number in the region who, in the response to this ongoing global energy market shock, have talked about the increased use of nuclear energy, earlier restarts or new builds. They've talked about their greater ambitions for not just the renewable energy sources that we think about, so wind and solar, but also biofuels and other alternatives as well. So I think these are all great trends, but I think they do not fully eliminate my concern about, one, the potential for rising use of coal. And in turn, even with greater progress, I think we still do have those real serious growing challenges of the reasons rising carbon emissions and the challenges that creates not just for individual communities in the region, but for global action at large.
We just have 10 seconds and I want to end where we began, and that's with oil prices and just your prediction as we get into the fall. Are we going to stay around $100 a barrel?
I think we are still in an environment where there are so many uncertainties. We are wondering if the price point that we're at now is sustainable.
Okay.
And if some of the things, I would love to know too.
Claire Gillespie, Senior Fellow for Climate and Energy at the Council on Foreign Relations, joining us from Washington, D.C.
A headline crossing the Bloomberg from the FT. Waymo explores options to exit its partnership with Uber. So we're keeping a watch on that. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. Repeating an earlier headline that we brought you moments ago, Waymo said to be exploring options to get out of its partnership with Uber. That, according to the FT. Uber shares right now tumbling by 3%. We're seeing a lift for Lyft. Right now, Lyft, the San Francisco-based rival to Uber, up by 3.17%. So again, Waymo said to be exploring options to exit its partnership with Uber. That, according to the FT. Dow Jones Industrial Average holding on to a gain of 182 points, up by about 0.4%. S&P with 38 minutes to go ahead of the close, trading lower, down 5, little change, down under 0.1%. The Nasdaq 100 index down 1.3%, with the SOX, the Philadelphia Stock Exchange, down now by just about 4.8% on the stock exchange's semiconductor index. The VIX right around 19, the 10-year 4.67%. West Texas Intermediate crude 89.59 a barrel. WTI down 2.8%. Brent crude 96.96 now, down by 3.7%. Just over 3 hours away from the latest attempted launch of SpaceX's Starship rocket, 6:45 Wall Street time when it all comes down. We'll have it for you live when it happens. There is a 90-minute launch window. Supposed to go up last night, did hit a weather delay. Now, Sana Pashankar is covering it for Bloomberg News.
They have had a rocky development cycle. They've had some explosions. They've had some setbacks. Just this week, they had postponed the launch because some of the engines didn't ignite. And then yesterday, they again postponed the launch to today because of bad weather, which that is pretty common in rocketry. But, today all eyes are on Starship. It is the first test flight since their IPO, so investors will be watching, I'm sure.
Sana Pashankar covering it for Bloomberg News. SpaceX shares trading lower now by just about 3.1%. SpaceX, by the way, currently at $114 a share. It went out the gate when it IPO'd earlier this month at $135. Carolyn, Tim, that is a Bloomberg Business Flash.
Thank you for that update, Charlie. Keeping an eye on lots of stocks for us as we do get just over a half hour from the close. I want to talk about social media and the government.
All right, let's do that.
Okay, we're not talking about President Trump's True Social account.
No, we're not, right?
No, we're actually talking about the Customs and Border Protection's West Texas Twitter account. And the reason I said Twitter and not X is because back then I think it was called Twitter, not X. It is the subject of today's FOIA Files newsletter. We're also going to talk some of the latest when it comes to the Epstein files. Before we do that, though, we're talking about the latest when it comes to FOIA files. Jason Leopold is Bloomberg News senior investigative reporter. He's the author of the FOIA Files newsletter. It comes out each Friday. You can read it and subscribe to it on the terminal or by going to bloomberg.com/newsletters. Jason also hosts the podcast Disclosure, and he's the executive producer and executive producer of the new documentary, The Real Wolf of Wall Street. It premiered earlier this month exclusively on Paramount Plus. All episodes are available for streaming right now.
Do
Jason
you ever
joins
sleep?
us from LA. Well, I was going to say, Jason, we don't have any time left after that introduction because you're doing too much. So, maybe make us...
keeps me out of trouble.
It does, but it doesn't make the rest of us look good, okay?
That's basically why I'm working, to stay out of trouble.
All right, well, we like it when you stay out of trouble because you can kind of explain the trouble that other folks are getting into. And maybe that's a good segue to talk about why it took, 4 years? For you to get some
it took
files
4 years to get
a Twitter account. What happened here?
Yeah, I mean, this is just sort of an example of how sometimes it's ridiculous in terms of how long agencies take to produce documents. But the reason I wrote about this week, because I felt it was still relevant. And, back in 2022, the Customs and Border Protection's West Texas Twitter account kind of went off the rails and started liking politically charged tweets from Stephen Miller that was critical of the Biden administration's immigration policies. And in addition to that, it liked tweets that were also homophobic from Pete Buttigieg, who was the Secretary of Transportation. I wanted some documents around that to find out how it happened. What I was really interested in was the social media guidelines. And if anyone's been, watching social media over the past year and a half, I think it's pretty apparent that the way in which official government social media accounts have been communicating with the public have been, quite aggressive. It's been volatile. And the social media guidelines really sets forth the ways in which, government agencies are supposed to communicate with people. So that was the real get for me here, where these guidelines that were previously marked for official use only, which essentially shows that, that they're not supposed to, when I say they, certainly in this case, CBP, because these are CBP's guidelines, they're not supposed to be engaging with the public or posting any posts, tweets on X now, which is what it is, that would be vulgar, that would rise to the level of propaganda. So these strict guidelines, these 11 pages, would appear to show that the agency is kind of straying from what is what they're obligated to do actually under the law in some cases as well. We've seen pictures of individuals who've been accused of various crimes. What these guidelines say is that they're not supposed to be doing that.
So wait, have you reached out then back to them to find out, like, in this environment, whether those rules are being followed, since it's a bunch of pages on rules and regulations?
Yeah. I did reach out to CBP just to find out if these 2019 guidelines are still in effect, and or if there's some new ones. And basically, what the spokesperson told me is that they are updated as needed. It wouldn't say one way or another whether they're still using these guidelines or if there are new ones, but just periodically, they're periodically reviewed and updated.
I don't even know what to say.
I mean, but these are the questions.
But I know.
These are the questions.
Right.
These are the questions I ask. This is why I was like, well, how do they come to tweet that or post that?
Mm-hmm.
And that's when I say, you got to FOIA it.
What is it typical that it would take something 4 years to get files like this?
No, it's not typical, and I don't have an explanation for it. But
and you have no idea why you get some within a few months and some within a few years. You have no idea.
This seems like an easy request. No offense, right?
It's a very easy request.
Yeah,
very easy. No explanation behind that. So
Jason,
I'm
I've
only
asked you
left to wonder
before about this, and I want you to sort of go into it a little bit. How do you know that what you're getting is actually exhaustive?
It's a great question. So it's based on my request. So if I ask for a wide range of documents and the agency only turns over a few, pages of records, that I question the integrity of the search. So I'm carefully looking at what they produced in response to what I specifically requested. And, there are many instances, I did it yesterday, where I appealed the integrity of an agency search because I didn't think it was exhaustive enough.
Well, speaking of keeping an eye on the government,
yes.
Okay, we are keeping an eye on, because President Trump is making some comments from the White House. We do have some headlines. Hang on a second.
Sure.
Jason, as we just kind of go through President Trump on the Saudi nuclear deal, the time for them to do the Abraham Accords. That is certainly an agreement when it comes to nuclear weapons and nuclear capabilities. And that is something that we've talked about here with our team. That's unlikely that Saudi Arabia would sign on to
But the president says at some point they will.
We will see.
Yeah.
Okay. Yeah. He also said on Iran, problem disappearing, no great power anymore. I would think it's safe to say that if you talk to Iran, they would probably disagree.
Well, I guess it goes
or beg to differ.
What he said over the past few months about that whole country's military being decimated, being destroyed, parts of the Navy being destroyed. We are still fighting over the last 2 weeks.
Back and forth on both sides.
With Iran.
So, yeah. All right. We're going to monitor, though, folks, and certainly bring you any headlines as they are known and certainly relevant to the Bloomberg audience and an investing audience. But we want to stay with Jason Leopold, senior investigative reporter at Bloomberg News. Hey, Jason, before our time wraps up, we do want to get to your attention. You've been so great in kind of keeping us up to date on all things Epstein. And the news flow has definitely slowed down, but we know that there are still documents that we don't have and people don't have, and there's still stuff being gone through. There's a really interesting and fun, wrong word, tracking flights in terms of Jeffrey Epstein's operations. Thousands of flights booked by the financiers, staff, connected associates and victims to a global network of properties. Finding all of this stuff out and tracking, it's important, right?
Oh, it's hugely important. This is an example. This story today by our colleagues. I mean, it's great investigative work. And what they did is they took the data and documents that the Justice Department released earlier this year and carefully read through everything, various spreadsheets and connected the dots. And what it ultimately shows is the vast network of flights over a period of around maybe 10 or 11 years, if I'm not mistaken.
Yeah, 10.
And how that may have been, ultimately part of this sex trafficking network that he was running.
We also have a story about the French modeling scout with ties to Jeffrey Epstein, who was found dead in Paris. Stories like this, Jason, get people's attention because, well, for a few reasons. But what have you and the team found here?
Well, Daniel Siad, who was this French modeling scout, and what we know from the documents, I mean, he's in many of these documents, and that, he was paid. He was paid thousands of dollars. There were discussions between Epstein and Jean-Luc Brunel, who ran this modeling agency, MC2, where they discussed women, girls, that Daniel Siad was tasked with finding women for, don't know if it's for the agency or specifically for Epstein. But his name resurfaced earlier this year, and he went on to he posted a video essentially saying he had no idea that he was this is what he was involved with. But he was the subject of an investigation that was reopened in France related to Epstein's crimes, and currently they're investigating the cause and manner of the death.
Right, all prompted by
his death.
The Justice Department's release of that large trove of Epstein files.
It raises a lot of eyebrows, though.
Yeah, it absolutely does, and has us talking about it again as we try to piece everything together, as you always help us do. Listen, Jason, thank you so much. Really appreciate it. Have a good weekend. Jason Leopold, he's senior investigative reporter at Bloomberg News. He is, of course, author of the FOIA Files newsletter. You can get it on the Bloomberg.com/newsletters. He also hosts the podcast Disclosure, and we mentioned The Real Wolf of Wall Street, the documentary.
On Paramount Plus. Let's go to the White House now, into the Oval Office, where President Trump is speaking on Iran and other matters. Let's listen in.
Up a lot of countries. I've told Canada they have to do something about it. We've never had this problem. All of a sudden we have this problem with Canada. So we'll have to talk to them about that.
Mr. President, follow up on Iran. Thank you, sir. Follow up on Iran. Have you made a decision about the major strikes that you were referring to? Okay. Should we expect to see major strikes?
Look, we're talking to them right now. I think they're getting more and more serious as the days go by, for maybe the obvious reason. But we are talking to them right now. Look, there are two ways. I consider that the smarter way, but the other is probably the easier way, doing what we're doing. And we can take that to a much higher level if we want to. We're prepared to do that, as you know. We're locked and loaded. We're locked and loaded and ready to go, but we're talking to them. So I think while we're talking, we'll see what comes of it.
And when you say, just
I believe, Jeff, they're very serious. Okay. They should be.
And when you say that you're talking, is it Mr. Kushner or Mr. Witkoff, or who's involved in those talks?
Sort of everybody. JD and Marco and a lot of people are talking to, a lot of people to talk to. It's a big deal. But really, when you get right down to it, it's not very complex. They cannot have a nuclear weapon. Very, very simple, actually, but it's a big deal. They cannot have a nuclear weapon. If they have even a thought of a nuclear weapon, we will just continue to go at much higher levels. But we are talking right now, and we'll see what comes of it. I'm not, despite what everyone says about the election, I'm not in a hurry. I'm not in a hurry. We have to do it right. Elections take care of themselves. When when I went into Venezuela, everybody was against it. Oh, what are you doing going into Venezuela? And then 2 days later, they said, "Wow, that's fantastic." A lot of people are saying that with Iran already, because It would take them 25 years to rebuild already from what they have. And again, as you know, no Navy, no Air Force, no anti-aircraft, no radar, no nothing. And we, as you know, we just reinstituted the I guess you could I call it the iron wall on the water. Nothing gets through. Nothing. Blockade. Nothing gets through. And they sort of have to make a deal. But we are talking to them. I think they're being serious. I think they are being by far the most serious that we've seen them. But that doesn't mean we get there. We'll see what happens. But I always prefer that alternative.
Mr. President, did you? I have an energy question. So, Burgum, you might be able to help with this. So, you have criticized windmills for quite a long time. They're very ugly. They tend to use more energy than they actually produce.
That's true.
A lot of people
You've done your homework.
A lot of people in Middle America, they are just so tired of seeing them continue to go up on farmland and stuff like that. Is there any way to? Is our federal government still funding in any way putting these up?
We have. I can speak for Doug, and then I'm going to let Doug speak because he knows
and
the subject. I really
better?
do know that subject well. We have not approved anything having to do with windmills. They are horrible. They are unsightly. They ruin housing values of people. If you're looking at a windmill or hearing a windmill because they're noisy, they kill all the birds. They kill all the eagles. You know, if you shoot an eagle, you go to jail for 2 years. If you kill an eagle with a windmill, you don't go to jail, and they have hundreds of them laying on the ground. You know, it's terrible. And they're very expensive energy. And they're all made in China, but China has very few windmills. You know, they're made in China, but China doesn't use them for the most part. China actually uses coal, oil and gas. They use nuclear, by the way. They're getting very big in nuclear, I want to tell you, this little group. But they don't use wind. Wind is inconsistent. It's unattractive. It's very expensive. It's probably the most expensive form of energy. So I've been talking about it. We essentially, unless there's a trick reason, we will have hopefully no wind farms approved. We're doing more than anybody ever in history having to do with energy. But I've restricted wind farms, windmills. Take a look at Palm Springs, California, where they have a wind farm. As you enter beautiful Palm Springs, California, it looks like a junkyard. You have old ones, rotted ones. They're falling down all over the place. They don't want to bury it because they say the fiber that the blades are made out of should not go in the ground because it's going to poison the ground. Now, I don't know if that's true or not, but if it's not going to go in the ground, what do you do with it? Put it up in the air?
Yeah.
So, good. I see you're not a fan of windmills.
No, I'm not a fan of windmills, Mr. President. I'm very passionate about this.
Doug, do you want to speak about that first?
No, but I would say, yes, President Trump has wisely understood that wind was unreliable, intermittent, dependent on the weather, only existed particularly offshore because of massive subsidies. So not only was it expensive to generate electricity on the grid, it was also expensive for taxpayers because of the subsidies. And so again, President Trump shifting the policy towards energy dominance, which is reliable, affordable, 7x24 energy that's not dependent on the weather. And that includes nuclear, includes hydro, includes geothermal, includes oil and gas, includes beautiful coal. And again, China, 60% of their electricity is coming from coal. Coal was the #1 electric producer in the world 125 years ago, and it was for the last 125 years in a row, and it will be again this year. 126, quite a streak if you're an athletic team that they've won 126 years in a row. But President
we were restricted from using it.
Yep.
Every coal mine was going to be closed down within the next year if we didn't win the election. And it's I call it clean, beautiful coal because it is. What they do today with coal is amazing, but it is the most powerful. And with that, go ahead, Doug.
Well, as I say, under President Trump's leadership, and then working together as a team across government with Chris Wright, Lee Zeldin, Energy Dominance Council, we've kept open 35 gigawatts of coal this last year, and of that, 35 gigawatts was not up. This past winter during the cold streak and Storm Fern, we would have seen brownouts, blackouts, and literally people dying in America during that cold weather. So again, President Trump's, the elections matter. When he came in, he turned the direction back towards reliable, affordable energy. Nuclear is a key part of that.
You're listening to Doug Burgum, the U.S. Secretary of the Interior in the Oval Office with President Trump.
Standing up here did not get a government grant. This is private sector. President Trump unleashed capital going back in, billions of dollars of capital going back into the nuclear industry. President Trump understands innovation is the source of American greatness. You get rid of the regulation, you support entrepreneurs, the capital flows, America wins.
Mr. Secretary, the starting for this nuclear, dominance, what does that look like for the American people out there? Like, what are those first steps that we can see in these coming months and years?
Well, I was to say, I'll go on. You can see it right now because when you take a look across the whole world, President Trump's policies, whether it's Venezuela, whether it's Alaska, whether it's reinstating export for 18 months ago, we had a ban on LNG exports from our country. Now we're the world's largest exporter of LNG. President Trump's policy was let's sell energy to our friends and allies, keep it affordable at home so our friends and allies can stop buying from our adversaries. Russia was selling virtually all of the natural gas into Western Europe. 2/3 of that gas has been displaced by America. America has turned those into our customers, supporting our allies. And with Venezuela, as President Trump said, that flowing to our refineries on the South Coast, that's lowering gas prices for America. Unleashing Alaska, which the previous administration sanctioned more than Iran, that's going to again help provide low-cost energy for Americans. So today we have the lowest priced, most secure energy of any country in the world. That's going to change the course of this country for decades to come.
Mr. President, what? The Justice Department last night withdrew those subpoenas to the New York Times journalists who reported on Air Force One. Do you support these type of subpoenas to journalists? Or are you going to encourage the administration?
We're not after journalists. We're after leakers. We're after people that are cowards, people that are unpatriotic, people that are treasonous in many cases. And the way you find them is through the journalists. When the journalists probably know they shouldn't write, they shouldn't be giving information out like that particular information or others. We had a lot of look at the Supreme Court where they leaked the opinion of Roe v. Wade early. That person should be found. And the way you find them is to tell the journalist, if it's something having to do with national security, you tell the journalist, who is it? And we have a long way to go with that case.
So you think it's appropriate to subpoena family members of journalists to find out information?
What's that again?
There were subpoenas to family members of the journalists, too.
I don't know what's appropriate, what's not. We do it legally. Barack Hussein Obama did it all the time. He went after journalists and nobody said anything about it. He went after journalists. They said, who was the leaker? Who was the leaker? And if you don't give us the leaker, you go into jail. You know that. But when, Obama does it, it's okay. When I do it, it's not. In many cases, that's the only way you're going to find out who a leaker is, and it has to do with national security. It's amazing. He did it many times, and nobody said anything about it. But when a Republican does it, when, in particular, Trump does it, everybody makes a big deal. Now, the way you find out is you say to the journalist, if it's national security, I would say, I really put it down to national security, not in all cases, but when you have somebody doing a national security leak or a leak of great importance, and you have somebody inside the walls of, let's say, the White House leaking, I think that's a national security concern. I think it's absolutely fine. And again, I'm not knocking Obama for doing it. I'm knocking the press for not even wanting to cover it. But Obama did that often. Other presidents have done it also. They go to the journalist or the reporter. They say, national security, who gave you this information? I'm okay with that.
Mr. President, did you authorize for Secretary Wright to sign the Saudi nuclear deal? If not, why did he sign it?
Well, we didn't talk about it, but it was always understood, and Chris knew, and Saudi Arabia knew, that if they didn't join the Abraham Accords, the deal's not, I'm not going to do the deal.
So then why did he sign it?
Senator John...
Because they understood that in order, it's subject to Congress and everything else, in order for that deal to go through, they had to sign into the Abraham Accords, and they've had great success. The Abraham Accords have been very successful, but in order to do that, we wanted them. We want them in. We think it's very good. We think the Abraham Accords bring peace in the Middle East, and now there's no longer an Iran factor. There's no longer Iran to worry about because they've been reduced in terms of their capability and power by manyfold.
Thank you. Senator John Thune has suggested that if the White House thinks that there are votes to pass the Save America Act, you should be picking up the phone.
Who are you with?
I'm with the Washington Examiner, sir. Could you be doing more to help that legislation pass?
Well, I do more. I got 3 congressmen, maybe 4, to settle, to send it to the Senate. We got the vote, as you know, in Congress. I got a call from Mike Johnson, who's fantastic. He's a fantastic speaker, one of the best I've ever seen, and I think he's going to go down as one of the best. He called. He said, we have problems with 3 or 4 people. Could you call them? I called them. Every one of them, after I called them, voted, and we got it passed up to the Senate. And I'd certainly be willing. I mean, he's got 4 or 5 people that are very difficult. A couple of them I put out of office, so I understand how it feels. I mean, they're doing the wrong thing. Look, who cannot approve voter ID? Who cannot approve proof of citizenship? Who cannot approve funding military when you're winning a war? And what are you supposed to do, stop fighting? We're winning a war by a lot. We're talking to them right now. They're willing to do things that they would have never done. Other presidents should have done this a long time ago. They say 47, but now it's actually 50 years. We've been saying 47 for 3 years. So it's 50 years. For 50 years, they should have done it. But who wouldn't approve voter ID? And that's photo ID. Who wouldn't approve proof of citizenship? And the Democrats don't want it because they cheat. But no Republican should put us in a position where they don't approve something like that. Yeah, please.
And then earlier today, you reposted Lara Loomer's interview with President Zelensky. What do you make of growing MAGA support for the war in Iran, war in Ukraine? Sorry.
Well, I think they support what I support. You know, we just had a complete win in Arizona. The young gentleman who's Harry Enton, I believe his name is, the pollster, said Trump's 100% favorable. He gets everybody he endorses wins, which is pretty much true. Everyone I endorse just about wins. So there seems to be a natural bond between me and MAGA, but I'm the one that created MAGA, and I know what MAGA wants better than anybody else. You know, MAGA knows what MAGA wants, and MAGA is very happy. They want to see this done, and they're not going to be happy if it's not done. Make America great again. It's all about make America. You know, we started that a long time ago. But the concept of not approving voter ID.
All right, you are listening to President Trump. He is live there in the Oval Office taking questions from reporters that are gathered around him. We're going to continue to monitor and certainly bring you any significant headlines, anything that moves the markets or would be of interest and important to the investing and business audience. In the meantime, he did make some comments about China and wind power. According to Bloomberg, NEF, and international energy data, China is the largest country user and producer of wind power in the world, dominating both total capacity and new installations, far, far ahead of the United States, which remains a distant second. So just to kind of clarify some of what the president said.
Okay.
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 Should we talk markets?
Let's talk markets and take a look at how things are looking on this Friday afternoon as we get less than 10 minutes from the close. The S&P 500, it's in the red, but not doing much. It's just down 0.1%. In fact, the majority of stocks are higher.
We're limping to the end.
We really are. NASDAQ down 0.8%, Dow up 0.4%. Eric Weiner is Bloomberg News senior editor for Equities Americas, who joins us here in the Bloomberg Interactive Brokers studio. Limping to the end is a good way to describe it, Carol. I like that.
Why does it feel this way? Why? Well,
it hasn't been a great week.
It's been a weird week.
Yeah.
Today you have overall sentiment is not great. But today, as you pointed out, what do we have, 350 stocks up right now?
Yeah,
60.
Yeah, so we're rocking into the close, but volume's pretty low.
Somebody
Summer
sent me a
Fridays.
message and said, I'm on my way to the beach.
Yeah,
on the terminal.
Thanks, buddy.
Yeah. So there was a lot of movement early, and then we kind of get these doldrums. But I mean, you can't help but look ahead because so much happened this week that points to next week and beyond. And that's really, I mean, when I look at what happened with Alphabet and I think about what's coming with earnings from Meta, Microsoft, Amazon, all the AI spenders, the concern is real. And what has shifted is this idea, I mean, you saw it on the front of the New York Times the other day. So
we probably are at a top. That was a joke. But if people are generally figuring out broadly that AI is what's supporting this economy, it puts much more pressure on kicking that leg out. And if we have shifted into an area where we're questioning spending, where we used to applaud it, things get very, very different. And these earnings reports are going to report the same thing.
Shame on all of us if we didn't think that it was going to get to this point. We talked with our CFO briefing, our Nina Trentman, the CFO of Board, which is an application platform.
Gordon Pothier.
Thank you.
Us.
And, you know, talking about AI, and they're a software company. And so they've been watching, and he basically said, you know, AI can't do everything yet. But he even said, in terms of their own usage, that they're increasingly, he's the CFO, they're looking at the cost of this. And, you know, while they're not yanking the capabilities or the tools from anybody yet, they're not doing that. And we're hearing that increasingly. People are looking at the cost and what they're getting for it.
And yet it has always been the word. We've written this story a bunch of times that yes, you can believe that the future is AI. In many, many ways, it probably is. The idea, though, that it's going to put, say, I mean, just to pick a name, Salesforce or ServiceNow or one of those companies that are really embedded out of business seems unlikely, only because they're going to hijack those tools. It takes forever not forever, but it takes a long gestation period for technology to really kick in. And you saw it with the internet. You see it with every development. You know, you think about Cisco finally turning positive, and they were building, you know, all of this fiber optic stuff in the early 2000s, and it was like, why are we going to use it? And now it's the pipeline. But it took a while. And so the idea that like AI is going to replace things, probably, but that they're going to replace things tomorrow and that it's going to pay off next quarter, that's far less likely. And that's where investors are right now.
I have to say,
hold on.
What?
Doesn't all this CapEx that's being spent have to lead to some sort of decline in employment for it to pencil out and make sense?
Possibly.
Do you know what I mean?
Possibly.
Like you have to get rid of the people.
Well, okay. So, like, if you talk
unless people are made more productive by AI,
and it creates new jobs. It's like the example of the famous, you know, auto industry replacing buggy whips. So, like, there were no people who were specializing in making buggy whips, but they went on to become mechanics.
Right.
Now, there will be dislocation, and but change doesn't happen, you know, overnight. So it's not like we're just going to flip a switch and be like, okay, well, all of the companies that have done this firing really have gotten out in front and are probably using it as an excuse to let go of people who they've already wanted to let go of, or whatever reason, because nobody is really monetizing AI. What's changed now is we have a war. And the war is very real. And then we have inflation, and inflation's really, really real. And now the stocks are falling. So if you want to raise this capital, going into the bond market to raise those funds gets really expensive. Trying to sell your own stock gets really hard when your stock is falling. And so you're kind of between a rock and a hard place. And so you have to show some returns.
I am obsessed. These guys know. I've said it a million times. This Simon White story that came out on the terminal. The most fundamental macro risk is back. And he talks about rising inflation volatility and just the whole idea that everything, goods prices, borrowing rates, Fed policy, cash flows become more uncertain when the purchasing power of money itself becomes unstable. It's not just moving up, but it's just the volatility of it. And a lot of it has to do with the war in the Middle East.
It's relentless. It's not just the war. It's everything. And we've been hearing this from our traders. It's in a bunch of our stories where people keep saying if it's not one thing, it's another. If it's not the war, it's tariffs. Whatever it is, there are these risks that keep cropping up. And the thinking is that if things were just left to their own devices, the economy would be pretty strong. But they're not being left to their own devices. There are these risks, and you know, grenades keep getting chucked into the market. And so suddenly, if you're a trader, you're looking and going like, what do I buy?
What's interesting is, and it says, the inflation vol, the pickup in inflation vol is becoming increasingly apparent at the top level, but it is unmistakable under the surface. The average volatility across U.S. CPI components is close to revisiting the highs of the pandemic price surge. This is what you're talking
This
about.
is exactly it. And so the
Sorry,
chip
Tim.
index.
I'm blown away by this.
The chip index has had, I think we counted it the other day, I think it's like 3 or 4 days in the last 2 months without a massive 4% move.
It's either up 4 or 5% or down 4 or 5%. And
Every
nobody bats an
single
eye when that happens now. Because it's just happening all the time.
And that's the thing. So we're trying to game out where the SOX is going to end the month, right?
Mm-hmm.
And how do you do that when the thing is swinging the way it's swinging? Like, it could just go bonkers next week, or it could just collapse. And it's moving independent of spending. It's moving with spending, all over the place.
It's called the Katona effect, named for an economist, George Katona. How consumers postpone expenditures when inflation and its volatility rise. But think about companies too, not making decisions. All hails. Eric Weiner, thank you so much. He's Bloomberg News Senior Editor, Equities Americas. Have a great weekend. Thank you so much. Stick around, everybody. We're counting down to the close. That's because the closing bell starts right now.
All of the action with our global simulcast, it starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
About 2 minutes away from the end of the trading day, Katie Greifeld alongside Emily Grafeo, filling in for Romaine Bosick, and here to help take us through the closing bell. It's a global simulcast. We're joined now by Carol Massar and Tim Stanovic. We bring together all of our various audiences to talk about, boy, what a flip-flop that we saw in Intel, really weighing down the rest of the market, Carol.
Yeah, absolutely. Although here we have a market that is kind of overall little change. We are seeing certainly some pressure on the NASDAQ 100. But you go inside the S&P 500, guys, and you've got 358 names actually higher for this session, despite the index being essentially unchanged.
Okay, index essentially unchanged. What's not unchanged today is oil. Even though Brent is up about 30% just this month, we're actually seeing it down a little bit today, $97 a barrel. So under $100 a barrel, which, Emily, is a nice, I don't know, a nice sort of benchmark to be below.
Let's go buy some barrels.
Yeah,
everybody.
I don't know.
Yeah, right.
Keep them in the backyard in New Jersey, right?
Double digits, not triple digits.
WTI.
Was
that in New Jersey?
Down just about
there,
2.7% to just below $90 a barrel.
Tim is determined to keep talking through all of our chatter.
I couldn't hear you. Were you guys saying something? I couldn't hear it.
Nothing important.
Well, Tim was also mentioning the S&P 500 ending the day lower. If you look at how it ended on the week, this is the second week in a row that index is closing in the red. That's the first time that we've seen 2 weeks in a row of losses for the S&P 500 since March.
Yeah, and we were just talking with Yuri and Tim over at Fidelity, making the point we haven't seen a new high on the S&P 500 since about June 2nd, early June. But we're still pretty close to those levels, which really speaks to the resiliency of the market outside of big tech. But take a look at the S&P 500. It managed to actually get into the green, but barely. I mean, we're pretty much talking unchanged on the S&P. A different story when you take a look at the NASDAQ. Certainly a heavy day for big tech. The Dow Jones Industrial Average, I'll mention it one more time. It's finished the day higher by about 0.5%. It's price weighted, though. What can it tell you? I don't know, but the number is green. Small caps, though, Carol, falling a little bit on this Friday.
Maybe you should name the upcoming baby Dow.
Can you imagine? I don't know if that's like a beautiful baby girl name, but I'll think about it.
All right. If not, there's always the S&P 500, which, by the way, we had 364 names actually gaining ground today. 139, Katie, to the downside.
And let's take a look at the circle one last time for me. And boy, what a pretty picture. It's a really interesting picture because you have 10 sectors finishing the day in the green, led by none other than real estate, higher by 2.4% as a sector. Materials also higher, consumer staples as well. Your lone red spot is an important one. It's information technology, down about 0.9%, really explains why, when you take a look at the index math, how these sectors are weighted, why the S&P 500 finished just about flat, even though you have all that green on the screen.
Katie, if you had to pick a sector and name the baby after a sector, which one would it be?
Utilities.
Well done, well
Wow,
done.
you said that so quickly. That's really weird.
She's apparently been thinking about this.
I think about it deeply.
All right, let's go to some of the individual gainers, if we may. SLB, top gainer in the S&P 500, up about 11% here, folks. Oilfield Services and Equipment Company, you know it well. Formerly Schlumberger, doesn't go by that anymore. SLB also could be a fun name, I'm just saying, Katie.
There you go.
Company reported second quarter adjusted earnings per share that beat the average analyst estimate, revenue increasing in all regions outside of the Middle East, and data center revenue. Apparently the company has been shifting to data centers, an emerging source of revenue for the company. Milius Research out, they've got a buy price target of 68. Noting that revenue, EPS, and EBITDA beat as broad-based international growth was able to offset the declines in the Middle East from the war. So that was an outperformer. Let's go to Ring Central. That one also rallying up as much as just missing the 30% gain mark intraday, but still up about 25% here at the close. Heavy volume. The software company reported second quarter results that beat expectations. They also raised their full year forecast for adjusted earnings. It is up 70% year to date, 12% of the float is short. And then one more for you, T-Mobile. This one rallying about 5.6% here. Top gainer in the NASDAQ 100, rallying even after the company reported revenue that missed analyst estimates amid modest gains in subscribers. They did disappoint Wall Street's high expectations. We saw that kind of in early trading playing out, but rallying here in the regular session. KeyBank Capital Markets out saying T-Mobile's service revenue growth was a mixed bag, and management's 2026 service revenue guidance remains at $77 billion. Another analyst, benchmark analyst, kind of saying that the sell-off earlier unwarranted, as the stock was already trading at a significantly discounted valuation. It was down, I think, pre-market, but again, rallying in the regular session.
Okay.
Over to you, bud.
All right, I got a lot of news here. Just starting with something that recently crossed. Paramount Skydance shares down on the day by 3.3%. The New York Times reporting just a little bit ago that Paramount and Warner merger is paused until a court rules or June of 2027. You can see right there toward the end of the trading session, shares were higher for much of the day and then took a dive after this report. Colorado Attorney General Phil Weiser saying a stipulation filed in federal court stops Paramount and Warner Brothers from merging until the court rules or June 1st, 2027, whichever comes first. Once again, Paramount Skydance shares, P-Sky down by 3.3%. Warner Brothers Discovery shares fell too by just about 0.7%. Also, shares of Uber declined today. This after the Financial Times reported that Waymo is exploring options to exit its Uber partnership, down 4.3%. That fell after 3 o'clock today, Wall Street time. Waymo has held internal talks about ending its current deal with Uber. Waymo has already notified Uber that it plans to enter these markets independently in January 2028 when their contract allows, the ride-hailing group said in a statement. Waymo has not ruled out a complete split, according to the people cited by the Financial Times. And finally, this was the worst performer in the S&P 500 today. It's down 9.3% at the end of the day. C.H. Robinson Worldwide, freight broker, and other freight brokers fell today. This after a jury ruled against C.H. Robinson Worldwide and 2 other defendants in a case involving a trucking accident. It boosts concerns about new sources of liability for the industry. Once again, C.H. Robinson Worldwide down about 9.3% today.
All right, let's take a quick look at the bond market, what it did on this Friday. A little bit of relief since, we did see energy prices come down a little bit, but similar to what we're seeing when it comes to Brent, we're still at pretty lofty levels across the curve here. You can see that 30-year yield well above 5%. So too is the 20-year yield. The 10-year yield trading a couple basis points below 470, and the 2-year Treasury yield certainly higher as well. But overall, a little bit of relief, probably a good thing for a lot of folks to see a quiet bond market today.
Yeah, not too shabby, right? It hasn't been that quiet for SpaceX. I feel like investors have been kind of heading for the exit door to some extent. The stock closing at $115 a share. There's some chatter on the street, Morgan Stanley in particular, analysts over there, they say the sell-off in SpaceX shares has driven the stock near a level that would imply investors are assigning no value to its AI business in particular. To be fair, Adam Jonas writing in a note to clients today, we believe the current disconnect between increasingly bearish investor sentiment and largely unchanged fundamentals creates an attractive entry point in SpaceX.
Okay.
And says if it hit $100 per share, so if it went down even further, that's when a lockup on the first batch of shares unlocks, I guess, next month. If it hits that, basically, if insiders can sell, he says at that level, investors are pricing in zero or even negative value from its AI segment.
Okay, then what happens today?
Which is the value, right?
What happens today with the launch?
I don't know. Oh, yeah,
The Starship is launching today, which gets me interested in, this was supposed to happen yesterday. It was delayed as a result of weather, which happens when it comes to rocketry. But Katie, what happens, this is the first time that this has been launched when SpaceX has been a public company. So if it happens tonight at 6:45, I guess watch after hours and maybe watch what happens on Monday.
Right.
When I know, Katie, you will not be here.
I will not be here, but I will mention, hopefully the share performance has no bearing on the launch of their rockets. But to your point, Tim, it's going to be interesting to see if sort of shares react at all to the success or otherwise of the launch, because it's certainly not trading like a rocket company necessarily. It's sort of being valued on the ambitions of Elon Musk and that orbital data center.
It's almost like it's trading like Tesla traded for years, not as a car company.
It's true. That could be the parallel that
I just want to know, Katie, once you have your baby and basketball season kicks off, are you going to be watching LeBron?
I might be. I mean, apparently he's going to be playing for Phillies. that was the surprise headline today, that LeBron James is signing with the Philadelphia 76ers for his 24th NBA season. That ends an 8-year run with the LA Lakers. I don't know that much about basketball, but certainly I heard some ripples around the newsroom.
If he plays for the Philadelphia Semiconductors, might you watch?
That would be so fun.
Absolutely.
And we're no longer going to see that father-son duo in the NBA. That was the first time we had seen that in league history. So there's a little.
Will he still be playing when our kids have kids? That's the question.
Vibe.
We are going to see, though, a mother. I can't say. Can I say it?
You can. Yeah, go for it.
A mother-daughter duo?
Oh, yeah. We won't be playing basketball. We'll be doing something. This is my last day on the program, so my last simulcast for a while, if the audience hasn't quite picked that up yet.
Wait, you're pregnant? No, just kidding.
Surprise.
Hey, we're going to miss you a lot. We hope you will be emailing in between feedings and
Constantly.
apps and all that stuff. No, we hope you ignore us completely, enjoy, and we're going to miss you, and good luck and congratulations.
Congratulations, Katie and Joe. We are excited to meet this baby.
Me too.
Yeah. And I think,
pretty soon, God willing.
Call her Socks.
Yeah.
Little nickname.
We got a few good ones out of this 10 minutes that we spent together.
We're going to miss you. All right, be well, kiddo. All right, take care. That's a wrap. Our cross-platform, radio, TV, YouTube, Bloomberg Originals. We do call it the closing bell. Emily and Katie and baby in the tummy. They're going to continue on the close on TV, and Tim and I back here on Bloomberg Business Week Daily on radio. Folks, we'll see you, some of us, not Katie, same time, same place on Monday.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio.
Down in the last 5 days by 0.4%.
A limp to the end. But we have a great story we want to get to. We've been talking about this a lot. It's been on the terminal. We've been like, we got to get to Matt Boyle and talk about it. It has a growing number of corporate leaders buckling under the stress and uncertainty of the AI age. I would argue that's why they get paid millions, are looking for a very human solution, and that is a chief of staff.
If you want to know how hard it is to be a CEO right now, you can check out another one of Matt's recent stories as well. This one, though, is about a chief of staff. Matt Boyle, senior reporter, work in management for Bloomberg News. He joins us here in the Bloomberg Interactive Broker studio. What the heck does a chief of staff do?
Kind of everything.
Okay.
I would say, yes, it is one of the most unique roles I've ever looked at in sort of the C-suite. And I guess it is in the C-suite.
It's legit. Yeah,
They're
totally.
literally, they're attached to the hip to the CEO or the division president, whoever they're working for. But let's say a CEO, you have to be a concierge. You have to be a confidant. You have to be a consigliere. You have to be kind of everything. But it all comes down to another C word, chemistry. If you do not get along with the boss, the CEO, it's never going to work no matter how talented you are.
Who are the types of people who are successful chiefs of staff?
Imagine
in the corporate world.
Yeah, imagine you combine like the best executive assistant of all time with like a strategic genius from McKinsey, and you might get a great chief of staff, because one day they're just sort of like answering emails or they're writing a speech for the boss. The next day, the CEO's like, "Oh, we got to enter, the Chinese market. Go figure it out." Or, or there's a problem on the factory floor.
Yeah.
Go take the pulse of all our factory workers and report back to me. So like they are thrown onto these complex assignments with literally usually no notice, and they just kind of have to figure it out.
How often does a chief of staff go along with an executive who ultimately becomes CEO, and the CEO like takes them along as they move along?
Well, yeah, I spoke to one woman who did the job for both Jeff Bezos and Eric Schmidt. So if you get a taste for it and you're in certain circles like tech and the word gets out that you are a very good chief of staff, you can do it for some time, although the median tenure is only 2.3 years, because, I mean, a lot of times they might burn out, or there's no chemistry with the CEO.
Right.
But once
you're also at their beck and call.
Exactly. It is a 24/7 job. Your time is not your own. I have been friends with some chiefs of staff, and we've been out for drinks at 11 o'clock at night, and there's a call coming in. Oh, gotta go, my boss. So yeah, it is a tough role, but it's done by highly ambitious people who want to use that job as a springboard to something even bigger.
Where do they go?
They often go into the C-suite proper. It's because they are roaming around the company and they know all the inner workings.
Yeah.
The next job can be often the chief operating officer, certainly. Or you're running a business unit, a unit of the company you were at. Sometimes you just become a chief of staff again, but the real ideal is to leverage that into a C-suite role.
Are men or women better chief of staff? Sorry, Tim. I'm just curious.
Loaded question. Yes. I
don't
mean,
know if it came up
I
at
wish
all.
I had some stats on it, although there's a lot of statistics out there. There's a whole chief of staff association.
There
are
is.
executive recruiters who just hire for this
Yeah.
role. So I never got any sort of real, hard, gender breakdown on it. But it's less, I think, to do with demographics and just more to do with, how competent are you? How much are you able to sort of put your ego aside? Because these are all ambitious people who probably want to be CEO one day. But if you are the chief of staff, it is not about you.
My experience with chiefs of staff come from my work many years ago working at the Huffington Post. And Ariana Huffington had chiefs of staff, and it's pretty remarkable to see where they went after. So one of her chiefs of staff, Dan Coe, went to go ahead and run for Congress. He ultimately lost, but then he became Marty Walsh in Boston's chief of staff when he was mayor of Boston, and then he went to work in the White House. Herbie Ziskind went to work in the White House as well for Kamala Harris for the vice president. I mean, it's really remarkable to see where these. Look, that's an N of two. That's an N of two.
But it's also a much more common role. You mentioned White House. To see this in political circles, particularly the West Wing. You think of the show, The West Wing. The chief of staff on that show was a hero. But it really has moved from politics. Well, it started in the military, then to politics, then to big corporates. But now, like, startups have chiefs of staff. Microsoft has more than 300 chiefs of staff running around Redmond and the world. I don't know exactly why.
Why do you have so many?
Good question. They wouldn't talk to me. I don't know why, but they're usually more of them in tech and financial services circles. For some reason, you're going to see more of a preponderance of them. But 300 kind of blew my mind.
Why does the role take on different significance in the AI era?
Well, let's see. I mean, the CEO is trying to figure out AI. We all are trying to figure out AI. The role of the CEO is so much more complex. You've not only got AI, you've got geopolitical chaos going on. You need someone, let's say with AI, okay, how is this going to change how we work? What sort of governance do we need? What about all these tokens? How expensive are they? And I know obviously some of those decisions will fall under a CFO or an HR chief, but a good chief of staff can grab some of that AI adoption responsibility and just run with it. And if you're suddenly the point person on AI in a big corporate, you're looking pretty good.
What was the wildest thing that you, in reporting this out, that you came across?
Well, I came across some old friends of mine from high school and college who have done this role and are certainly good at this role. But what got me was the professionalization of it. There are courses at Harvard Business School and Oxford about becoming a better chief of staff. McKinsey runs a forum where all chiefs of staff just show up and they kind of just trade notes and kibitz and talk about the job.
Can you imagine the energy level of those people?
Oh my God, yeah.
A lot of type A.
A total type A.
It's one of those things. Do you want the wine flowing or do you not want the wine flowing?
Yeah.
Because you think about how much access they have and what they hear. They are in the room when things are being
Journalists
said
would love
and
to
happen.
be the fly on the wall of the chief of staff forum.
Right.
Do you think this lasts? You know, this stuff can kind of be fads. And
Yes, you're right. Some C-suite roles are kind of fly by night.
Yeah.
Not this. I mean, this role goes back to Napoleon. I don't think it's going away anytime. As long as there are CEOs, there will be chiefs of staff.
$400,000, is that?
That was a little bit of an outlier. It's more common to be like, but still, you're making six figures.
I was thinking you should be paid even more.
Yeah, I'm thinking more too.
Well, some of them certainly get more. Now, those are just the posted roles. You know, some of them are never posted because they know exactly who they want. And they're probably, they might be making $500,000, who knows? But commonly median salaries, you know, $250,000, $300,000, still a nice chunk of change, certainly. But some of them could easily make far more. And then it's what they can make after that. That is really impressive.
I could just imagine the documents they have to sign.
I mean, the documents they have to sign,
right?
They have to get the lunch order right, too. I mean, don't forget that.
Hey,
let me just tell you guys something. I would be the worst chief of staff.
Would you?
Oh, yeah.
I think you'd be great.
No.
Why do you think so?
I don't have the organizational prowess. You need to be so organized.
You do need that. I mean, a lot of journalists are organized, but a lot of journalists are badly organized. So, like, yeah, it goes both ways.
It's also why I could never produce this show.
I think I'd be great.
I'm not
I know
organized
I'm
enough to
messy,
do that.
but I think it'd be fun.
Go for it.
No, I'm really happy. I'm really happy here. Matt Boyle, we love you. Senior reporter, work and management for Bloomberg News. We're back in a moment.
It's 421 on Wall Street. We too check markets all day long here at Bloomberg. We begin with a developing story. We brought to the headlines. Paramount, Skydance, and Warner Brothers Discovery have agreed not to close their blockbuster $110 billion deal until June, unless the legal fight over the merger is resolved sooner. Now, the two sides agreed they would not close the merger until the earlier of 5 days, until after a ruling in the case, or June 1st. That's according to a court filing in the lawsuit by the state of California and other states seeking to stop the deal. Now, this pause is going to wind up to be very expensive for Paramount, which had agreed to pay roughly $7 million per day to Warner Brothers shareholders beginning October 1st until the deal is closed. Paramount Skydance shares today down by 3.3%. Traders sent stocks wavering at the end of a jittery week, a drop in oil prices and signs of strength in corporate America's profit machine, offsetting a sell-off in chip makers. The stocks today, Philadelphia Stock Exchange Semiconductor Index down today by 4.2%. S&P eked out a gain of under 0.1%, wrapping up the week, heading into the weekend at 7,411. Now, for the week, we did see the S&P 500 index lower by 0.6%, down for a second consecutive week. The Dow today up by 0.5%. NASDAQ down 0.6. NASDAQ 100 down 1.1%. The Bloomberg Mag 7 index, little change, down under 0.1%. The 10-year 4.68%. The 2-year 4.33%. Gold also little changed, up 0.1% right now, $4,053 the ounce, and West Texas Intermediate crude back above 90.09 a barrel, down by 2.3%. Brent 97.81, down by 2.8%. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
Thanks for that update, Charlie. Charlie, you're going to want to swing by the studio in a few minutes because we're about to open some wine. So
No, it's not just that.
What?
This next entity was founded in London, England. And Charlie...
Yeah. Oh, and Charlie's British.
Yeah, I'll have a glass of wine.
But it was founded in 1698.
Yeah.
That's where it traces its roots back to.
Family run, British wine and spirits merchant. So talk about having some history and being around for a long time. They have seen, to say the least, a lot of wine, a lot of beverages probably.
We're talking about Berry Brothers and Rudd. Claudia Chamberlain joins us now, advanced sommelier and U.S. general manager at Berry Brothers and Rudd. She joins us from Washington, D.C. Claudia, welcome, welcome. Before we get to the wine, give us a little history of this establishment that goes back centuries.
Yes, absolutely. And thank you all so much for having me on this fine Friday afternoon. So we are a heritage British fine wine and spirits merchant. As you said, we've been around since 1698, but we just opened our doors in the U.S. this past November. So we have a physical store that's at Farragut Square in Washington, D.C., and then an online service. And then we specialize in something that we call private client advisory services.
Well, a couple questions. Why the U.S.? Why now?
Yeah, so I think that's a great question. The U.S. has been for the longest time one of the biggest consumers in the world, and that data just continues to point us in the direction of a lot of Americans are really interested in fine wine. And so Berry Brothers, having been around since the end of the 1600s, they have quite a big database of clientele around the world. And so they've had a number of American clients for a long time. And we decided to make it a bit easier to access the services by opening up our doors in the U.S.
So for people listening right now who may not consider fine wine an alternative asset class yet at this point in their financial journey, the folks who you advise when it comes to the private client service that you offer, what do you advise them on? What do you tell them about? What do you educate them on?
Yeah, I think, it's a number of different things because it's really a one-on-one conversation around whatever it is that they're interested in. So it could be that they are new on their fine wine drinking journey. It could be that they're an established collector. So maybe they want to talk through different types of white wines that they're interested in. Maybe they have questions about different vintages, questions about how long to lay a wine down for, questions about how to serve a wine, how to pair a wine, all of those types of things. So it's really about meeting the client where they're at and giving them advice on how to drink better and also have a lot of fun while doing it.
So is it all about drinking better and being smart and understanding? Is it also about wine collecting? We've done so much reporting here at Bloomberg, and I'm just reading from a story that we've done over the last year. Passionate collectors buy wines they love and plan to drink, yes, but to invest, you have to select the right ones at the right price at the right time. If you have access to buy in the first place and have them maintain their value. How many people are looking to buy, put them on a shelf, in a cellar, let them sit for a while and rise in value to either drink later or to maybe even sell?
Yeah, I think it's again, it's a mix. So our
Okay.
clientele is from all walks of life, truly. And so there are people that are looking for something that they're going to be drinking this weekend that they're sharing with friends. And then there are people who are looking to grab a case of their daughter's birth year wines to hang on to for a while. So we see all different kinds of things. I would say that in general, the American consumer is very focused on the act of consumption and the act of how to drink something in its perfect drinking window and how to find the thing that they can open more in the immediate versus hanging on to it for a long amount of time.
Carol wants to start drinking soon, but I have some more questions.
No, but keep going, because no, but I mean, I am learning as I go and have been still. So, like, how do you figure out, like, when's the perfect time to drink it, or what you need to do, or what you should be looking for? I mean, this is what you do.
Yes.
Yeah.
Exactly. It is up to personal preference. So if you prefer something that is really vivacious and fresh and sort of bright and acidic, then you're probably going to lean more on the younger vintages of things, or maybe the cooler vintages from the different growing regions around the world. Versus if you love something that is a little bit more broken in, like fine leather, right? Then maybe you're going to opt for something that's a bit more mature. So it totally depends. It also depends on what you're eating, how you're feeling, what the temperature is outside. So the type of thing is we have a range that can apply to any of those situations. And I would argue that there's a case for all of those types of things. It really comes down to how you like your wine and how you want to be enjoying it in that moment.
Claudia, I know there's a lot of spending power in the Washington, D.C. area, but there's also a lot of spending power in New York, L.A., San Francisco, Miami. Why Washington, D.C. as your first U.S. location?
That's a great question. So I think, as a heritage British merchant, it made a lot of sense for us to settle down our first flagship store in the nation's capital for our first foray into the US. But also, DC is, as you've just mentioned, there are some of the wealthiest counties in the US that are right here in our backyard. It's a super transient city, so people are always coming and going. It has a very high sort of engagement wine scene. And so there's a really incredible network of fine dining and wine bars and different sommelier sort of centric groups. And so it felt like a natural place for us to springboard from. There's also direct flights to most of the US. And with our online business and our different offerings, we do cater to clients in 46 different states as well.
All right, so you were kind enough to share some wine with us so that we can kind of work our way through. Should we start with the white or the red?
I think let's start with the white.
Okay, so tell us what you sent to us. I'm not going to go and pronounce it because I'm always bad with this.
Didn't you take French? No, you took Spanish, right?
No.
You took Spanish?
I took muchos años de español. So go ahead. So
Very good.
Tell us about
Very
this
good.
white that you shared with us. And I'm going to actually open it up and...
Oh, let's hear it.
Absolutely. I'm honestly so jealous. We should have had some here in the office for this too. So you are drinking the 2023 Domaine de Cassiope Les Moranges. So it is a Chardonnay coming from Burgundy. And we chose this one to show to you because it really heralds, while we specialize in the iconic wines of the world and the really well-known producers, we also prize ourselves in being able to take our customers on a journey and being able to open their eyes to the new wave of what's going to be collectible and what's really cool. And so this is one of those producers that is really allocated. It's a new grower in Burgundy. They've trained under some of the very best. And the wine itself is very vibrant and I think savory in a really nice way that has to be a perfect pairing for your Friday afternoon.
That's nice. That's actually really nice and kind of soft. I'm not a huge white wine drinker. The audience probably knows, but this is nice. And it's so funny. Like I do this and I'm like, why don't I drink white wine? Because it's really, really lovely. Do you find are drinking more white wine in the summer because of the heat? Because I kind of drink red wine no matter what. But I'm just wonder, do you really see that uptick when it's warmer out there, especially with some of the heat waves that we've been having globally?
You certainly do. I would say champagne in particular is very in vogue at the moment, just given how warm it's been in the summer in the East Coast in particular. We've seen a huge spike in champagne sales. White Burgundy, which is the glass of what you're having, is absolutely incredible at this time of year. Sancerre continues to be something people really reach for as it gets warmer, and also rosé. So we do see an uptick in white wine sales, but I think in general, we specialize in mostly French and Italian wines. And so we still have a very healthy base of sales of red wines during this time as well. So with the red wine category, you can put some of the lighter ones. Some people will sometimes put a little bit of a chill on it. So leave it in the fridge for 20 to 30 minutes before you serve it. And that's the way to sort of get the best of both worlds if you're more of a red wine drinker.
Well, let's go to the red.
Please.
Yeah, you sent us a Chateau Langlois Barton Saint-Julien.
Oh, stop shying.
Excellent.
No, that wasn't very good, but thank you. I actually was told by my French teacher to take another language. In all seriousness.
All right, so let's
After
open
1
up.
year.
Well, you're doing
I'm
great.
opening this. Thank you.
Yeah, it sounds like you speak wine just fine. So yes, this is the 2009, which is an exceptional vintage coming from Bordeaux. And so we chose this one to show you all because it highlights our provenance. And so when we say provenance, it means that because we are the oldest wine and spirits merchant from the UK, we have relationships that span decades. And so with those relationships, you get incredible access to the top producers of the world, to special library offerings, to large formats, to more bespoke offerings that don't necessarily reach a wider audience. And so we felt that the 2009 Chateau Langlois Barton was really exemplary for that reason. So this is a family that's been around since 1821. And so they're one of the more iconic families of Bordeaux, and they own a number of different properties, but this is their third growth in Saint-Julien. So this is going to be a red blend. All Bordeaux is a blend typically of Cabernet Sauvignon and Merlot. This one comes from the left bank. So you're going to look at a base of around 50 to 60% Cabernet Sauvignon, depending on the vintage. And then you've got some Merlot, some Cabernet Franc, and some Petit Verdot to make up the rest of it.
It's nice. It's easy, right? It's an easy wine, and I could see it. It's very, very nice. I love that it's of Irish descent. I don't know that we talk about that a lot of wines with kind of an Irish heritage, right?
Yeah. We really don't. And honestly, it is a unique thing of the Barton family. And we were lucky enough to have Lillian Barton visit us this past January. And no Irish accent there, but she is absolutely fabulous. So they're doing a great job in Bordeaux.
We just have 30 seconds left here. We're not going to open it up because
we don't want to get hurt.
We don't want to get hurt. It's a champagne. It's a little warm, so we want to be careful. But tell us about what you sent here as well. Champagne has had such a big comeback over the last few years. Just got about 30 seconds. Forgive me.
Yep. So this is it's our own label. So we showed this one to you because we have a label of our own range. And so we partner with some of those producers we've had relationships with for a long time. This is a Grand Cru champagne, and it retails for $44.95, which is a really great value for a champagne, especially of Grand Cru quality. So it shows you sort of the level of tiering that we have within the range. But also, this is our #1 bestseller.
Wow, I love that. Well, next time come in studio and we'll celebrate with you. It's been quite a week. Thank you so much. A great way for us to wrap up here. Claudia Chamberlain, she is Advanced Sommelier and U.S. General Manager at Berry Brothers and Rudd.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Paramount, Skydance, and Warner Brothers Discovery have agreed not to close their blockbuster $110 billion deal until June of 2027 unless the legal fight over the merger is resolved sooner. The pause will be expensive for Paramount, which had agreed to pay roughly $7 million a day to Warner Brothers shareholders beginning October 1st unless the deal is closed. Stocks moved higher today. Most stocks advanced in the S&P, up 3 points to 74.11. That was a gain today of under 0.1%. The Dow at 51,947 as we head into the weekend, up 235 points, up by about 0.5%. The NASDAQ Composite Index did move lower today by 0.6%. The NASDAQ 100 Index was down 1.1%, with the SOX, the Philadelphia Stock Exchange Semiconductor Index, dropping 4.2%. The VIX below 19, a 10-year at 4.67%, the 2-year 4.33%, and gold today up $4 the ounce, $4,054. That was a gain of 0.1%. Major move for crude, 90.31 where we stand right now on West Texas Intermediate, down 1.9%. Barrel of Brent below $100 at 98.15, down 2.5%. Well, right here on Bloomberg Business Week Daily, Eric Weiner, the Bloomberg News senior editor for Equities Americas, talked about the market backdrop ahead of key earnings next week from mega-cap tech names, including Amazon, Apple, and Meta Platforms.
If we have shifted into an area where we're questioning spending, where we used to applaud it, things get very, very different. And these earnings reports are going to report the same thing.
Bloomberg's Eric Weiner interviewed right here on Bloomberg Business Week Daily. Recapping, stocks higher, S&P up 3, wrapping up the week, heading into the weekend at 74.11. That was a gain of just under 0.1%. Carol and Tim, that's a Bloomberg Business Flash.
Hey, Charlie, thank you for that update. I promise we're having a little fun this afternoon. We did just have a little wine.
Yep.
With Claudia Chamberlain, Advanced Sommelier and U.S. General Manager over at Berry Brothers and Wine.
When I travel, you know what I like to do?
What do you like to do?
Or you know when
Drink some wine?
Yes.
Yeah, well, it's kind of how we ended up programming these guests together.
We had a plan.
So now we're talking about travel and some of the best places to go in the world where you can enjoy some of the best wine in the world.
I love this. Amanda Fraser is president of Standards and Ratings over at the Forbes Travel Guide. She joins us here in studio. Last time we talked to you from afar in Atlanta, so it's really lovely to have you here. How are you?
I'm really well. We were just talking about the heat wave. It's a little warm, right?
It is a little
beautiful here.
Is that impacting, though, people about where they want to go in terms of travel?
You know, I think it is. I mean, obviously people love to travel, especially during the summer. It's a really booming summer travel season. So we are seeing, you know, especially in luxury, it's very resilient no matter the market. So we're seeing a really strong summer travel season.
Remind everybody the way that the Forbes Forbes Travel Guide standards and ratings work, because we talked about this last time a little bit, but that was back in February. Not everybody who's tuning in right now.
It's my dream job, I think, to be
Mine too.
Right?
It's really cool.
Yes. So, you know, it's a really interesting process and probably a lot more detailed than a lot of people imagine. I think on the surface, it sounds great that you travel the world and you stay in fabulous hotels, but the work itself to curate the list that we publish every February with all the Star Award winners and restaurants and spas and ships, it's a lot of work. And, you know, we compose our own standards in collaboration with some industry experts. And we use that criteria to evaluate the properties day in, day out. The inspector's job is actually really hard. You know, after a meal, they're not going back and going to sleep. They're going back to their room and remembering their experience and how that service made them feel and typing that up and sending it in to us. And they're not the ones actually that even decide the rating. We have an algorithm.
Amanda, is it one person, though, who determines, like, or assesses a hotel or some kind of experience in the luxury space? Is it just one person, or do you do multiple visits?
So it's not one person in and of the visit, in that visit itself, that decides the outcome. So the outcome goes into our system, and it's the algorithm. And we place a heavy percentage of our algorithm onto service. So 70% of the overall experience that evaluator has is based on how those individual staff created an emotional connection.
Yeah, it's so hard, though, because it just shows that these places have to be so standardized when it comes to the experience, because you can have a great experience with one staff member, but have a terrible experience with somebody else.
Well, you bring up a really interesting point. I think the key to success, especially at that real high level of service, is really about consistency, and we're looking for that all the time. And we don't mean homogenizing and making it cookie cutter. We mean being consistent so the guest feels confident.
So where should everybody be going right now?
Well, I think at the end of the day, if you can travel and you have found the time, because our lives are increasingly busy, go anywhere. If you're going to go afar, there's some beautiful resorts as far as the Maldives that are really, doing a great job with the family travel trend and really leaning into the well-being and longevity. Or you can do that. You can find that much closer to home, Miami or Florida.
Where are people though going? Like, are they looking to go? I'm thinking about, let's just talk about folks from the U.S. I don't know how much you guys, in terms of breaking it down geography, are they leaving and they want to go overseas? Was it last year that was everybody going to Italy?
Italy's still a real hot spot. Italy, Europe in general. Greece is huge. Croatia is really
I know
popular.
Everybody's going to Croatia.
Montenegro is coming up. So some of these more far-flung destinations that maybe weren't top of your mind maybe a few years ago.
What about Japan?
Japan is amazing, and actually they've got some fantastic new hotels, and I think that is always an amazing destination to visit culturally as well.
You mentioned longevity, and we've been doing this for quite a while, and our Bloomberg Pursuits team does a great job of giving us information about places to go every single year and countries that are sort of off the beaten path and areas and resorts that are off the beaten path. But one thing that seems to change is what travelers at this end of the spectrum are looking for in terms of amenities. You mentioned longevity as one of those things. What else are you noticing pop up?
Yes, longevity and well-being is huge. That's a market that we're watching carefully because it's just taking off. The numbers are incredible. But genuinely, at the end of the day, what people are looking for is that emotional connection. So they're moving from caring as much about things and more thinking about the thoughtfulness that service is really making them feel connected to the brand or the hotel.
Service, food, and cleanliness. Like you know what I mean? Like, not necessarily in that order, but those are things that like kind of really make for, I think, a good experience, at least on my end. What are the...
You know what I really like?
Going on vacation.
Yes, going on vacation. But we actually, we went,
What?
we stayed at a resort last year in Sedona.
You talked about this
We
a
had
lot.
a great experience. And one of the things that I really liked was that the service was amazing, but there was a resort fee included, and they were specifically said there is no tipping. The tipping is completely taken care of, and this was really important because
of the resort fee.
Because of the resort fee, it's taken care of every day, and it really felt good because you couldn't park your car anywhere yourself. There was like a really complicated parking situation, so they had to use valets, and it's like, I hate going somewhere where you have to have a valet, right?
Yeah, anytime a property can take away friction from what the guest has to think, the less you make the guest think, the easier the experience is, and that's really what it is at the end of the day as well.
So what's the biggest booking mistakes that families make?
I think for us, honestly, really think about the destination first, because travel is such an emotional experience that you want to have, because you're trying to create a really hopefully happy memory with whoever you're traveling with. Think about how you want to feel from the end of your trip. What are you looking for the family or the people that are traveling with you? And then look at the hotel. And always look at a trusted system or a trusted travel advisor to really make sure that you're making yourself feel that you made a really smart investment in your trip.
I will say, when like our daughter was younger, we always thought about when traveling with her, like she still loved to swim. Like we had to make sure that there was a pool. Like there were things that we just knew that was our guiding principle, and then we figured out the rest around it.
If the kids are happy, then it makes the whole trip.
So if there's one place we should go, we just got about 30, 40 seconds.
If you're going to go really far, you were talking about kind of, long distance travel.
You had me peaked with the Maldives, but go ahead.
Yeah, there's a beautiful property in the Maldives that actually we just wrote about, Joali Being. Not only is it really forward with its efforts around longevity and well-being, but they do this amazing family program. So if you're wanting to do something, with your kids, it's an activity, they've got such interesting programming, and it's a really amazing destination, of course.
Daughter's 23. I don't care, but no. Can I go there as well with my husband, and then I'll be fun?
Definitely, always.
I'm not kidding. I love you, Aggie. I love you.
Amanda Frazier, president of Standards and Ratings at the Forbes Travel Guide. And like we said last time, if you're looking for any inspectors, maybe it's up to
Amanda wants to do it. I want to do it. I don't care if, right? Do you want to do it?
Yeah, I would do that.
I would totally do it. Thank you so much. Safe travels and have a good summer. All right, folks, when we come back, just a reminder of where we wrapped up on this Friday and for the week and some stocks on the move. You are listening and watching Bloomberg Business Week Daily. We're back in a moment.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, getting ready to wrap up on this Friday edition.
Is it time?
Is it time?
Is it time?
For what?
To wrap up.
Yes.
It's almost Joe Matthew.
Sorry.
Oh.
A little coughing there.
I said it's almost Joe Matthew time, which means it's almost time for a balance of power. 5 p.m. Wall Street time on Bloomberg Radio and Television. And
yes.
And
what?
Special coverage of rocket launch tonight from SpaceX starting at 6:45.
That's right. Let's not forget. They've been trying to get that going. What?
Bloomberg this weekend, tomorrow, 7 a.m.
Yes.
Wall Street time.
Yeah.
Do not miss it.
If that's not enough, check out our podcast feed. We have a great podcast feed that we're putting out on the weekend.
And we're going to talk about markets right now and how we closed out the day and the week.
All right, for the day, little bit higher on the S&P 500, about 3 points higher. So call it unchanged essentially on a percentage basis. Dow was up about 0.5%. NASDAQ 100 was down about 326 points, 1.1% to the downside. We keep reminding you all, though, that when you go inside the S&P 500, the majority of names actually gained today, 363 to be exact, 140 to the downside.
Yeah, for the week, the S&P 500 was down 0.6%. The NASDAQ Composite was down more than 2%. The Dow fell 0.4% this week.
Dow down now, S&P down 2 weeks in a row after we had, I think, a couple of weeks. So 2 weeks up, now 2 weeks down here. Is that right? Wait a minute. Yeah. Sorry. I'm looking at my... Avalon's like, yes, I know this. Move on.
We are down just about 2%, 2.6% from all-time highs that were reached at the beginning of June.
So NASDAQ 100.
7609 was the all-time high, and we're at 7411.
NASDAQ 100's given back a lot in the last couple of weeks. I would say about almost 6%.
Okay.
Yeah, okay. I'm Carol Master along with Tim Stanovic. Let's get to some stocks on the move. Back with us, Bloomberg News equities reporter Avalon Purnell. She is here with stocks on the move this past week. Supermicro.
Yes, that's ticker SMCI. It jumped 24% to finish out its best weekly jump since May. And that's after the server maker issued a business update that included raising its fourth quarter gross margins outlook and also saying that it's hit a record backlog. Still, worth noting that the business does now see revenue tracking towards the lower end of guidance. Still, KeyBank actually writing that they see this as a very positive note, especially given the fact that they're driving meaningfully better profitability and also potentially could see them regain a little bit more market share in this growing AI market.
Still down a lot from June 2nd. I was trying to do some quick math here. But
I'm going to let you keep doing the math.
Wait. I've got this handy dandy thing called the Bloomberg. It's down 40% since June 2nd. So even though we see, that 24% jump this week, it's still down a lot. Yeah, but we definitely talked about a bunch this week.
One company that had a pretty bad week, Tesla.
Yeah, ticker TSLA. It dropped 18% to close out its worst weekly drop since 2022. And that's after the electric car maker reported a second quarter profit that came in far below expectations. Morgan Stanley noting that while Tesla's accelerating CapEx is necessary to really cement them as a leader in robotics and automation, these investments are really pushing investors to focus on tangible milestones for robotaxi and Optimus. And also worth noting that given some of the breadcrumbs, other analysts kind of believe that maybe this is pointing towards them merging with SpaceX.
I like that you called it an electric vehicle maker.
I mean, that's how I grew to know about Tesla.
It's still the bulk of its business, right?
Exactly.
It is, but
and batteries, right? But really,
they would argue that that's not their future.
Yeah, and I mean that's what they're. That's Elon's way, always talking about the future, right? We've had some great. I would highly recommend check out also our podcast feed. We had some great conversations around Tesla earnings. Our own Keith Naughton, who's covered the auto industry for 40 years, some great perspective on what's happening in China right now and just kind of where Tesla's going in the future. Stock, by the way, you said down for the week, down about 30% year to date.
All right, what about some healthcare?
Healthcare, Tenet Healthcare has
This
to
is
bring something.
unexpected.
Ticker THC. It is very unexpected.
Right?
It jumped 20% to close out its best week in over a year. And that's after the hospital operator really shook off a lot of investor concerns by posting a beat and raise quarter that exceeded expectations practically across the board. Going into the print, a lot of investors were talking about these potential headwinds from patients potentially coming into the ER without health insurance, given the Affordable Care Act subsidies were not renewed at the start of the year. Instead, a lot of them were pointing to the fact that